it wasn't going to be you, because you
Thanks.
said you wouldn't tell us.
Oh, right.
If you won.
Yes, that's
so
true.
The only way I knew was that
A boy can dream, though. A boy can still dream. Even now, I still.
But I did look at that. I thought,
yeah.
Andrew didn't win.
Thanks.
Sorry.
I knew that was high on your news headlines of the morning.
Well, you said you weren't going to tell us.
That's true.
And then I was like, okay, process of elimination. Pretty sure that's not him. Let's take a look at where things stand on this Monday morning. You'll see right now some green arrows across the board. Dow futures are up by about 90 points. NASDAQ futures are up by 95, and then you've got the S&P futures up by 17. If you check out what's been happening in the Treasury market, it looks like right now the 10-year is flat, 408. The 2 years at 350. You've got the 30-year at 477, so lower for both the 30 and the 2-year, 5-year, and actually the 10-year now just slightly higher. Crude oil has been picking up ever so slightly, at least that's where it was last I looked. Yeah, up by about 2%. The prospects of more sanctions on Russia contributing to some gains this morning. Yesterday, President Trump said that he's ready to impose further sanctions on Russia, although he did not elaborate when that might happen. Also over the weekend, OPEC Plus agreeing to further raise its oil output by next month, but it was by a lot less than the group has been increasing production over the last few months. I think it was 100,000 or 100,000 something barrels versus the 500,000 that it had been doing up to this point. So continuing to increase production to try and win market share, but dropping very substantially the amount that it's been raising that production by in recent meetings.
Meantime, Treasury Secretary Scott Bessent rejecting the idea that the U.S. is in a jobs recession. He spoke with NBC's Meet the Press following Friday's employment report showing just 22,000 jobs were created in August. Here's what he had to say.
We're not going to do economic policy off of one number. We believe that good policies are in place that are going to create good, high-paying jobs for the American people.
On President Trump's tariffs, Secretary Bessent saying he's confident the Supreme Court will uphold the levies. If not, he said the refunds that the U.S. would have to offer would be, in his words, terrible for the Treasury.
One of President Trump's potential picks to be the next Fed chair making a call for central bank independence. National Economic Council Director Kevin Hassett appearing on CBS's Face the Nation. He was asked about CBS polling showing a majority of Republicans want the Fed to be guided by what President Trump wants. Here's Hassett's response to that.
If I were in that survey, then I would say 100% that monetary policy, Federal Reserve monetary policy, needs to be fully independent of political influence.
Including
From President Trump.
Hassett noting countries in which leaders have taken over central banks have seen inflation and consumer hardship, and probably worth pointing out, the president said over the weekend that it's back to 3 people. You know, all of this sound and fury about who was going to be considered, all of these different interviews that were taking place. Bessent has taken himself out of the whole thing, but it's Kevin Warsh, Kevin Hassett, and Waller who are the 3 in the running for this.
I don't know if you saw in today's Wall Street Journal, Ken Griffin out with an op-ed publicly criticizing Trump. I mean, you talk about, it's actually the first time that I've seen a CEO criticize Trump as directly. I mean, we've always talked about, in the context, by the way, of Fed independence, just to read you what he said publicly criticizing the Fed, suggesting the dismissal of governors and pressuring the central bank to adopt a more permissive stance towards inflation carries steep costs, and goes on and on and on. But it's just interesting because we've talked about, this is something that most, I think, CEOs in America think is a problem, and yet there's been sort of almost a stunning silence for the most part from them directly. And so to see Ken out there today is pretty interesting. Meanwhile, if you actually...
He's generally supported Republicans, I believe.
He's actually such an interesting Republican because he's supported Republicans, and yet even once President Trump won, he was one of the few CEOs who said, there are things that he does that I don't like. So it's actually, it's been interesting. Kevin Hassett. I was also going to say Secretary Bessent out with his own paper over the weekend, or maybe on Friday, talking about how he thinks the Fed actually needs to narrow its mandate and shift what it actually does, which is a whole other story, because there's people at the Fed, of course, who think that it's important that they have these regulatory functions and other component
He
parts.
has spoken out about that, I think even on this show, the Treasury Secretary, when he's been on in the past, the idea that he would like to narrow the mandate. He talked about it, I believe, in the last month or so on our show, maybe the last 6 weeks, where he doesn't want them to get involved in some of the things that he thinks are pretty far afield from the two mandates that the Fed actually holds. So kind of crystallizing what he hinted at a lot.
I should tell you, I went to tennis yesterday, but interestingly, Besant was in the box with Trump, who was in the box with Bondi, but sitting next to Besant, Yasser from Saudi.
Okay.
Sort of an interesting watch for everybody. Meantime,
Eyes straight on that for.
I think there were people focused on all different parts of the match. South Korea saying its foreign ministry is scheduled to leave for the U.S. to bring workers detained in an immigrant raid in Georgia back home. That's according to a message from the country's foreign ministry sent to NBC News. U.S. immigration authorities detained nearly 500 people at the Hyundai site in Georgia late last week, most of them South Korean nationals. Yesterday on CNN, White House border czar Tom Homan said the Trump administration plans to target more businesses for immigration enforcement. On Truth Social late last night, President Trump telling foreign companies to respect U.S. immigration laws. He said, "Your investments are welcome, and we encourage you to legally bring your very smart people with great technical talent to build world-class products, and we will make it quickly and legally possible for you to do so. What we ask in return is that you hire and train American workers."
Yeah, it's really interesting here because this is a major investment that they're making. But the whole point of wanting that investment here is to get American workers new jobs and training that comes along with it. Particularly interesting. It was a surprise when we saw this on Friday, so we'll see how this continues to play out. In the meantime, Japan's benchmark Nikkei index rising today following the announcement from the country's prime minister that he would resign. That comes amid tension within his own political party, and it follows his national election defeat late last year. In comments translated by NBC News, the prime minister said that he believed now is the right time to step aside following the conclusion of negotiations with the United States on tariffs.
And President Donald Trump spent his Sunday, as we just mentioned, at the U.S. Open in New York. He was greeted with a mixed reaction. The crowd, some of which was applauding loudly, and others were booing. The crowd as he stepped out of the president's box before the match. Many seats in the stadium were empty at the time due to enhanced security checks. This happened. There was two times he sort of that there was sort of cheers and other things going on. There were a lot of security checks. It delayed the game by half an hour. I was in the line as well. There was a lot of security. Trump joined by a few other notable people at Arthur Ashe, including, as we mentioned earlier, we'll go through this list here. Attorney General Pam Bondi, and then his press secretary, Jared Kushner, of course, there. His daughter sharing the president's game box, and Special Envoy Steve Witkoff seen sitting next to the president. Notably, the president was in the box of Swiss giant Rolex. The Trump administration hit Switzerland with some of the biggest of the worldwide tariffs that we imagine. There might have been some fees around tariffs in that box going on, but they did bring out the trophy. We didn't really, I don't think we said that Besant was there, but as I said, if we panned a little farther over, Yasser sat next to Scott the whole time, and there were a whole bunch of Wall Street folks who I think were clocking that. Maybe you can see it in the Yasser's in the sort of tan
out so far,
jacket. Now you're not going to be able to see exactly. Oh, it's the shot's too tight.
Yeah.
The shot's too tight there. But by the way, putting aside this piece of it, it was a hell of a match. It really was. And by the way, the president stayed to the bitter end and watched the ceremony at the end and everything else, and stood the entire time.
That's good, because it would have caused a real interruption had he left mid.
And there had been these reports that the Tennis Association had told ABC that if there's booing of the president, you're not to air it, or this or that. I don't know about any of that. There was a bunch of times. The first time he came out, and maybe there were less people in the stadium, you did hear apparently there was some booing, but there was another period of time where he seemed to step out, and it was it was very loud. So I think there were some people who were cheering him. There were some people right below him that seemed to be very excited.
Which, by the way, it's generally
And
a
then-
pretty quiet place too. You can hear just about anything that happens there, even when somebody makes a comment because of the way the
Oh,
stadium's
yes,
set.
no,
You
this
can
was
hear a
what,
lot.
no, but this would be like when the whole place
Whole place
erupted
erupts,
one way
yeah.
or the other, and I don't think you could get a full,
I'm just
You're in
saying,
New
if
York.
somebody wanted to heckle, you could in a place like that when it
Yes.
was quiet. At some
yes, there
point.
wasn't, actually, that's true. So throughout the whole match, there was nobody like stopping, screaming out, Trump, Trump, this or that.
You get kicked out immediately,
Right.
but you could have your moment if you wanted to, and that didn't happen.
Yeah.
All right, when we come back, FundStrat's Tom Lee will join us on the markets following Friday's week jobs report. Stay tuned, you're watching Squawk Box, and this is CNBC.
You're right. Awesome. Welcome back to Squawk Box. Take a look at the futures. Dow Jones up about 90 points. NASDAQ on this morning, Monday morning, up about 102 points. And the S&P 500 up about 17, 18 points. Joining us right now, Tom Lee, FundStrat Global Advisors, Head of Research. Good morning to you. Want you to weigh in, if you could, on this debate we've been having, or I should say the debate maybe the White House is having over these jobs numbers and what it portends for the economy and therefore what it portends for the Fed.
Well, we can see that from futures, jumped from roughly 2.3 cuts by the end of this year to almost 3. So on the heels of that jobs report, the bond market essentially is saying that the labor market is now deviating further from the Fed's target than inflation, and therefore justifying actually one additional cut. So I think that makes sense to me because we know inflation, and that August CPI gets reported this week, may be elevating, but that the markets are going to begin to view that as transitory. Whereas the weakness in the labor market, as you know, once it begins to weaken, it's very hard to reverse that momentum. So I think it's important for the Fed to intervene quickly.
And are you of the view 3 times this year, minimum?
Sense. To me, if I look at what the bond market's pricing, which is now essentially 3 cuts, and the Fed is talking about 2, the bond market is saying the Fed is behind in terms of how they're perceiving these changing conditions. And so I think on the 17th, when the FOMC makes its rate decision, I think there is a chance the Fed responds to that. And if it does, it's going to be good news because the bond market is going to take comfort from the Fed at recognizing the labor market's weakening.
Hey, Tom, even if the Fed cuts rates, it controls the short end but not the long end. What do you anticipate happens on the longer end, and what do you think happens to the mortgage market too as a result?
The long end is something to wonder about because we know globally, the 30-year especially has crept up. And we know that the Fed and other central banks have acknowledged that monetary policy has a lot of influence up until the 5-year. You know, the correlation is 90%. But once you get into the 10-year, the bond market is making its own decisions about growth. So that is something kind of troubling. But on the other hand, I think mortgage rates could come down sharply because the spread between the 30-year mortgage and the 10-year is over 300 basis points. The 50-year average is around 160. So the Fed, if it begins to resume cutting and the bond market views that as essentially an easing trend, the 30-year mortgage could drop 150 basis points if the 10-year doesn't even move. That's a lot of easing for the housing market.
That is a big deal, and I know you're not an economist, but you have to have a view on where you think the economy is headed. If we get these Fed cuts and the economy, doesn't take a steep leg down, despite what we've seen with the jobs market, that's one thing. But if we get these cuts and you're also dealing with a slowing economy, potentially even a recession down the road, I mean, that's a completely different story. You looking at these Fed cuts as for good reasons, because we can do it and get away with it and it's going to improve the economy, or you looking at this and thinking, yeah, I worry about what comes on the other side?
Yeah, I'm going to take the camp that I think that these cuts are actually going to be very constructive for the economy because the 30-year mortgage is strangulating the economy. We know housing has slowed dramatically, but we also know that there's a lot of pent-up demand for housing. So it's a market that does need to be fixed in terms of easing sort of supply-demand conditions. And we also know that ISM, which is a measure of business confidence, has been below 50 for 31 months. It's the longest stretch since the ISM's ever been created. So I think business confidence recovers if the Fed starts to cut. And so the combination of easing mortgage rates, business confidence recovery, I think is kind of a broadening cycle. And actually, I think that's why small caps have been the second best performing group after Mag 7 over the last 8 weeks.
Tom, one of the things that Scott Besson said was he thinks that the economy is actually in better shape than we think, and that the jobs numbers are going to get better. How does that factor into your thinking, or does it?
I think on the margin I'd agree with Treasury Secretary Besson's comments for 2 reasons. One, when we go through corporate earnings, we don't have any increase in comments from businesses saying business tapered off in July or August. So even though the labor market shows like it's deteriorated the last 2 months, business conditions happen. In fact, even the Fed's beige book, most regions reported improving conditions. So that is one thing. And the second is we know the labor market undergoes a lot of revisions and we get September's benchmark revisions. I think it may show that the job market's been weak all year. And in fact, maybe the last few months have actually been stable. So I think Treasury Secretary Besson is sort of correct to an extent.
Hey, Tom, Bitcoin, before we let you go, tell us what you think. We're at about $111,000. The upside, the downside from here?
Bitcoin and cryptocurrencies like Ethereum are super sensitive to monetary policy. So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter, so I think Bitcoin can easily get to 200,000 before year end. I know it's a big move, it's almost a double, but that's also going to
Almost
be
a double
tailwind
from
for-
here. Let's just, hold on, let's just take a quick pause. A double from here, so everybody's listening to this. We're at $111,000, and you think we, by Christmas time, effectively, we could be at 200,000?
That's right. One of the reasons Bitcoin stalled this year is the Fed's been on pause for 9 months. That pause all year, if you look at an easing cycle, that's only happened 2 other times, in 1998 and 2024, where the Fed began to resume cuts in the fourth quarter in September. Equities do really well. As you know, crypto is beta to equity, so I think it's going to be a very strong fourth quarter. Small caps should also rally, like IWM, but that also is really bullish for Ethereum, which is highly linked to small caps.
So you are seriously bullish into the end of the year at this point, given these rate cuts. You don't look at it as bad news is good news, but therefore the good news can't be that good situation.
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks. I think year to date the S&P is up 10%. As you know, when you look at a pretty good measure like AAII, net bulls less bears, it's been negative for 5 weeks. So at all-time highs, investors are bearish, and we find that skepticism among our institutional clients. So I think most are kind of bracing for a defensive view between September and year end. That's why I think that the stock market will surprise to the upside.
Tom Lee, from your lips, thanks so much. Appreciate it.
Thank you.
All right, still to come this morning, top Trump administration housing official Bill Pulte has been going after Fed Governor Lisa Cook for alleged mortgage misconduct. Now, a media report, says some members of Pulte's family may be in the same boat. We've got the details on that story after a break.
subscriptions.
Relatives of the Trump administration official who has accused Fed Governor Lisa Cook of mortgage fraud have reportedly themselves listed 2 properties in separate states as their primary residence. Reuters says that Mark and Julie Pulte, who are the father and stepmother of Federal Housing Finance Agency Director Bill Pulte, have claimed housing exemptions for homes in Michigan and Florida since 2020. That could save them thousands of dollars a year. Last week, ProPublica reported that at least 3 of the president's cabinet members call multiple homes their primary residences on mortgages. Bill Pulte has been leading a campaign against Fed Governor Lisa Cook for weeks over alleged mortgage fraud. President Trump fired Cook last month. She is currently fighting her termination, and that case is now in court. Probably worth pointing out that this is not a case, the Reuters story is not a case of mortgage fraud with the banks. This is a case where they were claiming homestead exemption claims, which are state-based claims. You can face fines and back pay and penalties that come up for something like this. It is not something that Bill Pulte at the FHFA would have any authority over because these are state violations. It's different than what he is accusing Lisa Cook of doing, which is, you could spend some time, I think, in prison with some of these mortgage fraud claims. Still, a lot of people looking and claiming second homes as their primary residence. It happens a lot, particularly in Washington, and there's definitely a spotlight on any activity like this at this point.
Lots more to think about. Coming up, more of today's top stories, including that big Powerball lottery win, and former FDA Commissioner Dr. Scott Gottlieb. He's going to join us on the turmoil in the government's healthcare bureaucracy. We've got a lot going on this morning. Come on back.
For 18.
5 things to know ahead of today's opening bell. Shares of Robinhood, AppLovin, and MCore Group all rising this morning. S&P Global saying companies will join the S&P 500 prior to the start of trading on September 22nd. So big congratulations to those 3 firms. Getting added into the index is a very, very big deal. Meantime,
It's hilarious. I own the S&P 500 because
Right.
that's all we can own. That
Yes.
and Comcast shares. So I now own AppLovin.
there you go.
I actually chuckled when I saw that last night.
Chip-making equipment giant ASML will reportedly become the top shareholder of French AI startup Mistral. Reuters saying that ASML will commit $1.3 billion from Mistral's roughly $2 billion fundraise and take a board seat. Meantime, OpenAI has raised its projected cash burn. You ready for this? $115 billion through 2029. That's according to a new report in The Information. It did not cite sources. The new forecast is $80 billion higher than the company had previously expected, and some investors who just got in at the new fundraising round, I think, may have been a bit surprised by that. And Warner Brothers horror sequel, The Conjuring: Last Rites, topping the weekend box office. It brought in $83 million in domestic box office sales in its first weekend, topping expectations. It added $104 million in ticket sales overseas, making it the highest grossing opening weekend for any of the 9 films in the Conjuring series, even after adjusting for inflation. And there were 2 winners in this past weekend's $1.8 billion Powerball jackpot. It's not either Becky or myself. The tickets were sold in Texas and Missouri. This was the 2nd largest Powerball jackpot ever, so they can split the money. I think if it's 1.8, you could take home in a lump sum. If you were collecting the whole thing, I thought it was like something like $600 million or something like that.
Idiot.
So now I assume if it's 2, you're
You
in
get
the sort of
300
$300 or $400
You really did really
million dollars.
More than that.
And then you have the taxes. You're down to $200 million.
Taxes would be even more, I would think. You pay at least half in taxes.
Right. Well, I was saying on the 400. If you had 400,
Oh,
if
if
you
you
were
had
paid
400,
$300 or
okay.
$400 million, now you're down to yes. So
Just $100 million.
just a tiny little violin.
Well, you know it wasn't me. I'm
Tiny.
here today.
Yeah.
When we come back, former FDA Commissioner Dr. Scott Gottlieb will join us on vaccines, staff turnover at the CDC, and the Trump administration, what we are seeing play out with RFK Jr. last week. We'll get his thoughts on all of this. Plus, a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back.
Let it go, Tonks, let's go. The other dog's coming. Yeah, I'm coming, I hear you, big. Let it go, Tonks, let's go. The other dog's coming. Yeah, I'm coming, I hear you, big. Let it go, Tonks, let's go. The other dog's coming. Let it go, Tonks, let's go. Yeah, the dog's coming.
Better.
All right, welcome back, everybody. Joining us right now to talk about what we're seeing in Washington, covering Health and Human Services, is Dr. Scott Gottlieb. He is the former FDA commissioner and a CNBC
Scott
contributor.
Gottlieb.
He's also an Illumina and Pfizer board member. And Dr. Gottlieb, I want to talk to you a little bit today about what we saw last week in the hearings with RFK Jr.
What'd you see?
This was interesting because there were a lot of Republican senators who are really raising questions about the tactics that he's taking at this point. I went through and was kind of watching some of these. Senator Barrasso from Wyoming is the second ranking Republican in the Senate. He's also a doctor, and here's what he had to say on this. He had some comments. In fact, let's listen in. Republican senators expressing some dismay at Senator Kennedy's words at last week's hearings in front of the Finance Committee. We've heard from Senators Barrasso and Tillis in the hearing, and in fact, here's what they both had to say.
Not either.
Secretary Kennedy, in your confirmation hearings, you promised to uphold the highest standards for vaccines. Since then, I've grown deeply concerned.
I do also believe that some of your statements seem to contradict what you said in the prior hearing. You said you're going to empower the scientists at HHS to do their job. I'd just like to see evidence where you've done that.
Senator Mike Rounds of South Dakota, for his part, told reporters, I'm telling my kids, I'm telling my family members and anybody who asks my opinion, get your vaccines. They have saved millions of lives. And when he was asked if he had second thoughts about voting to confirm Robert F. Kennedy Jr. as Health and Human Services Secretary, Rounds said, I think the president wanted him, and I think the president has to deal with him. That's a lot of voices, Dr. Gottlieb, who are now raising questions on the Republican side. And I just wonder how much tolerance the president you think will have for an agenda that may not necessarily reflect his own.
Yeah, look, I think the president seems to be supportive of Kennedy. I think what you're seeing on the Hill is mounting frustration around the moves on the pediatric vaccine schedule. I think a lot of people who had frustrations coming out of COVID about both the mandates as well as the disclosures of information around that vaccine, where people felt that the CDC was slow to surface certain information, wanted some kind of reckoning, but they didn't want a reckoning around the pediatric vaccine schedule, which is what RFK seems to be after right now. I think a lot of the policy steps he's taken is setting up an outcome where he's going to try to restrict access to the pediatric vaccines. You're seeing on the Hill, there's not a lot of tolerance for that. And you heard the president's comments as well, affirming the importance of that pediatric schedule.
The president's comments, I think you're referring to when he was talking about Florida, where there is a movement afoot to say that there are no more mandatory vaccines, including for kids going to school. The president himself said, and I'm just looking for this at this point, you have some vaccines that are so incredible. He said this at the White House when he was asked about that effort in Florida. And I think you have to be very careful when you say that some people don't have to be vaccinated. I think you're right. There were a lot of questions about the COVID vaccine, people wondering how safe, especially for kids. Some questions, just going back, this was something that was done in a rush. Can we ask some of those questions without upending every vaccine that we've ever developed and put forward?
Yeah, look, and the president's comments reflect my conversations with him. I had many opportunities to talk to the president about vaccines, probably 6 in all, which is a lot of conversations for an FDA commissioner to be having with the president. He had good questions. He had some furtive concerns. He wanted to make sure we were looking at the data. He wanted to make sure we have good systems in place to monitor the safety of vaccines. Some of his questions were around the purported link between autism and the MMR vaccine, because there was a lot of stuff in the press. But the president always affirmed the importance of the pediatric schedule, and a few times that he went out and spoke publicly about this forcefully, It was always to encourage people to get vaccinated. During the 2019 outbreak of measles in New York City in the Orthodox community, the president went out and said it was very important for children to get that vaccine. During the 2018 flu season, when we had a very bad flu season, he went out and tried to encourage senior citizens to get vaccinated. So the president was always supportive. He had good questions. They were the kind of questions you would encounter with, a parent. But they were not the kinds of questions we're seeing raised by Secretary Kennedy. And I think Kennedy's at odds with both the president's ethos around these things and certainly members of the Senate.
What questions is Kennedy raising that are different, you think, than what President Trump raised?
Well, it's not the questions he's raising, it's the instruments he's putting in place to start restricting access to vaccines, getting control of the ACIP committee at CDC. He's going to put on the next agenda the hepatitis B vaccine, we all know. He's looking at MMRV vaccine, trying to obviate use of the MMRV vaccine, which is measles, mumps, rubella, and varicella. I believe he's going to claim in his autism report that there's an association between alum, which is the adjuvant used in most pediatric vaccines, and autism, which is going to set in place a litigation enterprise against the vaccines to potentially bankrupt the vaccine injury compensation program. So that could take down the whole pediatric vaccine enterprise. And he's been very systematic, very methodical, frankly, very effective, putting in place the people and the tools he needs to try to effectuate this goal. Look, he is an avowed anti-vaxxer. He spent 2 decades doing this. Sometimes you have to take people at their word. I think this is a mission of his, and there really hasn't been a lot of pushback until now, and this is mostly rhetorical pushback. No one's really stopped him from implementing these instruments of control.
When you say bring down the entire pediatric vaccine schedule, what do you mean?
Well, look, if he makes a move to say that there is a purported link between alum and the entire pediatric schedule, that adjuvant used in about 10 vaccines is no good alternative. He could force the vaccine manufacturers to try to reformulate the vaccines, decouple them, so instead of having MMR, you have measles, mumps, and rubella separately. Remember, we're in a situation right now, we're seeing declining vaccination rates. Last year we had 35,000 cases of pertussis. The year before it was 5,000. This year we're expecting upwards of 75,000. So you're starting to see the vaccination rates declining, and you're starting to see the implications of that in terms of more disease. I think he's going to systematically go after, try to force manufacturers to reformulate and decouple some of these vaccines. One of the things they did in the COVID approval that was interesting was they contraindicated co-administration between the COVID vaccine and flu and RSV. And as you know, I'm on the board of Pfizer.
Right.
There's a lot of data showing that COVID could be safely administered with flu. In fact, the CDC website still recommends that. They created a new evidentiary standard they called substantial clinical benefit. They're saying you have to prove substantial clinical benefit in order to demonstrate that 2 vaccines can be co-administered. They did this in the context of COVID. If you extend this, not to an extreme, but just to sort of its logical next step, why wouldn't they call into question co-administration of the pediatric schedule and say you have to demonstrate that there's substantial benefit to co-administering these? If they did
There's
that,
a substantial benefit if you're a parent because you don't want your kid to get jabbed
Well,
4
right.
times instead of 1 for the MMRV.
a lot of what we do with the pediatric schedule is to try to conform with the practice of pediatrics, because you can only bring a baby back so many times for a well baby visit. If they start to decouple these things and force a lot of more interactions with the healthcare system, it's going to put pressure on vaccination rates overall. Right? You want to get them over with, but it's going to cause a lot of people not to get
Not
those
to get them at
vaccines.
all.
Yeah, they'll be lost to follow-up.
Scott, you bring up, you're on the board at Pfizer. Critics are going to say, oh, you're just saying this because you're defending Pfizer, defending their vaccine business. What's your response to that?
Well, look, a lot of what we're talking about here is not made by Pfizer. The only pediatric vaccine that Pfizer makes is the pneumonia vaccine. So if you look at alum, for example, it's in Hib, it's in meningitis, it's in hepatitis B, it's in a lot of other vaccines. It's not in that the Pfizer particular vaccines. Pfizer does make the COVID vaccine, but I think, frankly, we've kind of settled in an environment right now where that vaccine is largely going to be used by an older population. My biggest concern are the pediatric vaccines, MMR, pertussis, DTaP. That's what I think Kennedy's focusing on.
And for the Republicans who are raising questions, and again, it's also been Senator Cassidy from Louisiana, a Republican, who's a
Consistently,
doctor, and Barrasso, who is not only the second-ranking Republican in the Senate, but a doctor. With them raising questions, does that change the stakes?
I don't think it changes the stakes a whole lot, quite frankly. I think this really needs to be from the White House, and the question is, where is the president on a lot of these things? It certainly puts pressure on the secretary. I think potentially it slows them down a little bit, makes them think twice about doing things like firing the CDC director, things that are very visible. But a lot of what's happening that's going to be most impactful is the stuff underneath the radar. What I'm talking about now, the alum, and declaring that it's the cause of autism.
I was just going to ask, politically, do you think that RFK is going to remain in this job for the duration of Trump's term?
I think he's going to remain in the job as long as he wants, quite frankly. I don't see any real groundswell in the White House from what I'm hearing that RFK, is an albatross around the administration, needs to leave.
Except that I don't think that they like some of the vaccine, except that they seem to be at odds on some of the vaccine stuff a little bit, but maybe they're really not at
Yeah,
odds.
but so look at talc. So FDA held panels on talc trying to link talc to certain chronic diseases. They backed off that immediately because a lot of manufacturers went to the White House with concerns, and the White House, I think, encouraged RFK and others to back away from that. And it wasn't just the drug companies. These were cosmetic manufacturers. You could see situations where there's pressure to back off certain of these vectors. I think the vaccines, though, is so part and parcel to the Secretary's ethos. I have a hard time believing he's going to back away from there. And the other thing is that, that hearing was combative. But I think a lot of people go into hearings right now in this administration of the view that they do better when they're combative. I think he overreached a little. I think he overreached a little bit because I think showing disrespect, particularly to any member of Congress, but especially your own party, is risky. But that is the general posture of people who go before the Senate. Unfortunately, right now, that they feel that they need to be combative if they're going to be facing, a hostile hearing.
Okay, Dr. Gottlieb, thank you.
Thanks a lot.
Okay. We got some breaking news for you. EchoStar is selling certain Spectrum licenses to SpaceX for about $17 billion. As part of that deal, SpaceX will fund about $2 billion of cash interest payments towards EchoStar's debt. Two companies have entered into a long-term agreement to enable EchoStar's Boost mobile subscribers to access SpaceX's next-generation Starlink direct-to-cell service. The COO of SpaceX says the deal will advance its mission to end mobile dead zones around the world, and EchoStar says it expects this transaction to resolve the FTC's inquiries that it had faced. The FCC had threatened to revoke some of those Spectrum licenses if EchoStar didn't meet compliance obligations to provide 5G service in the United States, and EchoStar shares soaring on the back of that news. I mean, that has been one of the most remarkable wild rides. I don't know if we can get that chart up there because you can see what happened not just today, but even over the last. There it is. I mean, look. We were under $33, 3 weeks ago, and now we're close to $100. It's really quite something. Meantime, shares of the big 3 U.S. mobile providers falling on the back of that news, of course, because there'll be now increased competition in the form of SpaceX. Coming up, Mike Allen, he's going to join us from Axios, talk about some of the reporting on President Biden's use of pardons at the end of his term in office. We'll discuss that and so much more about what's happening in Washington right now after this.
All this week, we are celebrating the 30th anniversary of Squawk Box, and we're going to start this morning with a look back at the very first show. It was a mission statement from the late, great Mark Haynes, and it's a mission that we try and uphold here every morning.
This is Squawk Box, a program like none you've ever seen before. Our goal is to give you an edge as Wall Street begins the market day. We'll take you behind the scenes on Wall Street as major traders stake out their positions. We'll take you live to the floor of the New York Stock Exchange.
Again, that is the late, great Mark Haynes. That was the very first Squawk Box. We are celebrating our 30th anniversary this week, although I think they actually launched in August, so we're just past 30 years
a little bit
at this point. Mark laid it out from the very get-go. We try and do things differently here. This is a program where things are unscripted. We're looking for news to break.
Very unscripted. There is no script, folks. People think that there's a script. Sometimes.
There's a rough script. We rarely follow it, but there is a rough script there. But again, this is 30 years in the making now. And that first show, that was, Joe Kernan, and who's been here through the entire thing.
Yep.
He's not here today, but he's been here through the entire part for this. David Faber on the show back then. You think
the brain.
The people who have gone through the program, from Maria Bartiromo to Carl Quintanilla. And here we are today.
Here we are.
But
here we are
we're going to be
30 years
celebrating
later.
all of this week, bringing back a lot of big guests, and just trying to stay true to that mission that's always been here, that we follow the news, we ask the questions, and we're on the fly, kind of running with things. And I thought our music was bad now.
Well, that's what, I don't know if people heard you. You said, I thought our opening now was cheesy. This is a little bit different, but
We've come a long way.
It's all good. It's an amazing thing, and it's a privilege to be
It is.
part of something that has now been around for 30
Music
years.
again.
There it is.
Dance to it.
You can dance to it. There you go.
All right, when we come back, President Biden has faced criticism from President Trump over his presidential pardons and the use of an auto pen. But a new Axios report says that high-ranking Biden administration officials also questioned and criticized those decisions. Mike Allen will join us for more on this right after the break.
subscriptions.
Internal emails from the Biden administration obtained by Axios show high-ranking officials repeatedly questioned how the president decided on controversial pardons and his usage of the auto pen. Joining us right now with more on the story is Axios co-founder Mike Allen. And Mike, this was a particularly interesting read over the weekend. This is something that Republicans have harped on, President Trump has harped on for quite a while, the use of the auto pen. And I have to admit, I wrote a lot of it off thinking, okay, all presidents use auto pens. Your story over the weekend revealed how much more frequently the auto pen was used here. This was a situation where 4,245 people were granted clemency under the Biden administration, more than any other president in U.S. history. And more than 95% of those actions took place just in the last 3.5 months of his presidency. What did you find that you thought was the most important thing to highlight here?
Yeah, Becky, this reporting by Alex Thompson takes you behind the scenes almost in cinematic detail in those final days of the Biden administration. But Becky, first, happy Squawkiversary. And I see on that clip you started as the Squawk Box, like the Facebook or the Axios.
The Facebook, you're right. You're right, Mike. I hadn't thought of that. But yes,
So,
we all evolve.
So Becky, this reporting by Alex Thompson is a sequel to the bestseller that he and Jake Tapper did, Original Sin, and it shows the chaos of the final days of the Biden administration as there was this mad dash to pardon groups of people. The inner circle of President Biden, desperate to issue a bunch of pardons. He wound up issuing clemency to more people than any president in history. Why was this? On December 1st, in the final days of the presidency, they pardoned Hunter Biden. He got in the backlash for that. So they were looking for other people to pardon. And Becky, many of these people, according to emails unearthed by Axios' Alex Thompson, were not vetted by DOJ. In fact, there were lawyers at DOJ, many of them career, some of them even Biden appointee lawyers, who were appalled at the process that went into some of these acts of clemency. That there were cases the White House said were nonviolent, when that was not true. There was a cavalier approach to this. Now, President Biden said in the interview with the New York Times, I approved each one of these that was done, many of them done with the auto pen. But House Republicans are looking at this, and what's next? The former White House Chief of Staff, Jeff Zients, is going to be asked about the use of the auto pen, and including his own emails, some signed "Thanks Jay-Z" by House Republicans next week.
One of the ones that jumped out the most to me, probably the one that bothered me the most, was on January 17th, just 3 days before leaving office, Biden granted 2,490 commutations, the most ever by a president in a single day. He said that they were for people who had been convicted of nonviolent drug offenses who are serving disproportionately long sentences. Your Axios' reporting found that a Justice Department ethics attorney, Bradley Weinsheimer, penned a scathing memo the next day saying this was untrue or at least misleading, and he listed some of those with violent crime records to whom Biden had given clemency, including a man who had pleaded guilty to charges related to murder after killing a woman and her 2-year-old daughter after the mother threatened to reveal his drug dealing business to law enforcement. That does not sound like the type of thing where every one of these were actually looked into, and if they were, that should have never happened.
No, Becky, that's exactly right. And by the numbers, those record acts of clemency, 95% of those were in the last 3.5 months of the Biden term. Now, as you know, you covered lots of presidents. There always is that rush. But here was a case where the president's own Justice Department was saying, wait a minute, who is signing off on this? Who is approving this? No, these are not nonviolent cases. And that's what Republicans are going to be digging into. And of course, the Trump White House has made the auto pen a thing. You're right, all presidents have used them, but they were more traditionally used for greetings and ceremonial occasions. And in this case, many of them were used in final acts, big acts that now are being rethought.
What do you think happens in these hearings next week? Is this a lot of sound and fury? Do you think that there's anything significant that will come out of it? Do you think the auto pen is eventually done away with?
I don't, but you're going to see President Trump make a big deal about him personally signing things. And in fact, you see that a lot on camera. You see him signing things and holding it up. That's all part of the showman in him, trying to draw the contrast with President Biden and the use of the auto pen. And Becky, I'll just tee up one other big Washington story for you this week. The president posted about this on Truth Social last night, but this could be a big issue this week. There's arrests in Georgia of South Korean nationals working at a Hyundai battery plant. And companies are going to say the administration is trying to get companies to come to the U.S. And now we see South Korean nationals in chains on TV. The president posted about this last night. He's trying to get ahead of this. He can see what's coming from other countries. And he says, we want other countries to invest in the U.S., but he said, do it safely, do it legally, use American workers, and we will make it possible for you to quickly and legally
we want them
do it.
to invest here because we want them to create jobs in America. I mean, it's a bit of a catch-22 if you're bringing the jobs here, but they're not going to Americans. That's an issue too.
That's right.
Isn't part of what? But Mike, isn't what's happening here? And I could be wrong, and we got to find out the specifics. Oftentimes, when a foreign company starts or is building a factory or doing or changing a line or whatever, they bring some of their employees and folks from their companies over as part of that.
Yeah,
They want to hire people.
It's an EV battery pack.
But that's what happens because they say to themselves, we know these people, they're experts in the thing. We want them over here to at least maybe train the Americans even on how to do it.
Yeah, that's the practicality part of it, and that's one of the reasons this is a big story this week. This is part of the administration having to say, like, you've promised a golden age of America. We see the stats on your show on hiring, on jobs, on inflation. What is the plan? Like, how do you get to that golden age? And that's something the president can be asked a lot about. Every cabinet member is going to be asked about a lot. Yesterday on NBC's Meet the Press, Treasury Secretary Scott Bessent saying, wait for Q4. President Trump said, wait for next year. So this is something they're going to be pushed on a lot.
Right.
What are we waiting for? Is it going to happen? What's the plan?
And one last other one, because you talked to a lot of CEOs. Most CEOs, some of whom privately may very well be critical of the president. We were talking last week about that big meeting with the president where all the tech CEOs went around in a circle praising the president. Today, and I think this may be a first, Ken Griffin out with an op-ed in the Wall Street Journal, effectively criticizing out loud the president and his approach towards the Federal Reserve, suggesting he may be undermining its independence. Is this the first instance of something like that?
I mean, Andrew, you know better than anyone that Ken Griffin has a unique platform and is able to speak his mind in a way that most CEOs are not. I can tell you that most CEOs that you and I talk to behind the scenes, very concerned about the president and know how transactional the president is, know that the president sees and hears everything, knows all the issues that they're going to have coming to Washington. And so, like, many CEOs are still trying to keep their heads down and trying to engage with this White House. And this is something that's changed, is that's a little bit of the merging of New York and Washington, New York and Silicon Valley, that all these companies want to be seen engaging with the White House, want to talk to the president, and something they praise the White House for is the president talks to them at all hours in a way that past presidents have not.
Mike Allen, I want to thank you. Appreciate it. It's great to see you.
Sorry about that lottery loss.
Well, we're all suffering. We're all suffering here, except for two people who captured that $1.8 billion. Meantime, it is now past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, the big loser in last night's lottery, along with Becky Quick. She's not telling us whether she is one of the winners. Joe is off today, which may suggest that he actually is the winner, and that may be the end. Maybe he was in Missouri or Texas over the weekend picking up a ticket.
It could be the Fed's worst nightmare, stagflation, and it may be just starting to emerge. Steve Leisman is here with how that scenario could impact the Fed's rate path. Steve, good morning.
Morning, Becky. Wall Street got the stag part of the stagflation scenario with a weak jobs report on Friday. Question is, this week, if they'll get the inflation part. An outsized increase in prices could give some Fed members pause in cutting rates. Maybe not in September, but down the road. Here's the inflation calendar. New York Fed inflation expectations, we get those today. Tomorrow we're going to get a big benchmark payroll revision, probably downward. I've seen numbers as big as 800,000. Producer prices on Wednesday, and then consumer prices, CPI, on Thursday. August core consumer inflation, which takes out food and energy, forecast to come in at 3.1%, the same level as July, could keep the Fed's preferred inflation indicator about a percentage point above its 2% target. So weak job growth expected to keep the Fed's focus on the employment side of the mandate. Most Fed officials saying they anticipate tariffs will be one-time price increases. Soft growth could put downward pressure on non-tariffed goods. But take a look here. The concern among some officials, service inflation, ex-housing, it rose in July for the fourth straight month. So that raises concerns about a wider inflation problem because tariffs, they're not subject, services are not subject to tariffs, but some forecasters see a reversal in August of the July gain. That would be welcome. Futures market in the wake of the August jobs report fully priced for 3 consecutive rate cuts at the Fed's 3 meetings this year, with even a 10% probability of a 50 in September. So they are not looking over their shoulder at the coming inflation numbers. While the September cut probably not in danger here, barring a huge upside inflation surprise, Fed officials have suggested they may need to stay somewhat restrictive as long as inflation remains above target. That could limit over time the amount of rate cuts this year unless inflation tops out, starts heading downward. As you know, Becky and Andrew, the lottery is a tax on people who are bad at math.
Yes.
I know.
But you're saying it politely. It's a tax on the stupid, as Joe would say, and my father.
And me. I'm willing to pay $1 to dream. I just want you to know that, and it's better for me.
But here's the thing:
I know
if
you
you
can
don't
dream
play,
for free.
you can't
I know you
lose,
can dream
Andrew.
for free. But it
You
ups
can't
the stakes
lose
of
if
the
you don't
dream.
play.
That's true.
Steve, we had Tom Lee on this morning, and he kind of weighed in on this. Just the idea that he's thinking things are going to be pretty good for the market because he doesn't think we'll see a downturn in the economy. That the Fed cuts, when they cut rates, it will actually be stimulative to the economy and stem that off.
So
Stag part.
I guess you got to pick a kind of forecast and go with it in the sense that the administration, Scott Bessent over the weekend said, look, the fourth quarter we're going to see the growth. They're talking about this transition from an economy that they think was not in good shape to one that's in better shape. There's another side to this, which is that you put these big tariffs on, you start picking industry winners, you undermine essentially the free market in a lot of ways. I mean, if you read the memorandum with Japan, it's like there's a committee that's going to pick Japanese investments into the United States. So that is a longer term issue, undermining the independence of the Fed, those sorts of things. Maybe you don't get back to the growth rate that you thought you had, or maybe you do have this incredible blooming of domestic manufacturing. I think Tom is upbeat. I think Tom is more upbeat in part because he thinks companies will make money in any event. That may or may not be true of the broader growth of the U.S. economy.
Okay. Steve, thank you. And we did know Tom's not an economist. He's just playing the market odds on some of these things, too.
Okay, coming up, living in Sam Altman's world, the biometric ID company that uses orbs to scan your eyes to make crypto payments, it is going public. And Wedbush Securities' Dan Ives is connected to the project. He will join us with more on his latest gate. Plus, we're going to get his thoughts on Tesla and other tech companies in the headlines. Don't go anywhere. Squawk Box will be right back on this Monday morning. Welcome back to Squawk Box. Big news in the crypto world this morning. Sam Altman-backed company World will start trading on the NASDAQ on Thursday. The biometric company verifies identities using an eye scanning device called the Orb in exchange for cryptocurrency called WorldCoin. Joining us right now is Dan Ives, Wedbush Securities Global Head of Technology Research, a senior analyst. He's also now chairman of Aitco Holdings, which is the treasury company for World. So he's got a couple of different hats he's wearing this morning. Dan, for those who don't understand all of this, and maybe even thinking to themselves, is their eye scan going to be used in some kind of other crazy way? Explain it all for us.
Yeah, I mean, look, I'd say in this AI revolution, when you think about everything going on in terms of the trillions being spent, the biggest thing missing is identification, authentication. And, you know, what Sam and Alex and the team have built at World, when you think about these orbs, the iris scanning, in my opinion, this is going to be the de facto standard. When we think about separating from bots, identifying humans, and ultimately, this is really more of an infrastructure play. It's really the intersection of AI and crypto. That's why I'm so excited, you know, taking this role as chairman, given my passion for AI and what I think the role that World's going to play.
So just so I understand it, I will. Is it a trade? I mean, some people say you trade. Explain it to us. I'm giving over my iris or whatever in exchange for currency. Is that how this works?
Yeah, essentially. But when you think about it from a security perspective, I believe it's the most secure platform there is in the world, relative to the zero knowledge trust and the way that this has actually been built. I've done the scans myself, and you think about today, 15 million have actually gone down this path, and I believe it's going to be on a path to 100 million and more, because in the future, in the world of AI, I think a ceiling ultimately on AI growth, when you think about all the LMs and all the trillions being spent in data centers, is going to be authentication, identification. And that's why we're so passionate, in terms of, this treasury, and really focused on World. It's everything Sam and the team has built, and that's why I'm here.
Dan, explain this. I always thought that if there was a product like this that would win the day, that either Apple or maybe Google or somebody else like that could win, in the context of, I've got my camera on my phone, I've got LiDAR on the phone, all of the other, I don't know if I have LiDAR on the phone, but I have, they can do different things to capture things on my face. I would have thought that would win, no?
Yeah, I think in the past, yes, but in the future, no. And I think Sam and the team, they saw the future, because as we go toward robots and you go toward more and more bots, especially in this AI world, that's something that the only true way in terms of identification, authentication is going to be iris scan. Now, I believe more and more tech platforms are ultimately going to adopt this, and that's why we're doing this now. Because this is still, I kind of view where this is almost where NVIDIA was in 2022, Palantir 2022, relative to as we go into this authentication layer of AI. And that's why I'm just so excited, as someone that's so passionate as a tech analyst, this intersection of AI and crypto.
One other thing, and then I want to talk about Tesla and some other issues that are in the headlines this morning. In terms of security, everyone thinks their fingerprint is very valuable, and everyone thinks their iris print is very valuable. What's the chance, and what are if you were to look out in your crystal ball or your orb and say, what is the real risk here? It is what?
I mean, I'd say it's basically zero, close to zero, relative to just when you look at the crypto nature and the blockchain and the way that they've actually structured the orb and the product and the iris scan. And that's why I would believe it's actually the safest one out there. And in the future of AI, this is going to become the de facto standard when it comes to identification. I think they skated to where the puck's going. Now you're going to see more and more signing up for this, and then it creates a network effect. And that's why we're so excited in terms of making this bet on World.
Okay, Dan, separately, let's talk Tesla, because you and I have talked Tesla a lot. So curious what your reaction was to this package that Robin Denholm talked to us about on Friday on the broadcast. Obviously, Elon Musk, if he hits all of these metrics, could be paid as much as $1 trillion.
the most important asset for Tesla is Musk. And the reality is, in this AI world, you know, Elon staying on and happy is so important in this autonomous and robotics world. And I believe it's exactly what investors wanted to hear. I ultimately believe now that path toward XAI in terms of more and more ownership, as well as ultimately getting to 25% voting control. Because I think for Musk, it comes down to the trillions that he's going to create over the future. I think this is a no-brainer move of the board.
What do you make of those who critique this and say, you know what, he's as incentivized as anyone. He's at the company, he has a huge stake in the company, he's the face of the company, he's not going to leave the company, he's not going to, not focus on this company. What do you think of that?
Yeah, look, I understand that, but I think the reality is that, Elon's thinking about the future when it comes to XAI, when it comes to autonomous, when it comes to Optimus, and he needs to make sure that he has control of that wheel. Of course, there's the financial incentive, but I think more and more it's really also about the voting control as that ramps up. And this is an AI arms race. And Robin, Tesla board know that they need Musk. Musk right now is wartime CEO when it comes to AI. And that's why I believe, look, autonomous alone is worth $1 trillion. And as we all had, just like what we're talking about with Altman, this arms race, Tesla needs Musk. And I think Musk needs Tesla.
But Dan, very quickly, you don't think the goals that he has to hit are crazy then? If you think autonomous alone is worth $1 trillion, if you wrap in AI on that, these seem like potentially achievable goals if he can deliver on all of it.
Mm-hmm. Yeah, Becca, I'd say I think these are achievable goals, and I think the street continues to massively underestimate what Tesla's going to look like over the next 3, 5, 7 years.
Wow.
And I just want to say happy anniversary to Squawk Box. What an achievement.
Thank you, Dan Ives. Great to see you, sir. You've been a big part of it. We appreciate it.
When we come back, we're going to have more on the $1 trillion effort to keep Elon Musk focused on Tesla. We're going to map out Musk's wealth outside of his stake in the EV maker. That's next. In the meantime, we're watching shares of Alphabet this morning. That stock rising 1% on Friday, despite EU regulators hitting Google with a nearly $3.5 billion antitrust fine for alleged anti-competitive practices in advertising. President Trump blasting the EU for fining American tech companies and threatening to fight back with a trade investigation of our own. Squawk Box will be back in just a moment. Hi, Robert.
We've got some breaking news for you this morning. Howard Stern officially splitting with SiriusXM after nearly 20 years. He had teased an announcement about the future on September 2nd's episode. That was then postponed until today, but when the show started this morning, Andy Cohen introduced himself and said the channel will now be known as Andy 100. Cohen said the handoff was meant to be cleaner, and this morning's announcement wasn't how things were supposed to go. He said he's confident that Howard Stern will land on another platform soon. And we're going to try to dig into what's exactly happened here. Of course, Howard Stern had been paid, I think, something on the order of about $100 million.
For 5 years. I mean, he was there when Sirius really took off. That was the thing that they built everything around, on him leaving terrestrial radio and going to that. It got a lot of people to actually subscribe in the very early days. Now, just last week, Scott Greenstein, who's the president and chief content officer at SiriusXM, was speaking at a Bank of America conference. He said that he wanted Stern to say at Sirius, but that the deal would have to make sense. So he said, for all these years and right up to now, is as important a single piece of content as we've ever had. Makes you think, there was speculation at the time it would mean he would have to take a big pay cut. Makes you think that something broke down, and how they would get to some price.
That in combination with what podcasters
are doing,
are making and doing these days on their own. So you got to see him looking at what some of the podcasters are doing, and saying, this should be me.
Right.
So the question I have, and we don't have details on exactly what's going on here, because all we're, I think, hearing from is Andy Cohen, who's on the air when Howard Stern is supposed to be on the air, is whether could there be the possibility that negotiations are ongoing?
Potentially.
Something else happening here? I mean, maybe he's, not calling out sick, but saying I'm not going on. Is that because I'm not going on because there's no deal? I'm trying to still get a deal? Where are we really? I'm just reading this. He said this was supposed to be a cleaner handoff. I'm kind of winging it, Cohen says. It's a surreal morning here. So we're going to keep following the story, which had been rumored.
The idea that he
for
said
quite
there
some
was
time.
a smoother handoff sounds like he knew there was some change coming.
Right.
He just didn't expect it to happen that quickly.
Right.
Who knows? Morning intrigue. We're also watching Tesla shares moving higher this morning. They're up about 20% over the last 3 months. On Friday, the company's board proposed a new compensation package for the CEO, Elon Musk, that could pay him just about $1 trillion in stock over the next decade if a lot of milestones are reached. Tesla's board saying that the eye-popping amount is aimed at keeping Musk's focus on the EV maker instead of his other interests. Our Robert Frank is here. He joins us right now with more of the board's strategy. Hi, Robert.
Good morning, Becky. Good to see you. When they say it's not about the money, you kind of know it's probably about the money. The Tesla board saying in its proxy on Friday that Musk needed greater incentive to stay at Tesla given his other sources of wealth. As they say, quote, a majority of Mr. Musk's wealth is now derived from other business ventures outside of Tesla, and he has more attractive options today than ever before. So Musk is worth about $390 million, but less than half of that now comes from Tesla. His existing shares of Tesla worth about $140 billion. His 42% stake in SpaceX, which was valued at a recent share sale at $350 billion, that would be worth another $147 billion. He also owns a majority of XAI, which is reportedly seeking a valuation of between $170 and $200 billion. So that would put his XAI stake at about $100 billion or more. Add in Neuralink, Boring, his real estate holdings, and his non-Tesla wealth could be over $250 billion. That compares to $140 just from Tesla. Even if his 2018 comp plan was reinstated, his Tesla wealth would be around $200 billion. Not enough, according to the board, to prevent Musk from, quote, prioritizing other ventures. This was a novel argument where you're allowing the CEO to start other ventures. In fact, they say in the proxy explicitly, he's going to continue to start and be involved in other ventures. I was also surprised when I read this that he doesn't have an employment agreement in this plan. So as part of this compensation plan, there is no employment agreement. So he can leave at any time. He's allowed to start any other companies at any time.
Well, I did ask Robin about that. Could he start, is he basically locked into this? And part of the whole idea was that they felt, for whatever reason, that they needed to do this through sort of almost like a free market incentive program.
Yeah, that's exactly right.
You can incentivize him so much that this is what he would want to do. as opposed to, this is a carrot, not a stick
100%.
operation, because the view was that the stick wouldn't work.
That's why I'm saying, so that's why it's so novel to say you can start competing businesses, especially in a world of AI, and it's Tesla's job as shareholders to make sure that we're competing on a pay basis with those companies that you're starting. So
it's too late you can't reverse things and say you can't start other vendors.
100%. No, absolutely not.
To do this entire way through. The only thing I have a question about, is it about the money? I think it's about control, and he said it himself.
Yes, but if it's
he's not going to put like the AI factors into this unless he has a certain amount of control over what happens.
It's about the voting, as Musk says that in a world of AI, he needs to make sure that there can't be a takeover. So he wants 25%. But if this is really about control, he has a majority of XAI, and if you're Elon Musk and it's all about control, where is your focus on the AI future going to be? Is it going to be on the company where you can, at best, have eventually 25%? Or is it a company you already have a majority?
That's why the question is, does it eventually get wrapped in? And Andrew talked about that last week, too.
Right.
Does XAI get wrapped into it? Now, if it's really not about the money, I suppose you could create a second share of stock.
That's what I wondered, Andrew. I wondered Andrew's view on this. If it's not about the comp and it's about the voting, why not just create some super voting stuff
that doesn't come with money?
Yeah, could you do that?
I think technically you probably could create some kind of special voting shares that they haven't approached it that way.
It'd have to have some valuation attached.
The other question is, if they do the XAI piece, does that then change the dynamic for him even more in terms of wanting to be more invested in...
Or a larger voting control.
It gives him a larger vote. If you combine the two, he's got a majority of X, he's got 25 of Tesla, maybe combined he gets 40 or 35, something. That solves the problem.
That solves some of the issue.
Yeah.
Wait a second. Was the Howard Stern thing was a joke? He trolled viewers with the gag that Andy Cohen had taken over his slot.
That whole thing is a joke?
It's not even April Fool's. How could he do this?
He gleefully turned the chatter into a tune-in promo. His show told listeners... Yeah, I think it's a joke. This is
oh my goodness gracious. So Variety, by the way, I believe wrote a headline originally saying that he left. There was a whole number of headlines that he left. And this is why when I heard the Andy thing, I thought, you're not hearing it directly from him. This is kind of weird. Maybe they're still negotiating. That's why I said maybe they're still negotiating. This seems such a strange thing. Within 2 minutes.
Good.
So here we are. They
really good.
They may have gotten everybody. Robert, thank you.
Thank you, guys.
Howard Stern, thank you, and Andy, thank you for getting everybody coming up.
I just have to say, I love this. This is the best Howard Stern thing he could ever do. Way to go.
More stocks to watch. We'll tell you more about Sirius and XM in just a little bit. Plus, check out shares of Strategy up, MicroStrategy that is up nearly 190% in the last year. The company's executive chairman, Michael Saylor, is going to join us in just a few minutes with his latest view on Bitcoin prices and so much more. As we head to a break, another Squawk 30 moment. Do you remember where you were when the Dow hit 10,000?
I believe we just broken 10,000. Let's go.
10,000 has been touched, and it was certainly a bit of celebrating. Now everybody's pretty much back to business. Mark, back to you.
Okay, for a minute there, I thought we weren't going to make it on our show, but tradition has once again been upheld, and the 1,000 mark, the millennium mark falls while Squawk Box is on the air.
Take a look at futures right now, about 88 points higher on the Dow. NASDAQ up about 88 points as well. The S&P 500 up about 16 points. We're going to get over to Frank Holland with a look at this morning's pre-market movers. Frank.
Hey, good morning, Andrew. Good morning, Becky. Let's start off with shares of Chewy. You see right here, they're up about 2 3/4%. They're higher after an upgrade to outperform from neutral at Mizuho. Analysts there are expecting a beat when the company reports its earnings on Wednesday morning. Also strong guidance, saying in part, their data indicates momentum is carried into early Q3. They also say the high discounts given on the company's auto ship program are actually not a concern, rather a high-quality problem, expecting higher returns. Again, shares of Chewy right now up about 2 3/4%. Year-to-date, up over 60%. Also looking at the shares of Canada Goose this morning, also on a rise after an upgrade to buy from hold at TD Cowen. Analysts are bullish on the transition to year-round products and say the stock is cheap compared to similar brands. You can see right now shares of Canada Goose up nearly 4%. Analysts also expect the company to continue its year-long climb, now up more than 30% over the past 12 months. You can see here, up 32% to be a bit more specific. Rounding things out with AppLovin and Robinhood, both popping today after they were announced to be the latest names to join the S&P. You can see right now AppLovin up over 9%, Robinhood up over 8%. They're going to replace Caesars Entertainment and Market Access Holdings. Joining the S&P, it often makes the stock rise because it increases exposure to funds who have to add those names to their holdings. Interesting note, though, Trade Desk and Block, the last two names to officially be added to the S&P, they're actually lower since they've been added. Back over to you.
Okay, Frank, thank you for that. Appreciate it.
When we come back, the challenge facing Fed Chairman Powell following the weaker than expected jobs report. Former Cleveland Fed President Loretta Mester will tell us what she's seeing at next week's Fed meeting, what she anticipates will happen. And later, independent candidate for mayor and former New York State Governor Andrew Cuomo will be our special guest. That's at 8:10 a.m. Eastern Time. Squawk Box will be right back. Friday's weak jobs report is boosting expectations that the Fed will trim rates later this month. Joining us right now is former Cleveland Fed President Loretta Mester. She's a senior scholar at Princeton University's Griswold Center for Economic Policy Studies, an adjunct professor of finance at UPenn's Wharton School, and a CNBC contributor. And Loretta, thank you for being here this morning. I guess my first question is, if you were in the room next week and we're voting on this at the FOMC, what would you say? What would you do?
Hey, Becky, good morning. I mean, I think that the weak jobs report that we got, which sort of confirmed August weakness, really shows that the labor market has lost some momentum. It's not falling off a cliff, but it certainly has weakened over time. And even though, you know, there's reasons to believe that immigration is affecting the supply side, we're not getting as many jobs per month as needed to keep the unemployment rate constant. We saw an uptick in that unemployment rate. Again, not a crashing labor market, but certainly one that has lost some of that positive momentum. So if I were in the room, I would say, let's move ahead with a 25 basis point cut in September. We still have some more data on inflation, but we know that inflation is going to be moving up because of the tariffs. So you want to keep policy a little restrictive to work on the inflation part of your mandate, but you can take down the degree of restrictiveness and help the labor market adjust to these effects that we're seeing both from tariffs and from immigration. I think a lot of firms are cautious to hire because they know their costs are going to be going up. So they want to be, you know, very careful about not overextending their hiring. We see that in the data. And then on the other hand, you also see that immigration is affecting the supply side. So the Fed needs to balance those attributes. I think the real question is, what do they do going forward? And that's really going to depend on the data that comes in, telling them sort of which part of the mandate they need to keep their eye on. I hope they will keep inflation in focus because we've had inflation over 2% for more than 4 years. And they need to keep, I think, policy a bit restrictive in order to work on that part of the mandate. But again, it's going to depend on what the data tells us about the degree of softening in the labor market versus whether we can see inflation look through some of that tariff-induced inflation. And we'll get data next week on both the labor market, the revisions, and also on the inflation side. We'll get a CPI report.
So Steve Leisman already did a report earlier this morning bringing up the question of stagflation. Is that a worry for you?
Well, I think the economy certainly is slow. We saw the growth rate slow. So in that sense, some of the policies that we're seeing play through have an effect. I think firms are still under uncertainty about what the policies are actually mean for them. But on the positive side, there's some deregulatory things coming that'll help them. So again, I don't really think we're in a stagflation in terms of we're going to go into a recession. But no doubt we're seeing some slower growth. And we're seeing the policies affect the growth side of the mandate by weakening growth and at the same time putting upward pressure on prices. So there is a stagnation bent to some of the policies that are being enacted for the U.S. economy right now.
Okay, what inflation? Give me an inflation number that would give you pause about cutting additionally later this year, because the market's already kind of anticipating that they'll see 3 rate cuts now.
Right. I mean, I guess I would be looking at places where it's not only tariff-induced prices. So in the last CPI report, we saw that if you looked at service prices excluding housing, that actually went up. And that's an indication that it's not only tariffs that you need to be worried about. There is sort of this stickiness to inflation. So I'd be keeping my eye on that, and that would give me a lot of pause. Because the narrative, of course, is we can look through some of that goods price inflation because it's tariff induced. But I think we may have a broader problem on the inflation side, and I'd be very focused on that.
I think your point about employers being reluctant to hire additionally because they don't know what's going to hit them later this year is a key one. They've been making promises on the earnings calls in some cases that they can hit their goals when it comes to earnings and revenue numbers, earnings in particular and margins, no matter what happens with the tariffs. They've got to leave themselves a little leeway to work with that.
I mean, and they've been very effective, I think, in sort of, taking actions to anticipate the tariffs. They brought in inventories, but a lot of that's been worked off now. And now I think they're going to have to really face the fact that, their costs have gone up because of the tariffs. How much can they eat in their margins and not pass on, and how much do they have to pass on to consumers? And I think we're going to see some of that going on. On the other hand, on the labor market front, we're going to see government jobs affected because of some of the DOGE cuts. Up till now, a lot of those workers were still on the payroll. Now we're going to see that. So again, it's a balancing act between the two parts of the mandate. I think the Fed has room to reduce the level of restrictiveness of their policy, but I don't want it to do that too quickly or too much, and because I do think we still have inflation that we need to bring down.
Loretta, thank you for being with us this morning. Obviously, a lot that's going to be riding on this next Fed meeting, but you're right, the rest of this year as well. We appreciate it.
Thanks.
Okay, we got a lot more ahead right here on Squawk Box, including Michael Saylor. But first, check out shares of EchoStar, the company selling certain spectrum licenses to SpaceX. The price tag, $17 billion. As part of that deal, SpaceX will now fund about $2 billion of cash interest payments towards EchoStar's debt. The two companies entered into a long-term agreement to enable EchoStar's Boost Mobile. And take a look at that stock. It has been one of the wildest rides. 1 year, it's up now 272%. We're coming right back. Coming up, Strategy co-founder and executive chairman Michael Saylor, some people know him from MicroStrategy, on the price of Bitcoin and the state of crypto markets. We're going to break it all down in just a moment. Do not go anywhere. An important conversation after this.
Check out price of Bitcoin this morning. The cryptocurrency up over 100% this year. Joining us right now is Bitcoin bull Michael Saylor, strategy executive chairman. You know him from MicroStrategy. People are still getting those names, figured out. So we had Tom Lee on the broadcast. I don't know if you saw this earlier today, and he effectively said Bitcoin at $111,000 is headed to $200,000 effectively by Christmas. What do you think of that?
Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of the capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Right. That may be all, but in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, 217 million this morning?
217 million, just slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week, 4 days.
Okay, so can I ask you this? For those folks who are investing in MicroStrategy, or strategy, I should say, as opposed to Bitcoin, you are effectively a levered bet on Bitcoin. That's what this company has become.
That's
Fair?
correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk averse, that want the exposure, are buying the credit, like Strike, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to.
Right, but just to understand it, if in fact, even if there was a crypto winter, and we'll call it a winter because that suggests there's still a potential summer again, at what numbers and levels does it become complicated at which you start to have to sell things?
We constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
You mentioned that you bought $250 million this morning, or 217 million this morning as you walked in. What's your dollar cost average for what you've paid for Bitcoin?
About $73,000 a coin.
And I guess, I wonder if you think Standard & Poor's or others, or, if anybody has any sort of bias towards crypto still at this point, because the S&P 500 just came out with their decisions and they chose to go with Robinhood and AppLovin over strategy. A lot of people were kind of surprised by that. The stock actually was down a little bit. Do you think that there is a bias at any of the indexes or any places that come through this against a company with a lot of Bitcoin in holdings?
I don't think there's a bias. I don't think we expected to be selected on our first quarter of eligibility. We figure it'll happen at some time. There's a digital transformation in the markets. This is a brand new novel concept. Every quarter we make new believers. We get more support from banks, from politicians, from credit rating agencies, et cetera. I think that will continue for the foreseeable future.
we just go back to the preferred piece for just a moment, just to know, because I think people want to understand,
Yeah.
you know, what a leveraged bet this is, but you're suggesting that because it's preferred, it never comes due. How can it be that they never comes
You know, if you were using margin debt, you'd never want to go beyond 10% leverage. If you were using bonds, maybe 20-25% is about the most you would want to do. But if you're selling a perpetual instrument, I borrow $1 billion forever, and I agree to pay you, say, 10% dividend yield forever. The principal's never coming due, right? And the preferred stock, by definition, is a dividend. It's not a coupon. The board has to have the option to suspend it in duress. So it's practically speaking possible to take your leverage beyond 20% to 30 or 40% even, but you don't have the kind of credit risk you have when you have a bond or a margin.
Let me ask you a different question. There's a whole bunch of companies now, these sort of treasury companies that are emerging, SPACs and other things, that are trying to look a little bit like what you're doing, right?
We've had 180 companies that have adopted Bitcoin on their balance sheet. We were the first. So there's an explosion in the past 6 months.
Right, but I'm curious about some of these levered efforts that may be using actual debt, not preferred the way you are, and how you think about them in the marketplace.
Most companies are buying Bitcoin instead of holding sovereign debt, or they're buying Bitcoin instead of dividending out their cash flows, or instead of buying back their stock, they're just buying Bitcoin. And so they're actually increasing their capital base. They're decreasing the credit risk in the company. There are a few companies that are going to issue Bitcoin-backed credit. They may do it with bonds, they may do it with converts, they may do it with preferreds. We're the first company to create liquid preferred stocks that represent Bitcoin-backed credit. Companies like Metaplanet will probably issue preferred stocks. They'll do it in Japan, in a yen basis. Most other companies are just going to creep into this by building up their capital base, and they're not going to get into the business of issuing credit instruments backed by Bitcoin.
How much leverage do you have?
We have about, let's see, 11% of our Bitcoin holdings are bonds, so convertible bonds, and like another 9% are preferreds. So not that much. I mean, really, we have $72 billion of Bitcoin. We have $8 billion of convertible bonds that will eventually equitize. More than half of them are already in the money.
Michael Saylor, I want to thank you. Appreciate it. You got there early. You got there. So far, so good.
Thank you.
Thank you. All right, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Andrew Ross Sorkin. Among our top stories this morning, Treasury Secretary Scott Bessent telling NBC's Meet the Press that he is confident President Trump's tariff plan will be upheld by the Supreme Court. But he warns massive refunds would be required if it's struck down. Meantime, speaking to CBS's Face the Nation, NEC Director Kevin Hassett saying that the administration has other legal authorities to pursue if tariffs are blocked. Air Canada flight attendants voting against a proposed wage deal. The tentative agreement reached August 19th after a 4-day strike that stranded 500,000 passengers will now go to mediation. The union said that there will be no strike or lockout during this process. And several stocks on the move ahead of the open after it was announced that they will be added to the S&P 500 on September 22nd. Robinhood and AppLovin both up more than 8% this morning. And energy infrastructure company Emcor up just about 2%. Let's check on the futures right now. You'll see that the Dow is indicated up by about 67 points. NASDAQ up by close to 80, and the S&P futures up by just over 12. Watching the treasuries, and we had been seeing yields a little weaker. It's actually across the complex now. The 10 years at 407, the 2 years at 349. And for more on the markets this morning, let's get over to Mike Santoli. Mike, what's on your mind this morning?
Yeah, Becky, a pretty steady indicated open right here for the equity markets, and it continues the sort of intraday comeback we got on Friday. Now, we got the jobs report that was certainly weaker than most would have hoped, probably weaker than necessary to cement a September rate cut of some size, but there's enough rationalizations and asterisks about why hiring is slow and labor supply and things like that, that a lot of the parts of the market were able to firm up. We closed last week less than 1% from a record high, although, as I keep pointing out, we have slowed down. So even though it's supposed to be August, September, weak seasonal period, it hasn't been outright declines, but it's been rotation. It's been a lot of the leaders pulling back and the overall market kind of stalling out around these levels, making incremental new highs. Now, what's really key and interesting within the market is how some of the cyclical groups like consumer discretionary and financials have continued to maintain a little bit of a leadership profile. So RSPD, that is equal weighted consumer discretionary. This is the banks index, KBE, and that's just the equal weighted overall S&P. So you see over a 1-year basis, they've preserved this lead. So inside the market, there's enough kind of beneficiaries of lower rates, as we're going to get pretty soon, most likely, that are leading the way. Things like home builders. If you look inside the RSPD, it's a lot of things like travel, like cruise lines that have migrated to the top. So right now, the market has kind of been hard to take away from this position that it's going to get that beneficial rate cut into a steady economy. We'll see if the evidence builds up, and we're going to, of course, get that inflation number this week that might complicate the picture. Finally, take a look at the measure of Treasury market volatility. It's called the MOVE Index. It's the VIX of bonds, and it's been on a long decline since the tariff panic when rates were surging back in the spring, but it has perked up right here. And so it just shows, yes, we've had yields going down, but they've been moving a little bit faster recently. One thing this impacts is the mortgage rate spread to treasuries. And so the spread will have a hard time coming down as long as bond volatility is going up. It's not at an extreme, but it's definitely worth watching as we figure out the interplay between rates and the markets.
Yeah, I mean, that's such a big part of it. The Fed obviously doesn't control the long end, and what happens to mortgage rates is tied to the 10-year. That's going to be a big question about how much it can help the economy.
It is. Although what's fascinating is how over the last 4 or 5 trading days, the Treasury market has really come in yield a fair degree. Now, part of that maybe is pricing in a weaker outlook, or it's just certainty that the ultimate destination of Fed rate cuts is even lower than we thought before. I'm not sure you necessarily want to root for the 10-year yield to really go crashing through 4% in a hurry, because that might mean you're pricing in something on
like a bad economic outlook.
Yeah, but for now, around 4% is where we got down to in April.
Okay, Mike, thank you. We'll see you a little later this morning.
Coming up, independent candidate for mayor and former New York State Governor Andrew Cuomo. He's going to be right here after the break. We've got so much to talk to him about, given what's going on in New York City and this election. And then later, a new Gallup poll finding Americans believing capitalism has fallen to a new low. We're going to speak to Ohio gubernatorial candidate Vivek Ramaswamy and Florida Senator Tim Scott about the state of capitalism and their fight against socialism. Squawk Box coming right back after this.
squawkbox.com.
Welcome back to Squawk Box. The New York mayor election less now than 2 months away, and joining us now is independent candidate for mayor and a former New York State Governor, Andrew Cuomo. I want to thank you for joining us, and want to also just say we've asked some of the other candidates on the broadcast as well. So in terms of fair and balanced, we want to have everybody on the broadcast. Where are we in terms of when you think about your path to winning? If you think that there is a path, we look at Poly Market all the time. I don't know if that's a good thing to look at or not. And right now, Mamdani would still be at 81%. You're at 17%. Adams 2%. There's a question mark about whether Adams stays in. Want to get into all of that? What happens to Sliwa? How this all happens?
Yeah. Well, first, happy anniversary.
Thank you.
To both of you.
Appreciate it.
Thank
you for the cake. We brought some cake.
Yes. And to Joe. This is a much different race than the primary, and this is an evolving race. I think you're going to see a lot happen between now and Election Day. And I feel very good because it's going to come down to a one-on-one choice. It's going to be me versus Mamdani. And that is all.
Because Eric Adams is saying he's not dropping out.
Well, we'll see what happens with Eric Adams, but in reality, for voters, there are going to be two viable candidates who can win. It's going to be me and Mamdani. And you could not have a more stark choice because Mamdani is a socialist. I am a Democrat. And we haven't even gotten to the discussion of what a socialist really means in New York. And he is a radical socialist, anti-business, anti-public safety, etc. And that is not what New York City is all about, right? This is a business capital. We're not anti-business. And it's going to be a very stark choice.
I want to get into some of the things that he has said, and even maybe some of his positions that have changed to try to become either more pro-business or less socialist, if you will. But my question to you is, look, some of the polls suggest if you could get down to 2, that maybe you'd have a real shot here. The question about that, though, is how you get there. I know that you've talked to Eric Adams. You've asked him to get out. I know he's asked you to get out. Sliwa's still in there. There's now headlines that President Trump, may try to offer Adams a job to get him out of the role. There's been conversations about whether some of the real estate executives in New York want to offer Eric Adams a job. By the way, what do you think of that unto itself and what that says to other New Yorkers?
Yeah, well, I don't even know what that means, Andrew. I know that you have an alliance between President Trump and Eric Adams. Eric Adams would be in jail, but for President Trump.
Mamdani says that you are President Trump's choice.
Yeah, except that's ludicrous, right? If you're a Republican, you are praying for Mamdani to win. If Mamdani wins, they can use that against the Democrats all across the country. Mamdani wins, they'll say the Democratic Party has been taken over by socialists. And here's the position of the socialists. They're against business, they would raise taxes, everything is free, disband the police, legalize prostitution, abolish jails. They would win all sorts of seats here in New York with that. I believe they'd pick up congressional seats, they might pick up the governorship to control Mamdani.
So these reports that the president would like to see you win and would like to offer the current mayor a job, you think are inaccurate?
No, I think they're separate things, Andrew. I think you do have a President Trump-Adams alliance. The president, literally, as I said, Adams would be in jail, in my opinion, but for President Trump. If President Trump can give him a job and a graceful exit, and if he couldn't get him confirmed, I think he would do that just on a personal level. That's different than what the Republicans want. The Republicans would be incompetent if they didn't want Mamdani, because they would be right in saying the socialist wing, the far left socialist wing, has taken over the Democratic Party in New York City.
For you to win, though, do you think that he has to drop out and Sliwa has to drop out and they have to endorse you, or they just have to get out of the race?
No, I don't think it works the way you suggest. I think it practically comes down to a two-person race, right? I was just in a primary. There were candidates who were polling at 8%, wind up at 1%.
Right.
Candidates polling at 14, wind up at 3%. Why? Because they weren't viable. It was really a two-person race, and people don't want to waste their vote. This is going to be me versus Mamdani. I'm going to be talking about the economy and jobs and opportunity, and that's what New York is all about. And how do we bring businesses back? Because that is the issue. Unemployment rate is problematic here.
Right.
The deficit is problematic. New York is opportunity. So how do we bring jobs back? And Mamdani's message is the exact opposite. He is a socialist. He's against capitalism. He's against the police. He would disband them, etc. And that doesn't sell, but that's the stark
He
choice.
seems to have walked back some of what you would describe as his socialist tendencies. He had obviously made comments back in 2020, for example, around defunding the police. He now suggests that that's not the case. What do you make about some of the comments that he had made on Twitter or other places in years past that would clearly fall into these categories, but today is saying something different?
It's not years past, and you can't take back what comes out of your mouth on a videotape. You can't take back the tweets. Now, he's in the general election, and he's trying to modify himself, modify his positions. But you can't do a 180-degree turn. You can't transform the essence of who you are. His words are, and they're written, and it's a socialist charter. It is government should control the means of production. There should be no private property ownership. I mean, this is radical stuff.
There should be no private ownership?
No private ownership of real estate. You couldn't own your own home. The American dream.
This is on his plank? This is on the Democratic Socialist plank?
This is the Democratic Socialist Charter.
Right.
Charter that you signed.
So interestingly, and this is and I don't know what to make of it. From what I've read, his spokesman, at least, have said repeatedly, at least recently, that his plank is different or not exactly the same as the Democratic Socialist plank.
They've been a little hazy.
Even though they've signed.
Yeah, they've been hazy on where they
Right.
separate from it, where they don't.
Yeah, a little hazy. They've been totally inconsistent. He is a Democratic Socialist.
I'm not here to defend him. I'm just suggesting this is the other side of what we're hearing from their,
Yeah,
group.
well, what they would like to say is, forget everything I said, and forget everything the Democratic Socialist platform says, and forget the Democratic Socialist convention and charter, and forget everything. And the only thing that matters is what I have on my website today. Yeah, that would be nice, but life doesn't work that way, right? He is the banner carrier for the socialists. And that's what this race is. It's Democrats, and I am a Democrat, my father was a Democrat, worked with Bill Clinton, the Democratic agenda versus the socialist agenda. And the socialist agenda is not viable, especially in New York City. Anti-business doesn't work in New York City. I don't know if you notice, we don't do a lot of farming here, We're about business. And he's trying to run away from it, which, yes, of course, but it's not going to work.
What would you do differently than Mayor Adams is doing right now? I know this ultimately is going to be a race where somebody's going up against Mamdani, and that's the thing we have to focus on. But look, he's doing things where he's basically running against Trump at this point. He is talking about how he's not going to allow President Trump, or he's got a big plan, a big fight if President Trump were to bring people here like he's done in Chicago, like he has done, or like he's threatened to do in Chicago, like he's done in LA. Where do you differentiate yourself from President Trump? Where do you differentiate yourself from Eric Adams?
Yeah, first on President Trump, as I said, I believe the Republicans would love to have Mamdani win. It serves their politics. It would hurt the Democratic Party nationwide. because the socialists would have taken over the Democratic Party. Mamdani loves to pivot against Trump. If Mamdani wins, let's just call it Mayor Trump. He would take over New York City. He already is moving to take over New York, right? He took over Penn Station. He's talking about taking over 9/11. He has said if Mayor Mamdani becomes a reality, he would have to come in to protect public safety.
Do you think the National Guard shows up?
More than the National
My
Guard.
understanding is it's harder for him to bring the National Guard into New York City, given some of the state laws and other things, than it is, for example, in Washington, D.C. Is that right?
There would be a legal challenge on the National Guard. But forget the National Guard. I was in the federal government. I was in Bill Clinton's cabinet. You control all the funding. You can stop the health funding, the housing funding, etc. The federal government has phenomenal power, and he would de facto take over New York City. I have no doubt.
Right.
And Donald Trump does love New York. This is still home.
Right. So this cuts both ways in a very interesting way for some New Yorkers. I think there's a whole bunch of New Yorkers that are not fans of President Trump, and they want to see a Mamdani or somebody rallying against the president. And there's others that don't want to see the National Guard running around the streets, but feel that they're being therefore held hostage. What do you think of that argument?
Well, you're right. It is conflicting. But the question is, who is in the best position to protect New York from Trump for those people? And the answer is me. I was governor. He was president. We went through COVID together. We have done battle royale for years.
So what is your relationship with him like now?
I think if we can avoid a fight, we would avoid a fight, right? We have both engaged. I know his right hook hurts, and he knows my right hook hurts, right? So if we can avoid an engagement, we would. When I was governor, he sent the National Guard into 20 cities, not New York, right? On the other hand, if President Trump can be helpful to New York City, I would work with President Trump.
What happens to Curtis Sliwa? Does he have to get out of the race too for the math to make sense?
I think people will discount non-viable candidates. When you get down to election day, and it's either Andrew or Becky, I think they say, Joe's not here, I'm not going to count Joe. I think what's going to happen is, in practice, they're going to say either Cuomo's going to win or Mamdani's going to win. I'm going to pick one of those, and I'm not going to waste my vote on the other candidate who's not really viable.
And from a technical perspective, to get their name off the ballot, what is the last final day that they have? Or they're still there?
That's under contention, but it's the 9/11, literally.
So we're almost there. Yeah, no, we're there. Governor Cuomo, thank you for joining us.
Thanks.
Appreciate
Thanks for
it.
having
Good to
me.
see you.
Happy anniversary.
Thank you. Thank you. We'll continue this conversation. And we have, as we mentioned, extended an invitation to Zoran Mamdani and Eric Adams to join us in Squawk Box, and we hope to have those conversations right here too. We're coming right back after this.
Scooch
Say
up.
hello.
How is the camera not
Can
getting?
we get a better camera angle? Here,
Jensen
see who's
Watt's
here.
He's here just to.
Cameo.
He's doing some other stuff here.
We don't have a microphone on you is a problem.
Well, it's so exciting to be on the air. Am I on TV?
You're on TV.
That's incredible. I'm with Becky.
With the greatest show, the greatest show in the world.
This is the greatest show on earth.
ABC+.
Welcome back to Squawk Box. Take a look at the futures right now. Got some green on the screen. NASDAQ up about 70 points right now. Dow Jones up about 61 points, and the S&P 500 powering higher as well, about 11.5 points. Take a look at Treasuries as we turn that board around. 10 years now down at 4.0, and the 2-year at 3.5. And oil on the move after President Trump saying he's ready to impose more sanctions on Russia and OPEC Plus, agreeing to raise its oil output next month. Check on crypto prices as well this morning. You look at Bitcoin, about $111,000, $112,000. We did have Tom Lee on the broadcast earlier today. He made a comment suggesting he thinks Bitcoin by the end of the year, you ready for this, could be $200,000. Michael Saylor, I think, somewhat agreeing with him. We'll see. Coming up after this, he's been a staple right here on Squawk Box for the past 30 years. Legendary stock picker Leon Cooperman is going to join us with his latest market outlook, where he's putting his money to work and what he thinks about the state of the economy. Squawk Box returns with Lee Cooperman after this.
$389.
Welcome back, everybody. Welcome back, everybody. The market's interpreting Friday's softer than expected jobs report as giving the Fed the green light to cut interest rates later this month. Joining us right now on set to talk about the markets and what he's seeing is Lee Cooperman. He's the chairman and CEO of Omega Family Office. And Lee, welcome. Thank you for being with us this morning. It's good to see you.
Nice to have me.
Well, you've been looking at all of this and been pretty skeptical for a while that the market could continue. I know you've done well because your individual stock picks have done well. What are you thinking about the broader markets at this point?
I think the broader market is heading for trouble. You know, it's extremely overvalued relative to its own history. It's about 98th percentile valuation. And lots of issues that have to be dealt with. You know, we have no leadership in Washington, no agreement among the two parties. We have radical left, radical right, which I think are hurting the country. And we have to get along, we have to work together to deal with our problems. And it's not being done. And every day the debt goes up and goes up, and nobody's focusing on it.
Obviously the market can stay illogical a lot longer than people can stay liquid at some points. And betting against it, betting against it can be a really tough thing too, because even if it doesn't make sense, it can keep climbing.
I'm up about 15% this year.
I'm sorry, how much?
15,
15, okay.
And I think that's a little bit better than the S&P, better than NASDAQ, better than the Dow. And I'm not short much of anything. Other than I'm short the index. I think last time I was on, they had a structural short on above 6,500 the S&P. And there's a chance we'll get above that. I would not have thought that 3 months ago. But we've had
Do you
very
still
good
have a structural short above 6,500, or have you changed?
Yeah, well, we moved it up to about 66, 6,700.
Okay.
I'll make money on my short volatility spreads up to 6,700. I think that the stock picking is what saved us this year. Mr. Cooper's been our best holding. It's been a huge winner. And we've had some of the data center companies like David Cody's company. And we've had MP Materials and rare earths. So we've had a few of the big winners and a lot of value stocks.
Is it harder and harder to find stocks that you think are value stocks at these levels, though?
As the market goes up and brought down, absolutely. Definitely.
So what do you do? You still have conviction in Mr. Cooper, even with the stock's gains that it's seen?
Well, they had the brilliant move to merge with Dan Gilbert's company, Rocket Mortgage. And we think they're going to be a world-class company being created out of the merger of the two entities. So we think the stock can achieve a significantly higher multiple and can get into the 200 area, 210, 220, 230, 240, currently around 180 something.
What do you think are the risks for this market? You think it's really overvalued, but it usually takes an event to bring down a market.
Yeah, it's going to take either AI being discredited, or maybe showing not to be that economic, or a recession. It doesn't look like a recession is in the cards near term. The economy is slowing, but I think that every third word on TV being AI. And if you have a country and bone in your body, you have to be a little concerned about AI being over-promoted.
But AI is something that you're betting on too, with the data centers that you've been placing.
Yeah, small bet. Yeah. And we also got much lower prices. We're not a buyer of Vertiv now. We have a decent position, but it's up fivefold before we bought it. We had a very high regard for David Cody. We still do.
The question with AI, though, and I guess I wonder if this gets back to, you think that this is going to play out like the dot-com bubble did? Because these companies are so different. So many of them have not just revenue, but massive amounts of profit that are coming through. You're still seeing massive amounts of spending that come from the big companies, the big tech companies, placing bets on.
They're not going to fail.
Yeah.
I think that, look, I came into the world from college. I went to work for Xerox Corporation. Mm-hmm. So I understand technology, a double-edged sword. Somebody else's innovation, somebody's obsolescence. Xerox was on top, so it might have been photocopy out of business. And the Japanese did a number on Xerox by coming with low-cost products. So I think that the odds favor something going wrong.
that they won't be as good as people expect.
The AI results won't be as good as people would
Yes,
expect.
return on investment.
We have seen job hiring under pressure, I think in part from AI
Well,
already.
you want to be a plumber, a roofer, or a carpenter these days. You want to be a business executive. I read somewhere where 25% of the Harvard Business School class is unemployed.
You mean the class that just graduated, 2025?
You know, there's been a bunch of headlines
Yeah.
about that class, about Stanford, Stanford engineers who are working at Chipotle. I mean, it's a remarkable thing to think about what happens to the economy if AI, but that's if AI accelerates it. So there's sort of this dichotomy. My question is, when is the moment on this sort of AI build out where, to the extent that these companies are not going to be capturing the cash that they're expecting, what is the inflection point?
Well, they miss. I mean, NVIDIA's not making new highs. NVIDIA's been retracing its move. And I think the market will figure it out well before the analysts figure it out. And I tell my guy, who's nervous about all these holdings, that the stocks will be down 15 or 20% before you revise that earnings estimate. That's the way it usually works. You know, with your permission, I'd like to read something Warren Buffett wrote in 1999. And he is as smart as they come. And he says, God's plan, this was a comment he made at a conference in November of 1989, is once a bull market gets underway, and once you reach the point where everybody has made money, no matter what their process was followed, the crowd is attracted to the game, is responding not to interest rates and profits, but simply to the fact that it seems to be a mistake to get out of stocks. Okay? These people superimpose on I can't have miss fundamental factor, and on top of that, fundamental factors, they have to drive to be in the market. Like Pavlov's dog, these investors, in quotes, learn that the best single place to be is stocks. And like Pavlov's dog, the exchange opens up at 9:30 and the bell rings. They're out feeding. And we're in a bull market, everybody's got a profit. And there's a God, and everybody becomes convinced there's a God, and that God wants to get them to be rich. It's not that way. There is a God, in my opinion, but I think he wants to spread it around. Not everybody's gonna get rich.
Yeah. I guess the idea, though, is it's really hard to ring the bell on when the market comes down, but you are willing to bet against the S&P 500
I am willing
above
to bet against it.
66, 6,700 at this point? Where would the S&P 500, where are you betting against it at this point? Where are you shorting it?
I think my hedge, I lose mine above 6,700.
6,700.
I'm short puts there, I'm short calls.
Yeah.
But my big bet is individual stocks.
Yeah.
And we find a lot of them. I just bought a stock that's very uncharacteristic for me. I bought a stock called Diametica. They don't have any money, $300 million market cap. They have two very, very promising drugs. I see nothing but insider buying in the company. So the management really believes this story. And they're attacking a couple of areas that are very, very pregnant opportunities. Stroke medication, and for women's pregnancy, about 100,000 women die every year from high blood pressure, and the 10 babies pass away as well. So they have a drug to deal with that, and they have so far a good experience with the FDA, and the test results have been outstanding. So it's you go down in quality. I bought some New Vista Energy. I think the price of oil stays in its current range. The gas is worth about 18 to 20.
Okay.
Stock is trading 17, 14, 15, 16. Got a lot of things to be done.
Well, Lee, we want to thank you for joining us this morning and coming in and being with us on set. We're celebrating our 30th anniversary, and you've been a big part
It'll be a Wednesday.
with us along the way.
Congratulations.
Thank you.
I want to thank you, Lee.
Yeah.
You've been such a student of history and helped us, I think, understand a lot about what's going on in the markets over all these years.
I'm
We're
less
very
careful
grateful.
now because of my health issues. But, you guys do a great job, and you're probably responsible for going up a lot. You made it so attractive to be involved.
Well, thank you. You've I think, helped a lot of our viewers along the way and brought us a lot of educational along the way. And by the way, he's done a lot of amazing philanthropic things as well.
Yes,
So
we've seen that.
we appreciate you, Lee. Thank you for coming in this morning.
I'm taking all my money. I work very hard. I'm taking all my money to give it away.
I know you do.
It's an incredible example, and we appreciate it so much.
My pleasure. Not always in a position to do so. I'm the American dream. I grew up in the Bronx. My father came to America in Warsaw, Poland at the age of 12 in 1920. And I went to public school in the Bronx, high school in the Bronx, college in the Bronx. I had switched into Columbia Business School, which opened the door to Wall Street. So I'm very lucky. And my goal is to share that good fortune with people less fortunate than myself.
We appreciate it so much, Lee. Thank you for,
Thanks for having me.
your efforts, for your example, and thank you for being here. Lee Cooper. Squawk Box will be right back.
Welcome back to Squawk Box. A new Gallup poll released this morning finding that Americans' positive image of capitalism has fallen to a new low. Just 54% of U.S. adults surveyed view capitalism positively. That's down from 60% in 2021. It's the lowest level since Gallup began asking that question in 2010. Our next guests are here in New York City today to talk about New Yorkers, about what they say are the dangers of socialism, and to share their ideas on how to manage their future if Mamdani becomes the next mayor of New York City. We just had, of course, Governor Cuomo, who's running for mayor. Florida Senator Rick Scott is here, and Ohio gubernatorial candidate Vivek Ramaswamy. Good morning to both of you.
Good morning.
Morning.
Capitalism is good. Socialism is bad.
Okay, so
if you like capitalism, move to Florida. When Vivek is the governor, he's going to make it a place where you want to move to Ohio.
Okay, so the big question though is, you look at these polls, and you look at, you know, even just the Democratic race here in New York City, and the way the numbers seem to, and there's clearly a major gap in terms of the favorability and view of capitalism, and what that is. What do you think that actually is about? To the degree that you believe it's a misunderstanding or a miseducation or a miss something, how you go about fixing that beyond us having this conversation.
We got to go talk about opportunity. I'm a kid that grew up under capitalism. I grew up in public housing, never known my natural father, and I had the opportunity in this country to go build companies and eventually run for governor and run for the Senate. That's what we ought to be talking about, the fact that you can come from anywhere in this country and do something. Under socialism, that's clearly not true.
I do think it's a fact of the matter. My parents came to this country as legal immigrants 4+ decades ago. They never imagined I'd go on to found multi-billion-dollar companies, now running to be the governor of the very state where I was born and raised. And the extraordinary thing about our country is that Rick Scott's story, my story, are actually not that extraordinary in the United States, that this is the country on God's green earth where that's possible. Now, beyond just talking about it, I think we have to put some more meat on the bone as well when it comes to participating in equity ownership. And I think this is the big difference between the wealthy and everybody else, is do you participate in the uncapped upside that capitalism creates? And I think the left, with baby bonds and universal basic income, they have a shred of an intuition that they channel in totally the wrong way. What I want to focus on, and what we're going to do in Ohio, is incorporate financial literacy starting at a young age. Engage in what Albert Einstein called the most powerful force in the universe, compound interest, starting young, where I want to build a state where every kid who's born, raised, living, and working in Ohio grows up to be a millionaire in our state. The best way to combat the popularity of socialism, Andrew, is actually to make everyone a capitalist by making them an owner in those uncapped upside equity creating assets.
Here's the question though. So here in New York, one of the things that Mamdani seems to have been able to capture is this idea of affordability being a problem.
Because it is a problem.
Because it is a problem. It's a genuine, real problem, and I think it's not just a problem here in New York, I think it's a problem across the whole country. And there are so many families that literally are just scraping to get by every week, every month, every day. You know, you and I went to the US Open yesterday. Yep. It's a fabulous event, and the truth is, most people in America cannot afford to go to something like that. They can't afford to actually go to an NFL game necessarily. They can watch it on TV, but and as a result, I think there is this view of this sort of haves and have-nots thing that's happened in this country, and how you can create a sort of better system. I don't know if it's a better system, but a better system ultimately.
And there's clearly
for this to work.
It's what government has done is made it very difficult for the poor to get ahead. The cost of everything has gone up, and it's a lot of it is government regulation. You can't get a permit, you can't start a business, you can't even get ahead. So if you think my first business was a donut shop, I just got out of the Navy. You know how many permits I had to have?
How many?
None. I'd have to have one permit. Right? Today, it would take you months. And in New York City, it's probably worse than almost any place in the country. So if you think about what we've done and how we've hurt the poor, you made it very difficult because of regulations and permits and fees, and you have to have this standard, and you have to have this test, and you have to have this degree, you have to have this. Let me go compete. Let me in the game, but you don't even let me in the game if you don't start out rich.
Think about housing as an example of this too. I mean, he's running Mamdani here in New York, and many people across the country would be smart to run on bringing down the cost of housing. You want to bring down the cost of housing? Rent controls aren't the way to do it. The way to do it is increase the supply of what actually matters. Increase the supply of new home construction. What gets in the way? Rent restrictions, land use restrictions, red tape in the way. Think about energy. Electricity costs in my part of the country are 50% higher this summer than they were last summer. How do you solve the problem? Increase the supply of energy production. And yet a lot of those far left policies, while well intended for the best of them, are actually resulting in hurting the very people they intended to help by creating higher housing and energy costs.
That's why there's a lot of people who say Mamdani would be the perfect solution. Let him get elected, let people see what happens when you have some of these far left solutions. Do you agree with that?
So I think electorally, I mean, out of taking my self-interest out of it, I'm running the 26th cycle. I think Republicans will undoubtedly do better if Mamdani is elected, which appears to be on track to happen. I'm not rooting for that because I think that New York City is a great American city and we want to see New York City thrive and set a positive example rather than a negative one. That being said, some lessons do end up having to be learned the hard way. And you want to combat the popularity of socialism? Well, if you see the result of those socialist policies, people are going to be open to a different alternative. What I want to see, Becky, though, is I want to see Republicans use this as a wake-up call to affirmatively make the case for capitalism itself, the original version.
Okay, so now
and if we do that, we're going to be successful.
I have I think a complicated question for both of you. We are now in a very unique moment in the Republican Party, at least in what Trump's Republican Party, around the idea of what capitalism and free markets are. You look at the transaction that took place with Intel, what's happening potentially with AMD and NVIDIA. We can go down the line when it comes to industrial policy, tariffs and the like. These are not considered free market principles at all. In fact, some people would describe these as socialist principles. What say you?
Well, let's take Intel as an example, okay? They got, I think, $4 billion out of the CHIPS Act. I completely oppose the CHIPS Act. So here what we said is, Intel, you get $4 billion, you don't have to actually operate a plant, you can still, and the CEO of Intel said, I asked him in a hearing, are you gonna keep doing business in China? Yeah. I said, if they invade Taiwan, you're gonna keep doing business in China? Absolutely. So if you look at what's happened is, whether any of us would believe, right, that you should get, an interest in a company, if that's the way we're going to get a return on the $4 billion we put up, if that's the only way we're going to get a return, then we ought to get a return. But look, I did economic development when I did as governor, okay? And I did it by, I said, I will help you, but it's tied to how much do you pay, how many jobs you create, do you keep those jobs? That's what we should be doing. And that's not what happened with the CHIPS Act.
Well, where do you land on that? Just because it is an interesting phenomenon. We are in an industrial policy world. By the way, this could be busting the myth that there are free markets at all. I mean, some people would argue under Democrats there wasn't a free market either, insofar as there were either giveaways or grants or other things for different industries. I mean, we can go down that line, but it's a different approach.
Well, here's what I'll say, Andrew. The modern Republican Party is a big tent coalition. I have my views within that coalition. I believe that capitalism is the best system known to the history of man to lift people up from poverty. And I give President Trump for unifying what is a big tent coalition. Now, to pick up where Senator Scott left off on the CHIPS Act, I'll give you my perspective. I think the CHIPS Act was a mistake. It was based on this false premise that we're trying to imitate China, where China showered a bunch of semiconductor companies with money. Didn't go very well. They're being investigated for corruption, which is the sign that it failed. In the US, we shouldn't copy that method by having showered them as we did under the Biden administration. But let's get to the root cause. Why is TSMC slowing down a little bit in Arizona, or not as fast as they would have wanted to be? It's in part because we don't exactly have yet the skilled workers to build those sub-10 nanometer leading edge semiconductors, which goes back to deeper root causes that I'm looking to address in our educational system. I mean, the average student right now in the United States is 4 full academic years behind the average student in China. A 7th grader here is performing at the same academic standard as a 3rd grade student in China. That's unacceptable. And do we need leaders, frankly, if not in the Democratic Party, at least in the Republican Party, focusing on those root causes? Absolutely. And I think we're going to be unified around that. But certainly in Ohio, looking at state leadership, that's where my focus remains.
Unfortunately, we're out of time. This is a longer conversation. We could do a whole episode, if not longer.
We could do a whole day.
3 days on this. I want to thank Senator Rick Scott for being with us. Vivek Ramaswamy, thank you for being with us as well.
Thank you.
I've seen both of you.
Great to see you. Squawk Box coming right back after this.
right, folks, we are looking at the futures this morning. It looks like the Dow futures have picked up a little bit, now up by close to 100 points. S&P futures up by 16. You've got the NASDAQ indicated up by just over 90 points. We've got a lot to still cover this week with inflation data that we'll be getting, and we've been watching bond prices as well, and bond yields have been a little bit weaker. Obviously, they've come down significantly since that weaker than anticipated jobs report on Friday, too. Right now, the 10-year is at 407. That does it for us today, but we're going to be celebrating our 30th anniversary all week here on Squawk Box. We hope you'll join us for it, starting again tomorrow. Right now, it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer. David Favors back at post 9 of the New York Stock Exchange. Futures solid to start an important week of inflation data. PPI Wednesday, CPI Thursday. As the market looks ahead to a rate decision next week, yields mostly lower, 10-year 406. Our roadmap begins with a tariff warning. The Secretary of the Treasury saying if the Supreme Court voids Trump tariffs, it could spell trouble for the Treasury.
Plus, AI bubble fears. NVIDIA's notching what is a 4-week losing streak, while some data, and it's only some, suggests companies may be scaling back some of their plans for the use of AI. Also keeping an eye on shares of EchoStar. They are surging ahead of the open. This on this big spectrum deal with SpaceX's Starlink.
Let's begin, though, with the White House's economic agenda ahead of next week's Fed meeting. This is what the Treasury Secretary had to say yesterday on Meet the Press about the legal battle over tariffs.
I am confident that we will win at the Supreme Court, but there are numerous other avenues that we can take. They diminish President Trump's negotiating position, but there are numerous in terms of, and remember, this isn't about the dollars, this is about balance. The dollars are an after amount.
Would you offer rebates, though? Are you prepared to offer rebates?
So we would have to give a refund on about half the tariffs, which would be terrible for the Treasury.
And the Times, Jim, did cover yesterday or last week some law firms and companies positioning for a potential refund of tariffs they've already paid.
Yeah, I think that the Supreme Court has never been as important since perhaps, I think you could argue in the 30s when you're trying to figure out the New Deal and whether you had to do rebates there. David, this idea that everything rests on the Supreme Court, with the idea that it really is packed with people that should vote the president's way, I mean, maybe we're just worried about too much.
Well, we don't know how the Supreme Court will rule, and it's going to be any number of different cases of great importance, far beyond some of the things specific to tariffs, clearly, Jim. And I think we'll be following that calendar very closely. It is interesting to note, I think, that Besson is talking about the revenues that have come into Treasury from tariffs, which figure now prominently in the articulation that they make about the benefit of them in terms of the overall budget and budget deficit. That was something that was discussed without a doubt before the onset of the tariffs, but really what was more focused on was we're going to create manufacturing jobs.
Right.
Not as clear that that has yet occurred. And it's just interesting to see, in terms of the importance, Carl, of tariffs right now, they sort of figure prominently into, hey, we don't have that revenue, our budget deficit's going to look a lot worse.
Well, to your point about manufacturing jobs, we're averaging losses of about 15K a month in manufacturing, 4 straight months of manufacturing job loss. Apollo with the chart over the weekend, Jim, saying it's really centered in autos, auto parts, electronics, furniture, sectors affected by tariffs.
Right, well, these are industries, for the most part, where we either figured out how to make it elsewhere, or we don't know how to do it at all. I mean, you go back to the furniture issue, and you go back to that we don't really have a high point, which is in North Carolina, was the old days. I mean, the only company that has actually tried to rebuild America, successfully, by the way, is Nucor. They pick towns that are down and out towns that have good workforces, and they put their plants in, and they don't need the government to do that. Pretty interesting. You have to really wonder whether we did not think that there could be that much money raised by the tariffs. And now it turns out not only is there a lot raised by the tariffs, but we're now listening to a Ken Griffin world where without it, maybe we have a runaway budget deficit.
Well, that continues to be a concern, and so this will figure prominently into another reason why the administration's arguing that we need the tariffs to remain in place. But to your point, the Supreme Court ultimately is going to decide.
Right.
whether the emergency powers that the president has been using here are valid. And by the way, the use of emergency powers doesn't just extend, as you know, to this area, but to many others as well.
Well, let me ask you a real wild card.
Under different statutes. Yeah. What's the wild
See
card?
what he says to this. He's been on vacation.
I have. I've enjoyed it too.
Well,
Not that I didn't miss you guys.
That's something that happened. What do you think about the possibility that the president ignores a negative ruling and just continues to do what he wants?
I think we'll take it as it comes, right? We'll see. I have no idea.
But it is, since Jackson, by President Jackson, a question about whether the executive will take the
You have raised that point many times. How many divisions does the Supreme Court have, right?
They had no more than the Pope had, but the Pope ended up winning, so who knows?
Who knows? Who knows? One hopes it doesn't come to that.
Yeah, let's hope. I mean, but I think that those of us who are shocked about what's happening with the Federal Reserve, and the idea that ad hominem attacks on people that you don't care for, in a way that I think is hard, because a lot of people have more than one primary residence when they start, although if you do it at the same time, obviously bad. But I just think that the idea of saying, you know, the Supreme Court, they have their own ideas, we have our own ideas, stop us. Who's going to stop us?
You in what army? Is that
yeah. And I don't think that that's so, it's not a fanciful argument. You have a president who feels he has a mandate, the largest mandate ever. Okay, so why
don't make me trot out the narrowest margin since Nixon.
I'm just saying that when he looks at he may say there's some justices who are misinformed, and if they were informed, then they would be with me. So why should I change my mind?
You mentioned the Griffin piece in the Journal. He does talk about the criticism of the Fed, casting doubt on the economic data, says it's damaging U.S. credibility, and they argue that in the piece that once that's lost, as has also often been the case in emerging markets, tough to get it back.
Well, look, this is a rock rib Republican, a Trumpist, a MAGA, who says, wait a second, this has nothing to do with MAGA. There's nothing to do with trying to change the way the nation works. It's just a way that seems to backfire. There are people, the first Republican is broken ranks, high-ranking Republican, high-ranking private sector Republican. It matters.
Well, yeah, I mean, in almost every realm, the silence of the business community has been deafening, right?
Yeah, that's my point. But now, of course, he has his own fund. He doesn't have to report to shareholders. But I try to get a lot of executives to talk about these things, and they just very quickly pivot to maybe this time the pivot will be it'll be Ravens. Bills. Last week the pivot was Eagles. I mean, it's very interesting because it's like not
anything to change the subject.
Anything. Yeah, no, but you and I both.
Yeah, except in the quietest of conversations.
Like where's that?
Remember Maxwell Smart? Remember Get Smart, where you have the cone of silence. Yeah, that's what you need.
I think the cone of silence is definitely in play.
That's what you need. The cone of silence, and then occasionally people will say that some things they're uncomfortable with.
Right. It has to be in the privacy of your own home. You can't say it in a restaurant.
Speaking of restaurants, this piece in Politico is interesting. This dinner that was being held in D.C. with a bunch of Trump advisors and administration officials, and according to the magazine this morning, a report that Bill Pulte kind of got into it.
That's but that's the way I always felt about Yale. I always felt that they come on too strong. And people say it's patrician, totally wrong. Now we see the real.
Listen, the guy he gave him a heads up. He didn't sucker punch him. He said, "I am going to." It's unclear whether he did. Apparently, it was because Mr. Pulte has been had been accused by Besson of talking
to the president, about him.
Correct, and not in positive ways. Besson is a bit of a potential pugilist.
After the Musk dust up,
yeah,
in the executive
I think he and Navarro went at it too a little bit, right?
Well, yeah.
Two fellows who conceivably, fists might fly. Yeah.
Navarro has a new book coming out, so we'll find out maybe a little bit more. I think it was written pre. But I will say that I had always thought, Carl, that there was supposed to be no fighting in the war room.
And now we do have the Department of War again.
Well,
Yes.
Down.
It requires an act of Congress.
But come on,
Who cares?
That's quibbling. Stop.
I try, I used it this weekend in a piece that I wrote for club members. I do a Sunday piece, and I realized how many people think it's the company that cut the dividend in half.
Excuse me?
Dow Chemical. I mean, tough.
It is tough.
I don't think you have to think about that.
I'm glad you raised that because it's nice to talk about a stock 9 minutes into the show.
Well, I don't want to be too parochial. Yeah. We haven't talked, and the only one you're going to talk about anyway is Tesla, so what's the difference?
We're going to get to Tesla.
We're going to get to Tesla.
But let's do NVIDIA.
Yeah.
Shares are trying to recover this morning from this recent slump. Down 6 of the past 7 trading sessions this morning. Citi actually cuts its target. They were at 210. They go to 200. They cite growing competition in AI. They do maintain a buy on the stock. Jim, this all ties back to the news last week, the reports of the Broadcom OpenAI, and this notion that maybe in this new phase of AI trading, there are winners and losers.
Right. Well, look, I think that move in Broadcom was seminal, and I know you have Ben Righteous on later today, and the only way you can say that move can continue is to say, you know what, they are rivals. Jensen told me, he sent me a piece where I just want to give the quote here. In terms of trying to pin down why people will still use NVIDIA over everyone else, he keeps talking about performance with the performance with revenues, the performance with gross margins is so much better than everybody else that there really is no reason to even think about a competitor. Now, there's some people who say that 15% is going to go to Broadcom, some people who's going to get 30% is going to Broadcom. Jensen's saying no percent goes to Broadcom, and that all this is just kind of of which, by the way, they have real customers, don't get me wrong, but they're not competing. And here we're talking about TikTok, Google, Meta, and then AI, that being the wild card 10 billion. I'm with Jensen because he hasn't steered us wrong. I think that his is an ecosystem. I think his is a great price performance. That's what he's been extending over and over again. Don't forget, David, NVIDIA is going to burn a little less, but the fight here has been, ever since Amazon reported and the stock got clubbed, that Amazon is not using enough NVIDIA. Now, Amazon's told me, Jim, lose that narrative. That's just, you got that wrong.
Oh, yeah? Because you had been on it for a while.
Right, but they were, and I felt somewhat convinced that that you can use Trainium, which is an outsourced product.
Yeah.
It's not NVIDIA.
Yeah. The only thing I could offer here is in talking to the deal makers, the lawyers, the bankers, private credit financiers that put together the deals for the creation of data centers, whether it is for ultimately to be leased to a Meta or to an OpenAI, no let up whatsoever.
No,
now, I'll let you speak to what's going into that data center and the competition potentially between the likes of Broadcom and NVIDIA and others. But the idea that there has been some sort of a pullback from those that are building the data centers, no way. Not, and in fact, I don't have, OpenAI, I mean, they are just, you've seen this information story. I know how you feel about that. But what I can tell you is there is no diminution in the spending they are planning for the foreseeable future, nor anyone else, at least based on the conversations I have with those who are negotiating to find the capital to put the data center in place, which, by the way, oftentimes is not actually the hyperscaler or the
No.
OpenAI. They're simply the tenant.
Right, like
so it's not CapEx for them, it's OpEx.
The MCOR, the company that was added on Friday. You look at it, that's a data center play with a small healthcare business. I don't know. I feel that there is a cessation of the theory of how much you can do with AI, and a lot of that has to be, first of all, take a look at what happened to Salesforce last week. They've got this AI initiative that lays off 4,000 people. Well, wait a second. How is that good for? Can you therefore bring up AI? We're gonna have Adobe this week, and in a way that can make you a lot of money. Maybe not. Maybe it can't be monetized. And then I come back and I say, like what I asked the chief economic advisor, Pastor, what do we think about the idea that job creation may be stunted by AI? And he said that, well, his 2 kids can get a job.
So every 2 weeks, the Census Bureau polls about 1 million companies, and they say, in the past 2 weeks,
have you used an AI tool to provide a good or a service? Apollo tracks that over the weekend. There's the chart. It's rolled over. Now, we don't know if that's could be I don't know, seasonal affectation.
Well, yeah, we're going to get to Tesla. But if you go back, I think that Jensen Huang would say, look, these are all good, but until we get reasoning, you're not going to use it. And then once we get reasoning, it's going to go to autonomous. We do have autonomous truck driving right now. It's going to go to autonomous, and it's going to be robots, and those are the real uses. That's a very telling thing. That
Is
says,
it though? Is it really telling? I don't think it tells you anything. I'm sorry.
What, that it's curved?
Yeah, I don't. It's so too early. I don't.
It's too early, but David, okay, I'm going to give you something that I think is the most important
definitive
thing that no one's talking about. It's a lawsuit between OpenAI and the New York Times about whether you can steal the intellectual property.
Yeah.
And I've looked at the lawsuit, and it looks like all they do is steal the New York Times.
That may be true. That has absolutely nothing to do with that chart we just put up.
No, but if
But do you think the chart was legit 6 months ago?
No, I can't. I don't think you can put. I don't know. I don't think these charts are indicative of anything in terms of what I'm hearing from the enterprise. There's no doubt that ultimately it's going to be
This is not about the build-out. The build-out continues.
This is not going to change the ultimate view of corporate America that this is a tool we have to use.
Yes, but
now, will it happen over 6 months, as quickly as, or the next year and a half? I don't know, Carl.
It doesn't have reasoning. Doesn't have reasoning, and the mistakes are so great that I would never use it if I were in a real serious job.
You have to check it without a doubt.
You know
in some
how?
ways, but you're also talking about different types of things and
You know,
information jobs.
Brian Cox says you're not serious people.
Yes, I remember.
I don't think if you use these, you're a serious person.
That's ridiculous.
No, yeah.
That's ridiculous.
I referenced it last week in a piece I was doing with my nephew.
Fine, so you check it.
And he took it out. He said, how many have you used? I said 3. Well, how about 6? It is so inaccurate, it's painful. It's painful.
Okay.
What? Use it.
I just agreed with you. Okay, I said okay.
It can summarize the preamble of the Constitution.
By the way, that's not really going on in the enterprise very often. But okay, yeah.
You just go ahead, be a lawyer, and use it. Bye. Bye-bye.
Take a look at the pre-market on this very busy Monday morning. We'll get you to some news in media, Siri and Paramount, Tesla. I got some consolidation in financials, UNH and Apple in a minute.
start for a week. Whoa.
It's going to be a light earnings calendar this week. We'll get Kroger and Adobe and Chewy and GameStop and Oracle, which, by the way, tops the S&P gainers this morning. We'll get to some of the movers, UNH there with an affirmation of the annual guide. We'll get Kramer's Mad Dash and countdown to the opening bell after a break.
I'm here. I'm here. I'm here. I'm here. He's here. Washboardjim here.
Subscriptions. Let's get to the first mad dash of the week. Of course, we also have an opening bell about 7 minutes from now. What do you got?
Well, you know, David, I've been struggling with this idea of stocks, which ones go up. Something that's old school, comes in after the Mets Phillies in terms of the hierarchy. And David, there's one that reports this very evening. It's called Casey's General. 2,900 stores all over the country. 2,900, 29. David, they have a breakfast pizza that you wouldn't believe. I've had it, and if we had a Casey's General, which we do not, I would do a radical pivot away from the Egg McMuffin to the breakfast pizza. These guys have put up great number after great number.
Goodbye. Casey's is way overpriced. I don't buy shit from them, but lottery ticket.
Sector Spider XLB, and then also within healthcare, biotech, we highlighted this morning in our research, ticker XBI. That ETF has improved long-term momentum, so I think not only a short-term improvement for XBI and biotech, but actually a long-term turnaround there in biotech. So those are a couple of areas, and then you look for yield-sensitive areas like real estate and utilities. If treasury yields are coming down, those are areas that would likely do well relative to the S&P, especially if we see that seasonal weakness.
And last but not least, when you think about what the Fed may or may not do you have a strong, I know you do a lot of technical analysis here,
Technical
and
analysis.
watching for example, you talked about the 10-year bond yield and that breaking support and at 4.2%. Is there anything you're watching for, scenarios, most likely scenarios that the Fed will likely cut for investors going forward? I mean, are there any levels you're watching?
Yeah, I mean, we honestly don't track or have any, predictions on what the Fed may or may not do. It seems like the market is expecting a rate cut, and just what we've seen from the 10-year breaking that 4.2.
Okay, I'm done with you two. I don't know why they haven't invited me on there yet. Good morning, retail traders. This is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. I hope everybody had a pleasant weekend. Didn't drive drinking. If you did, shame on you. Oh, hike. Good morning, summertime. Good morning, Robert on YouTube. I'm gonna go make my tea. I mean, oh gosh, I only got 2 minutes left. Jeez. Do I have time to untie my shoes and put on my slippers? We're gonna find out. No double knot on these shoes. Today's house slipper is brought to you by Polo. Okay. Jim, do you have time to get the platform up? Whoop. Not if you do that. Less than a minute. Oh. Down the wrong pipe. Yeah, they're trying their desperate to bring this market down. The market's overpriced. Going into a deep recession. They just won't stand up and say, government's not pumping any more money in the market. We opened up high, so 6484 is going to be our support for the SPX. SPY, we got a yin yang. Right at 747.42. Make it right there. Yeah, 42. AMD popped a little bit here. Meta, NVIDIA, Apple's pulled back. New high on NVIDIA. You see, I go to the same ones every day. Bob is overbought. Pot stocks are flat. Hillary been staying above $1 till right. I know I set that timer. It should be going off any minute. Oh boy. Already planning my next vacation. AVGO is up. Oh, there's your knife on AMD. Watch AMD here. Okay, I'll be in there in a second. I gotta take AMD call. China. The 12th, the 155 strike. $1.49. Definitely at support. At 142. Oh my darling, oh my darling, oh my darling Clementine. How I want you so bad, but your daddy won't let me have you. Oh my darling, oh my darling, my darling Clementine. This is a little risky, but I don't care. Ooh-doo-doo-doo. Good morning, Noel. Micro devices 185 to 200. Damn, look at NVIDIA go. We're now at 160 on AMD, take profit. 163. That's how you do it. That's how you do it. I'm out at 168. I'm a winner, chicken dinner. La la la, sounds great. Boom, 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 boom. I got out at 168. I don't know how he does it, but he does it. Come on, you idiot. Okay, first trade of the day out of the way. I am here to stay. Do 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 do. Mm-hmm. Tesla is at support to stay bullish unless it goes lower. Three black crows on the SPY this morning. See the consolidation here and the spinning tops. Two of them, long legs, with three white soldiers out of the trade. I would have took that. I'm the master of the three black whores and the three luscious soldiers. See, get out of the trade and look at it's coming back already. Woo! Shall I check it out? Check it out. I'm not afraid, no doubt. Come on. Let's see what the SPY says to me today. We're looking at the Lotto, or I played a Mars. Let's do 650 for tomorrow, the 9th. Okay, get ready. 93 cents. 91. Are we going to stay bullish? Wall Street says we're way overbought. A couple of weeks ago, they tell you to rotate and broaden out. That didn't work. Then they get on Peterman this morning, Leon Cooperman. I'm saying, what the hell are they doing bringing on this old man for? I'm up 15% for the year. So he'd made his money already. So this is the SPY 650 strike. Let me see, SPY calls. Uh-oh! I mean, they bring on these old people that can barely breathe. There's $100. We're at 98. I'm in at 90. The 650 strike. Booyah. Well, I'm up 120 or 140. I think I'll sell it right here. Bingo, thank you. I'm out at 105. And I'm done for the day. I did it again. I don't know how he does it, but he does it every single day. 3 black crows, 3 white soldiers, paper trade out of the way, buy the dip, let it rip, get out of my way. Jim, you're one heck of a dude. Vegas is pointing out QQQ. Okay. I just don't know what to do anymore, Jim. PLTR up 383. Let's look at it. Let's look at it. Double top at 159. Oh, this is snake. 1, 2, 3, boom. Anybody want to hear the first song I ever wrote? Yes or no? La 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 la. We got Oracle earnings this coming week. We got Chewy, Kroger, Adobe. Oh, Jimmy likes. Jimmy likes. La 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 la. Okay, SPY's coming back down again. We got a 1, 2, 3 set up here. Get ready. Prepare ye in the name of the Lord. Now it's going to say, are we going to hold or are we going to break? So as I look at the SPXs, and I asked Patricia, I said, baby, what's for dinner tonight? Anybody going to tell me that I'm in rare form yet? And Jimmy's watching the 6510s at $2.50. Will it be 3 times the charm? It's time to set the alarm. We could have one little pullback here. We're at the 21 right now. We're at 235. Here, there it is. There it is. Prepare ye in the name of the Lord. SPX calls, scalping, the lotto, strike, 6510, woo! At $2.35, almost put 40 in there, and we're now at 310. Take profit, please. Don't ask any questions, just do it. $3.10. 320. We have a 1, 2, 3. Got darn you retail traders. I'll give you plenty of time for number 3. Okay, I'm off to the beach where all the chicks are in reach. Damn, Jim, you're in rare form today. We played Ring Around the Rosie in the pool when I was in Jamaica. I mean, Punta Cana. Out at $3.10. Oh, I already put that in there. It was one of the weirdest vacations I ever went to, because English was not the dominant language here. I went up to this Brazilian chick. I said, "You're beautiful. I know speak English." I said, "How would you like to come to my room?" "I don't speak English." two girls on the lower left. She says, I don't speak English. These two right here. No, it was these two. This one here, she don't speak English. Okay, we're consolidating into a flag right now. Within 2 minutes, we're going to drop or we're going to break out. Within 2 minutes. I'm going to send a message to Squawk Box and say retail traders control this market, not Leon Peterman. Cooperman. See what they think about that. Within 2 minutes, what happened? That's what I thought. Squawk Box, CNBC, retail traders control this market, not Leon Peterman. There we go. I said we were going to break out, and what did we have? What happened? $0.90 to $1.02. The 650 strikes again. $1.04. $1.06. Jim, how did you see that? Well, I'm going to break it down to you. Started back in the year of 2004, 2006, when I realized that Barack Obama was going to run for the market. He was going to be president. And I told everybody around, even Squawk Box, that we were getting ready for a big crash. And they all laughed at me. Everybody laughed at me. I said, you got a guy running for president that all he can do is talk bad about the fat cats and Wall Street. Then the whole protest started. He riled up all the incompetence that you could find in the streets, and the market started to crash. So they blamed it on the housing. I blamed it on Barack Obama. So everybody took their money out of the market. So he ran for president and he won. And then he started printing money. And Wall Street loved it. He became buddies with Wall Street, going to their fancy houses, drinking their high-cost liquor, printing money right and left. And then he come up with a called Solyndra. He gave him $600 million to Nancy Pelosi's family to run Solyndra. Solar panels, and it went bankrupt within a half a year. $600 million. And the money didn't stop printing. $89 billion a month for almost 4 years. By this time, Wall Street realized the mistake they made and started buying back into the market. Shovel-ready projects weren't too shovel-ready at the time, but they put billions and handed it over to the unions. And the market loved it. By the end of the day, the Obamas became worth over $300 million. Thanks to the help of Wall Street. Now we're pulling back. And nobody ever said, Jim, you were right. You called the crash 2 years in advance and nobody believed you. But I met a guy this weekend that remembered me. He says, I remember you, Jim. You called the crash. I said, yeah, you used to be in the penny play, didn't you? Okay, here we are with number 4. So we started a chat room in 2008 called the Penny Play. Then we created a room called the Wise Guys. Then I went on my own and created a room called Wash Stock Watch. And about the time I got out of that, I met Vegas. She grabbed me by the balls and said, come on, let's create a room. I want to take you to Discord. And I said, what's a Discord? Oh, you'll like it. So I got involved in United Traders. I changed everybody's life there. Then we went to Leo's room. We became monitors, and then Vegas and I built our own room. Here, okay, get ready. Number 4. Now, I'm a little iffy on this one here, but I'm going to go for it. The Spy. We're at the bottom of the orb. Prepare ye in the name of the Lord. Let's do the SPX. The 65 tens are now at 190. Let's see if we get a bounce here. $1.90. No, I ain't heard anything about Mike. Kind of upsets me that he did what he did and left without saying a word. Unless he got shot or something. Something bad happened, but I don't know. All I can do is think of the worst. We're now at 225. Then what the hell? It's supposed to be 190. Do 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 do. We got the 9 crossing over the 21, which is bearish. I'll give us just a little bit more time. If not, I'm going to get out. $225. Did you always use Washboardjim as your name in the pity boards? Yes. I always used Washboardjim. That's been my nickname since 1987, 84, 94, 90, 1987. That's how he recognized me back in 2008. We're now at 220. Come on, break. Break. Ooh. Thank you very much. $2.40. Come on. Turn it. Thank you very much. $2.50. I just can't stop winning. I just can't stop it. Oh my washboard, oh my washboard, oh my washboard. God. That Octo, man, look at that sucker go. This is a crazy run right here. I doubt if it has options. No, it's just a stock. God, this thing is nuts. This crap used to happen all the time when I traded pennies. Man, this thing's at 141. Friday at close. I want to short it. Watch you get halted on the way down. Support. Watch you get halted. Well, it stopped right at a support level. Definitely is where I was looking at. In that gap. Next one was $25. Watch SPX here at 185. I gotta watch this. Let me see. Move this over. Octo. We're up to 9. Three black crows with a hammer on SPX. Prepare ye in the name of the Lord as we approach the 63. We're the 65 tens at 175. 65 tins at 175. And I'm watching Octo. I'm going to see if I can catch his scalp. Next one will be right around 32. $32.41, and if that don't hold, 25. Hike. Uh-oh. Jimmy's in trouble. There we go. It's now 9:20, so Jimmy will be having lunch soon after he gets out of his trade. You notice I ain't got any more spam calls here lately? I mean, none. This urinal in Punta Cana saves over 30,000 gallons of water yearly. Ain't that interesting? Say yes. I took a piss in this urinal that saves over 30,000 gallons of water on a yearly basis. In Punta Cana. Well, should I sell it or should I hold? Uh-oh. They tried to tell me to sell it. What's going on here? Sheet. I thought I was going to be out of this successfully. Come on. You're embarrassing me right now. I was wondering why this damn thing... And after this, I'm going to go into the kitchen and prepare me 2 sliders. One with sweet onions and another one with pickles. I'm going to take some chips and I'm going to surround it with hummus. And that'll be today's lunch. I'm up $25. I'm up 50. Let's go. 90. Okay. $2. Thank you very much. $25 a contract. $215. I'm out. Boom. $220. Oh my gosh, $250. How dare you? $275. Fuck. No. 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 It wasn't supposed to go down to that. Oh! I erased it. Undo the text. Phew. I was trying to do this. Can you believe that? $2.75. That would have been $500. Did anybody have the balls to take that trade? If you do, please say yes. Magnificent. Edge took it. You're at $2.90 now, Edge. Great job. For that. Jesse took it, but sold too soon. Well, I think I did too. $2.20. Now it's at $3. Damn. Can you imagine that? I'm now 5 for 5 today. And I've not been here but 1 hour. We were a little nervous on that one. That does kind of hurt. That could have been much better. I did. Well, I did. I don't know. I'm not going to say I didn't see it coming. Hickory dickory dock, the mouse ran up. Oh my God. Why? That's what you get for bragging about using the urinal. May a circle be unbroken by Lord by and by.
Technicals on Roblox. Next up, Adobe reports its earnings later this week.
You need to
Mizuho has
eat.
been lowering the price target here on Adobe. Some pressure on the big picture with AI and all that. Let's see what some of the fundamentals say.
Yeah, Adobe will be facing a really critical test this week because for a lot of these software exposed names, it's been very murky as far as post-earnings reactions. Doesn't mean it's been all bad necessarily, but it's been definitely a mixed bag, and we've seen, at least in the early part of this earnings cycle, software names getting absolutely crushed. So
I mean, it's hard to look at her.
Higher today modestly by about 0.4%. But Mizuho with a price target reduction here, and pretty substantially at that, to $460 a share from $530 with an outperform rating ahead of that fiscal third quarter report on Thursday. While they did mention investor sentiment does remain fairly negative, enterprise checks for the quarter were surprisingly strong, highlighted by some of these large deal activities, as well as, just further shrink in its existing user base. However, they did say the company's web traffic growth continues to really struggle. They do believe Adobe will report modest upside to revenue estimates and find the stock's valuation actually still fairly attractive, again, considering that they lowered their price target pretty substantially. So, a note that would, I think, be more of a mixed depiction of Adobe. But it's interesting when we talk a lot about these winners of AI and the early adopters of that AI cycle. Adobe was one that took off. It was one of the first really names that was praised for its AI offerings. Firefly was a huge early adopter of this trend. But since we've seen that business model challenged and a lot of these newcomers have come in and had more to offer in the terms of AI.
You gotta eat, girl.
Real enthusiasm has been read by the analysts pretty substantially. The good news is, hey, this right now is already priced into shares. So to Mizuho's point, shares are more attractive, valuation has come down, and share price has come down. But it's important to keep in mind the competitive mode that Adobe once really commanded in the various creative editing suite that it does offer. That has lost a little bit of its competitive edge when you have AI tools that can duplicate very similar features to, say, like Photoshop, Lightroom, in the same way that Adobe has commanded for quite some time, and anyone right now using AI can basically mimic those results. Not to say that Photoshop isn't still best in class, because I do still believe it is, but there's other ways to get the same type of video and photo editing for a fraction of the cost at this point.
Right, that's what I was saying, and that's the sort of thing that they're going to have to really talk about on their conference calls and what the strategy is going forward. Rick, what about the charts?
Yeah, so I guess to piggyback on what Jenny was saying, she's very good at Photoshop, by the way, too, at video editing. So I trust her opinion. But Adobe is kind of the first name probably most people think of when they think of this kind of
descending triangle
wild software subscription service where you have to pay a monthly fee to keep using Photoshop or whatever. As we said, there's increasing competition from other sources, and the shares have not been performing
lunch
at all recently here. We did test this old bottom here, 330. That was about our low point recently here, but now we are stuck in this range area. You could argue that perhaps 405 would be one notable upside point here because it was these lows as well as these subsequent highs, but we did have a short breakout to the upside there. So you could also say perhaps around maybe 420 or so could be another boundary. But for now, that's our shorter term range, 332 to about 405 or so. As we sit on the verge of these significant lows, we're below all our moving averages. They're all trending downward here. 375, our darker red line here, an old low point, a breakdown point, and then a supportive area, and then resistance once again. That's another area to watch out to the upside here, giving us an even narrower set of boundaries to look at here. So when we do add our other studies, volume profile, standard deviation channels, this is one of the situations where you can see volume profile has very clear spikes. You can see here, right around 350 or so, that's where the volume starts to thin out again. So that would be a significant point to push above. It also coincides pretty closely with that yellow 21-day EMA. Then 375, the other area that I mentioned here, that's where we start to see another significant significant trading area again in terms of our volume activity. The point of control, the heaviest trading area of all on our chart, comes in at 385. So, you know, this is a notable area to hold on to for this low point here, because if we were to look at our longer term chart once again, there's not really much anywhere near current prices to stop us here until we start getting down to this old area of lows here, near about 300, 275 or so. That's the general range. So the bulls really would want to hold on to this point to protect against that possibility.
Last but not least, Western Dig has been on a tear. In 6 months, it's up 120%. Let's take a look at this. And Citi still positive, right, Jenny?
Citi is still positive. So actually, yeah, price target raise here on Western Digital to $110 from $88 a share. And Citi did keep a buy rating as well, so still has some bullish conviction. But the analyst left Citi's specific technology conference increasingly more positive on storage fundamentals overall, and said that training and inference-led AI demand will drive the need for storage components now into 2026. So they did up their price targets across the storage industry and the component space post this conference. Western Digital today, though, a bit lower, so underperforming a lot of our tech names here. We're modestly lower at that, and I will say also to speak to Western Digital's really strong outperformance as of late, a very different looking chart and different enthusiasm than we've seen in names like Adobe, for example. Obviously incomparable, but Western Digital reminding us that it has more of this hardware and very lucrative AI reach that perhaps other, various software names are somewhat lacking here. And I think that you look at the chart, price speaks to itself. It's been in a really reliable and consistent uptrend with some modest dips, but I think that this outperformance of the name really speaks to the favorability right now it's still seeing in this AI hype cycle.
Okay. What do you think of the chart here, Rick?
Yeah, technology is kind of a tricky sector sometimes, as we said with software, not doing so great, and really it's thrown off very much by Palantir. That's the outlier that's up tremendously here. But storage is a really strong part of tech here that we can see. Western Digital, really just a very narrow, tight channel was formed during our climb to the upside here. Upside breakout that drifted sideways for a bit before testing the confluence of our channel and our 21-day exponential moving average before taking off once again here. We didn't really retest that old low, or the old high that well, but I think 82 would be more of a noteworthy area because it was our high point, and then it was our high point once again before we had our recent gap up here. So that would perhaps be the area that bulls might be looking for a potential retest of. And now it's presently close to our 21-day exponential moving average, our yellow EMA there, just a bit below that 82 mark, so that could be a supportive area to watch. Now, to the upside, well, that's a harder question to answer here. We can see a little bit of bearish divergence on the RSI in the longer term here, but in the shorter term, RSI is overbought, and it's still making new relative highs here, so that would be perhaps a bit more misleading. The crucial test would be if we retest the old supportive area and start to break down, and we get a similar breakdown in momentum as well. So now, when we look ahead here, we can see that our standard deviation channel study, the +3 channel, our red line here, comes in just about at 100 here. So that's our linear regression line of best fit, 1, 2, 3 standard deviations to the upside to give us a potential idea of where to look for a resistance or a slowdown here. The +2 channel comes in at around 88.43 or so. That could be a supportive area. When we do look at our longer term picture as well here, really just it captures how strong the push to the upside here is. I think we're up about 230% or so from this low point, not even really looking back at some of these old areas where you might have expected resistance.
All right, Rick Ducat there on the charts. Jenny Horn with the fundamentals. Thank you both so much. You looked at Roblox, Western Dig, and Adobe today. Thank you both. Coming up, a quick break, and our market meetup panel is standing by. We have Joe Mazzola and Sam Bottas to go through all the details, everything you want to know about this market. Morning Feed Live. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Broke it.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Morning Trade Live. It's time for our market meetup panel. So much to discuss. Joining me here on set, Sam Vadas, and of course our own Joe Mazzola, Director of Trading Services at Charles Schwab. Great to see you both. Joe, I know you're very focused on what the Fed may or may not do. The tool, the CME tool, showing a cut, right? Your thoughts?
Well, I mean, look, I think right now, if you kind of look at what the markets are proposing, or at least the markets are expecting the Fed to do, it's a 90% chance of a 25 basis point cut. I think what's more interesting is the fact that we started to see that 50 basis point cut come back into play. You know, not high chance, about a 10% chance, but you know, at least enough to kind of raise the radar a bit. You know, for the Fed specifically, they're going to get a lot of data that's going to be helpful in that decision this week. You know, PPI kicking it off, and then CPI. So, you know, last time we got that producer price index, the PPI, it was way higher than expected. Came out about 0.9%. You know, I think it definitely showed that there were some tariff implications in that data. CPI wasn't quite as high. But, you know, look, we're moving further and further away from that 2% that the Fed likes to see.
$4.50.
Inflation and inflation expectation. We're closer to 2.93% potentially when we get the data out. But I think what's interesting is taking into context what we saw last week with the employment data. You know, there's dual mandate, right? You got employment and you got inflation. So, you know, the Fed's in a little bit of a tricky place, but we'll see what their decision looks like.
Yeah, understood. Okay, what about, you know, we're also focusing, thank you, Joe, for that. Also, technology continues to be in focus. Sam, you're taking a look at that.
Yeah, it certainly is a tech-driven kind of day at the moment, Nicole, as we await these other macro updates. And so we
Macro
are seeing the
updates,
NASDAQ is hit a record this morning. A lot of...
Today's lunch is chips and hummus, garlic flavored, with a pickle burger and a sweet onion burger, all in the slider style, with a cheese chip. And I do have cheese on my sliders, along with the pickle and the onion. Looks good, don't it? No cleavage today.
Momentum changes, they will change how they're operating.
Yeah, absolutely. It's been interesting when you look at some of these price targets, and especially for the expectations on the S&P 500. To your point, Nicole, I mean, David Costa at Goldman Sachs is looking at the S&P 500 to rise by 2% through year end. And by 6% mid-2026. No doubt some of this being driven by earnings, the AI story, the expectation of the rate cuts coming in. You know, it was interesting as far as what Joe was saying about also some of the hedge fund community as well. Kenny Bukhari out with a note this morning talking about how they've been at it again, that betting the market is about to crack, short positioning in the S&P futures contract jumping to $180 billion. So it is interesting times. I would also highlight, particularly as Joe was talking about the appetite for fixed income, and we've got the 10-year at 4.06 right now. They're obviously levels to watch, particularly with these rate cutting bets now very much baked into the market. But then you've also got, as far as a safe haven bet as well, I mean, gold piercing through that 3,600 level as well. I mean, we've very much seen the appetite coming from the central banks, but it does look like, you know, as far as the safe haven playbook is concerned, this has really been benefiting from a lot of that, you know, throw in the geopolitical concerns into the mix as well. And then you've obviously had these record highs that gold has been touching too.
Yeah, and Joe, quickly, just sentiment overall. For the most part, sentiment's been somewhat weak. We did see a bright spot at one point, but then it seemed to falter again. And that's something that we're waiting on, right?
So you said sentiment?
Sentiment.
Yeah, sentiment. Yes.
That's something
yeah,
you're
so
watching?
Yeah, no, I mean, sentiment's always important. And
Nicole,
I
you don't
think
look too
sentiment,
hot today.
It tells you how bullish or bearish the market is feeling. And look, feeling, I think, to a certain extent, while you're talking about it from whether it's retail side or institution side, retail, what drives that sentiment? Well, I mean, as markets are going higher, for the most part, you tend to see retail feel pretty good because why? Because they're seeing their balances go higher, and why? Because they own stocks. I think it comes to a certain point though where there's this kind of conflict between kind of what people are saying and what they're doing. What we're hearing now, at least from that perspective, is we're hearing a little bit more bearishness, but we're not actually seeing that bearishness in terms of what the retail side is doing. So
That's
there's
right.
a little bit of a conflict there.
We're not
And
bearish.
When I take that into consideration with what I'm seeing on the institutional side, I think that's an important call out. The one thing I will say though is this. Is that we're not seeing hedging activity step up to the point
Megaphone.
where, you're seeing the institutions kind of step in and buying a lot of that downside protection. I think if anything, maybe they're peeling off some of their longs, but they're not buying the downside protection to an extent that it would show that they're really worried about a big pullback.
All right. Well, it's great to see you, Joe Mazzola and Sam Bottas. Thank you both so much, our market meetup panel. Always amazing. All right, friends, thanks for being with me here on Morning Trade Live. I'm Nicole Petalides, live at the New York Stock Exchange every day at 9 a.m. and 2 p.m. here on Schwab Network. Keep it right here. Trading 360 with Diane King Hall next.
Nicole, I want you to be a little bit more spunky.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row.
What'd you think about that Karen at the Phillies game? I thought that was, that's childish. And she's a school administrator. Democrat. She looks like Elizabeth Warren. This guy played real cool. I like. That's my ball. It's not my ball, that's my ball. So this is called a megaphone here. What was resistance now becomes support. We came back for 3 times and touched it. Thinking about opening up a slider house. I took sliders for the homeless when I retire. Man. Okay. Oh, I got that thing still plugged in, I think. Ugh. Are we going to go higher, or we're now into that pastime of scalps are over? I'm waiting for my opportunity to point itself out. I'm a little iffy about jumping in now. That resistance would be 65.0709. Ed I wish I'd held them. 5 of them. I would be up $1,500 on them 5 at 175. Okay, we're getting up to resistance. Kind of wants to go higher, it seems. Kind of hesitant. A and D. I had the 155s. And now they are at 180. So that'd been a $500 trade. I got out at 168. Made 300. Okay, here we come. Here we come. A little hesitant, Jimmy said, and he noticed it. Prepare ye in the name of the Lord. Get ready. $4.10. We're going to play the exact same calls. You could drop it to 65.20. Prepare ye the name of the Lord. Prepare ye the name of the Lord. They're now at 390. The crowd's getting patient. I'm going to watch this here. Get ready. Hmm. Okay, we're at the 50 right now. We're at a double bottom. Oh, here we go. We're going to hold to 63 at the top of the orb and get ready to get in. Prepare ye. Here it comes. Can we get another $20 less? I might go in partial here. Oh, there it is. That's what I wanted. Thank you very much. $3.20 off the 63 EMA. La 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 la. There's my 310 I wanted. Right to the orb. Hey, Betsy. Turn on the air conditioner, honey. He's in $3.20, the 65 tens. Can he hold him and be bold? We're at the top of the orb. We really need this to hold. Not trying to be bold. Can you do it, please? This is some risk. $3.50. It's $3.60. Now, if we break this, we'll go much higher. If not, you need to take profit, please. Anybody take this position? We're at 360. Okay. $3.70. $4.10. Yeah. I'm out. Thank you very much. For I'm Washboardjim. Bingo, baby. What do you got to say about that, room? You miss the scanner nowadays? Give me $238 a month and I'll get it. I got tired of paying for it. Nobody helping out. Begging for people to help. $430, baby. Well, that was a beautiful call, James. I don't know how you do it. $4.60 frickin' cents. $5. Holy tomatoes. Well, shit. Oh, my darling, oh, my darling, oh, my darling Clementine.
Oak.
I'm sitting here patient, waited for a while, needed this thing to drop to the orb to make me smile. It hit the 63, that brought me to my knees. I jumped in at 320 and sold it too soon. That's the story of my life. That's the story of my life. Just hold it a little longer, I might find me a wife. That's the story of my life. That's the story of my life. Just hold it a little longer, and I will find a wife. Well, it hit the orb, bounced off the 63. I jumped in it, told the crew, get in it with me. We took it for a ride. Now it's starting to die. Take your profit, and I'll take 10%. That's the story of my life. That's the story of my life. Getting out too soon. Wait a little bit longer. That's the story of my life. That's the story of my life. If I hold a little longer, I might get a wife. Whoa! Okay.
What you're seeing is utilities and independent power producers are catching some traction, a la artificial intelligence spending and some of the private sector capital development.
Okay. we're expecting one this month. How important or how does that play out as a potential tailwind for utilities or for defensive plays?
Yeah, I think so. So to your point, when you look at interest rate sensitivity, utilities are highly interest rate sensitive. So a 50 to 75 basis point cut. We've seen some of the forecasts, even think 25 to 50 basis point cut. Utilities,
Oh, shut
because
up.
of the refinancing and interest rate sensitivity, you could see.
These fat cats have no clue what they're doing. They're running this market up on speculation. We're at the 63. KR, huh? Watching me look at it and thing drops. Damn. Do you like the song, Randy? Kind of has a ring to it, don't it? I guarantee you, if I'd have held all them trades, I'd be probably worth over. That's a small, 5 million. That's a small estimate. Somebody traded it. We're reopened here. Prepare ye in the name of the Lord. Let's look at the Fibonacci. We've got a double top off the wicks. I like it better up here. Oh, just got a new high. Pennies are back. I don't even think Zach's pumping this one. Should I go make another cup of coffee or chai tea? That's the question for you and me. We're at $3 on the SPX. We're back to the orb. Ladies and gentlemen, make a business decision. Are we going to hold the orb, or are we going to hit my previous support level? The crowd is going wild in expectations that I think I'm going to go in small because I went to the Battlefield Mall. We have to see, or I'm going to sing Let It Be. And you don't want me to do that right now. These are the 65 tins at $3 off the orb below the 63. Uh-oh. Uh-oh. It could drop. This weekend I'm going to be mowing about 4 acres on my property. Be using a bad boy lawnmower. I want to build a little bitty A-frame cabin off grid. And I got to see how that Elon Musk satellite works. Oh boy. We just hit my support. Damn it. Well, time to add 240. There's my support level, 649917. Oh. Ooh. Now this don't look good at all. Think about stopping out if this doesn't hold. We could easily hit this. So close to that, I don't want to sell it yet. We got 4 of these. And I'll double down and get 8. If we hit the 200. Oh, that's. Oh, left 11 grand on the table. I'm down $280. Why do I have to eat something when I'm down? Panic button. Found a new judge I'm in love with. Judge West. I'll share her link in a little bit. God damn, he looks badass. There she is. She's sexier than heck. What happened to the black and whites? Get over with it. I'm even. Either get out now even. I love you. Why couldn't you be my judge when I got in trouble? I'd blow you a kiss. One that you'd never forget. I'm not guilty. It wasn't me peeping in your bedroom windows. It was your neighbor. I've always had this thing for women in uniform. Does that make me a bad person? $2.75. Let's go. We're at the orb, so I either get out now, and I'm up $40. $2.95. $2.95, $3. That's when I wish I'd have bought the dip. $1.80. If I'd have bought 8 of them, I'd be up $1,000. $3.20. Thank you very much. Anybody get stuck in that one with me? Because we're out now. That's 8 for 8. Washboardjim had it on. Washboardjim got out of his trade at the 50 SMA. KRKR looks like it got halted again. Randy off the 21. We got earnings tonight on RBRK by Vegas. Ooh. I don't know about this one. Looks a little overbought. Washboardjim. Kind of glad I got out of that trade. I'm going to go into the kitchen and make some kind of drink. It's either going to be coffee or a chai tea. I went out and bought some Mexicana coffee beans. Randy, do I sound sexy? Yes or no, honey? Randy thinks I sound sexy. Angel, do I sound sexy right now? Angel, honey, I know you're listening. Ask your old man if I sound sexy. I know what Michelle will think. We're back at the orb. Michelle's probably rubbing her bosom right now. Okay, get ready. We're getting a little choppy. Uh-oh. Lunch lady. Not darn, Randy. Penny stocks are going crazy today. What the heck's going on here? Come real close to hitting my support level. I didn't have an alert set, so that's my fault. OCTO. Okay, I'm gonna go get my water going. I'll make a business decision when I get in the kitchen. We're coiling. We're flagging out. It looks to me like we got halted again on OCTO. Double top. They're trying to give it fear. Okay, here's 220. Got a double bottom. KR, oh, watch KR here at the 50% pullback on the fibs. This is China, right? So I don't know about China. We're definitely at the 50% pullback. bald. I can't picture that. What we need is a breakout. As I go into the kitchen and prepare my coffee, I think I'm going to froth my creamer. Oh no, this ain't looking too hot. I'll be right back. We're at 160. We're at the double bottom here. This really needs to hold. I'm not in very big on these, but I was thinking about doubling down. which means that'll give me 6. I think I will. No, I might want more than 6 now. More than 4. That's at 120. Well, shit. $1.30. Now I have 8. $143 average. I have 8 contracts. We're at the 200 EMA. I have coffee mocha. Ah. Kroger, KRKR halted again. OCTO, God, look at $71. This is crazy. This is nuts. Randy said we might go to 80. Minute, we're about to hit the 63 on the /ES. Whatever, we scare off funk or what? Back to even. More drama. I think it's better stop flirting with me. OCTO new high. $76. Brandy got that one right. We're back to the 200 here. I don't know if I should sell this and take the small loss or see if we break it. If we can get up here, I'm going to say we're going to break. I should have bought more at the dip, but I didn't. 8 more. 110. That'd give me 16. OCTO, $80. There we go. This thing ain't really moved that much. Huh. Traders eye upcoming inflation data, not me. Apple products, Keynote, Okay, here we go again.
What I read, they're coming out with about 4 phones, maybe a new earbud, maybe a new watch, or a newer version of the watch. Nothing that's going to be brand new, but if they show some promise in this, the ecosystem, the word is they're going to sell, where are my numbers? About 232 million iPhones in 2026. That is an incredible ecosystem that they have going. And just keeping that ecosystem going seems to be more than enough. I mean, and this company seems to amaze me, but whatever Kevin Hinks uses for AI, be it Gemini, be it ChatGPT, be it Grok, guess where it's going to come through? It's going to come through an iPhone, Andy, right? There's the one thing that is consistent in all this. I don't know which AI company I'll settle on, but I do know where it'll come through, and it'll come through an Apple product.
Yeah, I think that's a really good point. I think that is kind of the the essence of Apple's arrogance, and I think it's a well-deserved arrogance. It's it's exactly what you said. We really, I think Apple correctly saw AI and these LLMs as apps that are in their ecosystem already, and that Apple's ecosystem was going to be more important for those applications, those AI applications, than those AI applications are to Apple. And I think that that's the bottom line. Now Apple's in a very powerful position to pick its partner. And that is, once you start talking about that, you start talking about who Apple picks as its partner to power Siri, which is laughable right now compared to the other solutions out there. But once Apple picks that pretty much decides the winner in the near term of the AI race. And so Apple's in an extraordinarily powerful position, as they always are, because they have the distribution.
Okay, here we're going to the
which is
org.
what you hit on. And
this is where I add.
Distribution is king. Their ecosystem is monetizing it, and it's all systems go. And I think their consumers are ready for an upgrade and ready to spend more money with Apple. So it's a really great scenario for Apple going into this keynote.
70 cents.
Yeah, I have a 16 because I upgraded about a year ago. I don't need a 17, but that doesn't mean a lot of people don't. A lot of people that were waiting. Remember, just like Jerome Powell probably will never use the word transitory again, I don't think Apple will ever use super when it matches up cycle. I don't know if they'll ever use the term super cycle again, but they'll use cycle, and they'll use that people are going to want new phones. Why? Because it's new, and that's what we do. You buy a new phone, and 2 years later, it doesn't matter if that phone's broken or working perfectly, you want a new one. And that is what, and a thinner model, I don't know if a thinner model is the right answer, because it doesn't sound like it's more powerful, doesn't sound like the battery is as strong, but it's still thinner and it's still smaller, and people will choose that, Andy.
Yeah, they will. And you know, if you've been on the sidelines waiting, this could be enough to tip you over the edge. That's really all it takes for Apple. It's, you know, there's not a lot of iPhone users, and this shows through all the time, very consistently in like Folio data. There aren't very many iPhone users that are looking actively to switch to an Android phone. It's almost non-existent. So what they're doing is they're sitting there waiting and saying, is now the time to upgrade my phone or not? And so eventually Apple gets all of that money. It doesn't matter.
I've never had an Apple iPhone.
Ecosystem, and the services revenue continues to grow. The Apple Pay usage continues to grow. The apps payments continue to grow. And so that's where Apple is. They're the king. No one's coming close to dethroning them. And the AI applications are vying for that partnership status rather than competing with Apple. And I think that's the perfect place for Apple to be. So I'm excited about the keynote tomorrow. Very excited about the potential of them announcing a new partner. I'm with you. I don't think that the hardware is going to be, you know, super magical moment. It hasn't been for years, but Apple has continued to wow its users and to capture more of their wallet every single year. So why should this time be any different?
It's just amazing to me, Andy.
I just can't see throwing that kind of money in a phone.
10 years ago, the most powerful computer that you could probably have in your home is now just this. It's just your phone. It's amazing.
All I do is watch
Just
YouTube.
on your phone now. Andy, I
Take
appreciate
pictures.
you coming on as always and giving us the Folio data. We look forward to what's happening tomorrow, and now we have a pointed direction in what we should expect for tomorrow, Andy. Thanks for coming on.
Yeah.
Thank you.
All right.
Good job,
now,
Andy.
Let's look at my view as a trader. We cannot argue with Folio's data. It's always consistent, it's always spot on, and it's a massive sample size. So we have to respect the Folio data. But historically, and the first thing Andy said is so important. These events have become less and less important, especially after some of the disappointments of the last alleged super cycle, right? So how do we trade this? Well, if you see the stock is slightly down today, right? Just about 1% lower today. So what I want to look at is, because the skepticism in me looks at the history, and there's often people come away slightly disappointed in these Apple events, even though, because unless they surprise us with some partnership, what Andy just mentioned, or something like that, the overall streak could come as it always does, and it could become disappointing. So what I did, looked at a trade, and there's two things that are important. Number one, the direction of this trade is a put calendar on the downside. Not a big put calendar, only down to the 235 strike, but the other one, the Vega component. Why? Apple's implied volatility. It sits on the thinkorswim platform. The Ivory percentile is currently a 13%.
Go, 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 go,
This
go.
morning, because the stock is down slightly. It was 12% this morning. So what I want to do is, I want to buy some Vega, right? I want to trade Vega, buying it low, selling it high. In this case, it's low. It's in the bottom 8th. I want to buy Vega. So what do? In my put calendar, I add Vega by bringing my date further out. So I bought the October 3rd 235 put, and I sold this week's 235 put. Now, the implied volatility in this week is elevated. Right? It's currently at 29. There's an expected move of about $3.50, which means there's an event coming, right? The market maker move signals an event on the horizon, which is tomorrow. So, based on that, I looked at the October 3rd, September 12th, 235 put calendar. I put it in for about 230, trading about 245 right now. So again, a little uptick in implied volatility, a little direction on the downside. You get the kind of the double win here. You get the implied volatility going slightly higher, and you get the directional play. So it went from 230 to 245 since right after the open this morning. Now you're collecting theta. The risk is the whatever you spend on the trade that you haven't paid is the risk on this trade, and because it's a 3-week trade, you do have the opportunity to extend duration. You can buy the September 12th, sell the September 19th, right? Buy, then do it again and again until you get to that October 3rd. And at any point during that time, if the market's open, you can close the trade if you get the move you want. So, looking at something between 230 and 245, collecting theta on the trade, looking for a slight downward move, not a significant downward move. Stock's trading 237. This is almost considered now a range-bound trade. Now, you could also adjust your strikes on the downside because the stock has moved since we looked at this. Adjusting the strikes, doing that price discovery on the different the different strike prices is something that you should be doing anyway, and checking what the best value is. So a put calendar, a 3-week put calendar in Apple, focusing on the 235 strike. I call it more slightly bearish to actually range bound. It's only got a 5 delta, but it's collecting a fair amount of theta, and it's got a fair amount of vega, about 14.7 in long vega. All right, let's take our final break of the show, come back with a market update, and then George Tillis is going to talk about our final trade of the day, and that is Home Depot. Take our final break. Come back with more Fast Markets. See you in a few minutes.
Come on now, I was even in green for a bit. Don't pull back. Come on. Damn it. I have no clue how them guys are talking about buying this and buying that and doing this and doing that. The company Apple with industrial competitors, technology, storage, and amp. P-E-R-I-P-H-E-R-A-L-S. Peripher. I've never seen that word before. I'm gonna look that up. I don't know what that means. Shut up. So it's P-E-R-I-P-H-E-R-A-L-S. Peripherals. Peripherals. How to pronounce it? External devices. P-R-O-U-N-C-E, pronounce. Peripherals. Peripheral. Peripherals. Peripherals.
Peripherals.
Peripherals.
Peripherals. Peripherals. Peripherals. Peripherals.
Peripherals.
Peripherals. Peripherals. Peripherals. Peripherals. Peripherals. Peripherals.
Peripherals.
Peripherals.
result from a peripherals pronounce.
Welcome to How to Pronounce. In today's video, we'll be focusing on a new word that you might find challenging or intriguing. So let's dive into today's word.
Peripherals,
which means
devices connected to a computer to perform various functions or tasks.
Let's say it all together.
Peripherals. Peripherals. Peripherals.
We'll be focusing on a new word that you might find challenging or intriguing. So let's dive into today's word.
Peripherals,
which means
devices connected to a computer to perform various functions or tasks.
Let's say it all together.
Peripherals. Peripherals.
Peripherals.
Peripherals.
Peripherals.
Peripherals. Peripherals. Peripherals.
Thank you for joining us on this adventure in pronunciation. Remember, language is a journey, not a destination. Keep exploring, experimenting, and expanding your linguistic horizons.
Are you a real
we'll
human?
See you next time.
Peripherals. I've never seen that word before, and I have had no clue on how to pronounce it. Now I know, and I know what it is, kinda. George, peripherals.
For margins, maybe that's where we're actually seeing the stock really expand, particularly in the last couple of months. Even though interest rates expectations are falling, I think the
George, peripherals.
players in the fulfillment and, of course, building material space is really creating this vertically integrated secured monopoly, not necessarily a monopoly, but a duopoly in this space, which again is very, very accretive to profits.
Yeah, we talk about the Home Depot Lowe's duopoly a lot and the competition between them. We also talk about how the pro segment is dominated by Home Depot. Lowe's is trying to compete more there. Lowe's seems to do better in the do-it-yourself market. But George, you're talking about growth. You're talking about them expanding their footprint into other areas, and it sounds like to me like a company taking this. They have aspirational views of housing going forward, and they seem like they're getting their ducks in a row to expand themselves. If housing were to pick up, new building homes were to pick up, is that what they're doing? Are they getting ready for the next housing boom?
Well, I think so. I mean, one of the things, I've noticed is that there's a lot of existing homes back on the market right now. I didn't look at it compared to maybe 10 years ago, but just anecdotally and observationally, it seems like there's a lot of churn happening in volume. So typically speaking, existing home sales would typically, under many conditions, require upgrading.
I'm still in this piece of
and
crap.
maybe some materials. That may be a primary catalyst for Home Depot. But I think the other thing is through the acquisition of GMS Building Materials, it actually doesn't necessarily give them more exposure to residential, but it also gives them more exposure to the commercial contractor space. And if they can actually start to control the supply and pricing in the commercial contractor space, that's an area where, again, they'll generate some marginal revenues without much additional cost. The acquisition itself, which was around $5.5 billion, I mean, relative to market capitalization, Home Depot now, Kevin, at around $417 billion, wasn't all that big. It's basically a little more than 1% of their total market capitalization. So I think this is just a movement that the company's making to increase its exposure, to control the supply chain of materials a little bit more, but also to generate more profits from fulfillment as well as contractor services, not necessarily just building materials or end retail consumer materials, but really getting into that wholesale fulfillment market, which again is a way for them to strip out more profits. So I think this has been a good strategy for Home Depot, and I do think that going forward, assuming that existing home volume sales starts to improve and get that more of that churn rate, that'll create some more demand for home improvements, which again will trickle down to companies like Home Depot and Lowe's.
Home Depot, a fascinating company to look at, George, as you know, when it comes to housing, whether you're building a new house or repairing the house that you currently own. George Tillis, we appreciate you coming on as always, George. Have a great day. All right, now, Home Depot, looking at a similar type of strategy in terms of structure, but we'll move from the calendar spread to the diagonal spread, right? Same dates, buying October 3rd, selling September 12th, except this time we're bullish in our posture. And this one, talking about the diagonal spread, builds a vertical spread into that calendar spread. So we went to the October 3rd, bought the 415 call, and then we went to this week's September 12th expiration and sold the 422.5 call. Right in line with the expected move for this week, about 7.5, between $7.5 and $8. So doing about a $7.5 wide call diagonal in Home Depot. Now, here's what it does. It gives you a bigger long delta. The delta here, $26, 26.5 deltas. But the trade-off there, it costs you more, right? The trade in
We broke the flag.
Apple was much less of a debit than Home Depot. Now, this, because of the embedded vertical spread and the time involved, the debit here is about $7.75. Now it's trading over $8.30. So Home Depot has moved up as well, and this trade has gotten more expensive. So the risk on the trade is the debit paid. Now, you look at something that buys as much as 27 Vega on this trade. So again, the Home Depot IV percentile is currently at 4%. So almost as low as it can go. However,
I'm green.
And then keep going
Let's
lower.
go.
But implied volatility is low for the last 52 weeks. So buying the October 415 call, selling the 422 call in this week does allow you to extend duration, chip away at that net debit, also chipping away at the break even on this trade. Remember, when you trade a $7.5 wide spread and it's trading a little over $8, there is some risk on the upside. So if we're to get close to that strike, you may have to need to make an adjustment on this trade. But it's a bullish trade that embeds that vertical spread into the calendar, thus making the diagonal play. So a little more aggressive here. But like I said, because you're putting time involved, if you were to shorten the duration on that long option, it would be significantly less than the debit you're paying here. So, but you're giving yourself time to add the Vega component to this trade. Buying low, selling high is not just in terms of stocks and options, it's also in terms of implied volatility. So that defines or directs the strategy that we're about to put on. So that's the way we look at it. Some of the strategies may be a bit redundant when implied volatilities are lower, but that's what we try to teach. All right, that's our show for today, everyone. We'll see you tomorrow with another edition of Fast Market for all of us here at the Schwab Network. Have a great day and a great afternoon. Alex Coffey, Jenny Horn coming up next with Next Gen Investing.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7.
This has been a long trade. I broke out the flag, so I'm feeling a little bit better. I think we're going to get to 64.98 to the 200. We'll know shortly. Better I get out even and not worry about it no more. And I think I could. Let's see here. After this trade, I might take a 10-15 minute nap. Coke. Hello. Oh, I'm sitting here watching your stock. We're at the 63 right now. Yeah. What's the size? A lot of what?
The accounts are blowing up.
Oh yeah. Penny stocks? What's that mean? Yeah. What do you mean by blowing up? Well, oh, you mean they're getting stuck?
Depends where they bought it.
Yeah.
When somebody's buying it now, it's $80, it's in the red now.
Yeah, I wouldn't be doing that.
Okay.
Very good.
Can I say hi?
Huh?
I said, it's all right, say hello.
Oh, okay. Well, hello.
This is a star.
She is a star. She's a 10.
I'm a 10.
You're 11 out of a 10. And I'm a 12.
Jimmy is the best. Jimmy is the best, everybody.
Yep.
My room is the best.
Okay. You tell your room that.
Yeah.
Okay.
I talk about all the time.
All right.
I'll talk to you later, buddy.
What are you eating? You there?
Am I eating a waffle?
Oh. Oh, really?
Yeah, I made my own.
You need a slider.
Let's use the waffle maker. I haven't heard you make it in a while.
Well, if you should look at the picture I sent you, there's a cheese chip on top of it. Oh.
Okay, watch Octo's gonna reverse.
And I also used the frother today.
I'll see you at $100, okay?
Yeah. Bye. Apple's at support. I don't know why they were pumping it. It says Apple iPhone 17 likely to have marginal change. They're using all these big words, man. The hell's marginal change? Marginal change is a small incremental adjustment. Well, that's not what they were talking about. They were acting like it's going to change the world. 11 examples of a marginal change. I don't know about this. Marginal change. Some more drama. Tesla has a new low. It is now noon in Missouri, 1 o'clock Eastern Time. KR bounced up about $4 from its triple bottom low there just now at 844. We're at 1367. OCTO is hovering at the 63 right now, forming a wedge, getting ready to squeeze here shortly. Either way, here's your wedge. Jake Paul. Fatten up, buddy, for the big fight. Okay. We're going to hit 4777 again on OCTO. When stock surges as Dan Ives joins board amid crypto push. Oh. Dan Ives joins their board. Good job, Randy. So now I know why that thing ran like it did. I love you, Judge. Anybody ever fell in love with a judge before? Randy, you ever fell in love with a judge? You're sick. You're a sick man, James. Apple's had too big of a run. I can see why they wanted to buy puts. Although they're pumping it. Oh, I got a message. Isabella sent me a message. Can anybody read this? I have no clue what she wrote. I hope it wasn't dirty. Isabella. Translate. Hello, thank you for your interest. I hope you can have a good. Hope we can have a good communication. Not really. That's funny. Echo, what'd she say? Oh man, that's funny. She's Turkish. Yep. Yes, I am. Yes, I am. I've been waiting and waiting. I was up there for a bit. $58. 56. I'm still in it. I need 107. No, that's a spy. Never mind. Yeah, 107. We're at 70. AMD new low. I think I'll go get my water and a shot of prune juice. And I'll be right back. Oak. Good. Bliss. Well, there's skin and bones. She doesn't look too attractive today at all.
We always say this. First thing you should see then is, hey, probably not the highest probability of success. Also notable, this has to be by the end of next week. So you got a little bit of time. Maybe you got to pop around earnings, and it continues. What did George call it? The gap and go. Maybe you'll need a little gap and go.
I love the gap and go. And also, yeah, good point about it not being an earnings pure play per se, but I was also playing into.
She loves the gap and go.
Volatility with its earnings.
Is that a new?
The close.
They don't learn all kinds of stuff today.
And Kava was, I mean, it's, to me,
What's a
still
gap and
one
go?
Of the tried and true IPOs that was like igniting our IPO enthusiasm because I covered this name when it went public so intensely, but we've said
Gap and go is a day trading strategy that involves
really
identifying stocks with
its earnings event. New 52-week lows today, though, Rick. I mean, what are you seeing from this chart?
Shut up for a second. Gap and go is a day trading strategy that involves identifying stocks with a significant pre-market price gaps and then trading the momentum in the direction of the gap, aiming to profit from the initial strong move. Traders look at high volume during the gap to confirm the momentum, often using scanners to find these opportunities and entering trades with the first few minutes of the trading day to capture this short-lived, powerful move. Gap and move, gap and move. Former resistance. There's the gap. Now I'd like that, but I would expect it to pull back and hit that and double bottom. So this runs up. Here's a gap right here. They seem to have missed. So this is what I would say. Come back and hit that. I don't know if that's a gap. Oh, there's the gap here. So it came back and touched the gap. Yeah, I talk about the gap trade. But I've never heard it called a gap and move. Interesting.
We can see price stuck right now. So if we were to move lower on a long-term basis, 58 lines up with an old high and subsequent low. You can see 71.50 high, low.
Look at that reversal in Apple. Dead gummit.
So that would be resistance.
I knew it was coming.
Yeah, and a name that is lower today.
Double bottom.
It's come back off its session lows, but still down about 2.6%. Appreciate it, Rick, our chart master, of course. And now, as we do look to trade,
Perfect setup.
again, for example purposes. I mean, it's been a disappointing trade, but the one thing I will say in a caveat is at least it hasn't just been Kava. It's been wide across a lot of these more mid-tier cost type of
Jim.
Fast convenience.
Yeah, thank you.
We're watching.
But that in some ways, though, is also alarming, right? It's a category, it's a sector weakness, and maybe it's not just Kava, and maybe that means it could last a little bit longer. It's always really difficult to get to a bearish conclusion and think that there could be a lot more downside when the stock's chart looks like it did. But it's also equally tough to try to pick that bottom and catch that potentially following knife. So I looked at a risk-defying trade that looks for maybe a little bit of a bearish trend continuance, but gives it some room to perhaps find some support here, bounce a little bit, and then maybe resume downside.
No.
So it's a short call vertical.
It's not going to resume downside.
I look to a weekly option in this case because the monthly options only had $5 wide strikes. The weeklies had $1 wide strikes. So you can make this trade a little bit smaller with the weekly options. Went up to the furthest dated weekly availability of October 24th. So about a month and a half away from now. And looked at the 69.71 short call vertical.
Chewy's got earnings this week.
Going with the trend, but acknowledging that
It's
might
up
be
too
right
high.
for some sort of short-term bounce at the very least, giving it a little bit of cushion. 69.71 collecting 50 cents means you risk
Target's at
150
support,
chance to
but
make 50.
this is a
3 to 1
Cisco's got earnings this
I
week.
think high probability of success. Exactly the opposite ratio.
It's up
that we
too
just had
high.
The last one, 69.50 is the break even. So in this case, stay below that break even where we're at now. You can make that $50, and you got 150 in risk. Where the other was the vice versa. You're in the risk zone. You want to get out of it and make that 3x if you get the big rally.
Yeah, and obviously one that has plenty of duration here, a more long-term example trade, but going all the way out to October 24th. We will leave it there, though, for Chartmaster today. Now, coming up next, time to talk App Lovin' as its inclusion into the S&P 500 right now is fueling this market optimism.
I'll give Jenny a
10% today.
1 for the way she dressed today. /ES trying to break the VWAP.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle
the whole picture. Everything comes full circle on trading.
Yeah, I saw that. I missed my
Catch us
chance.
right here at the New York Stock Exchange on Trading 360.
Wasn't paying attention.
Only on Schwab Network.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management.
Here we go again.
in the
Let's break it.
biz.
We got a triple top.
Uh-oh.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
We're having technical difficulties. We've got a triple top coming up. We've got a head and shoulders with a two-headed snake. Jim, is it true that you developed this sneaky snake strategy? Yes. No one else has it. Just me. We need to break the triple top and run it up to 64.98.50. Today is the 8th. I filled up one dumpster with brush this weekend. And wood from out back. It might take 3 loads, 4 altogether. I missed Apple, man. I was waiting for that. I just took my eye off of it. And the Tesla approved probably. Missed that one. Yep. Like a $2 bounce there. But I don't know if I'd have took that. Probably not. Maybe if it comes down in double bottoms. AMD hit my support of 150.40. It's now 12:34, 1:34 Eastern Time. MGIH. All these penny stocks, man. What's going on today? God dang. SPY's done nothing but gone sideways today. Not really that big of a move. We did pull back to a double bottom. On the intraday.
Harley pointed out, maybe we'll get this S&P inclusion bump that can stabilize this
App,
rally.
APP.
Going. If that happens, chance to make $150 if it stays above 525 through the end of next week.
Yeah, and AppLovin obviously today hanging on to a 10.3% move to the
Jenny.
upside, so at least definitely having a positive session
Horrible
as a result.
today.
But appreciate it, Marley, of course,
Oh,
host
Marley,
here of the Schwab Network,
God.
and that'll do it for our AppLovin discussion, at least for this show today. But coming up next, time to discuss the latest trends we're seeing from OpenAI and some increased spending perhaps in their future, as well as an overall read on what we're seeing from the Consumer Health Index.
My nephew saw me this weekend and said, God, dang, you look big. I put on muscle. I've been working out since I quit getting high. So he had to touch me. I said, God, he said, I thought you were fat. I said, no, it's just I've gained muscle. Do 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 do. Do do.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and
Vietnam
more.
Fabricant
Best of all,
Center is
you
halted.
can ask questions by chatting directly with an education coach. It's interactive learning.
Might have to get back into penny stocks.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk the latest from OpenAI. Although not a publicly traded company yet, one that always gives a great read on the overall spending trends we're seeing in AI. Joining us now is Diane King Hall, the host of Morning Movers, to discuss a bit more on this, which I have to say, anytime
We'd
you're
have to
seeing
pull back first
Diane, I think this is a good read.
and hold
Yeah, look, it shows
242.
that race for AI and who will be first and a leader in this space is continuing, and that the parties at the table.
And 402 would be resistance.
OpenAI, and this is according to a report from The Information, expects to boost spending to some $115 billion through 2029, so through the end of the decade. That's up from the previous
There we go.
figure that had been reported, which was around $80 billion. So a significant move there, according to The Information. OpenAI building its own chips and data center facilities to power its tech, right, for ChatGPT to essentially remain as a leader and beyond. And this comes, of course, following that report that it's building its first in-house chip with Broadcom. We've known that there was this talk on the earnings call about this client and this order that Broadcom had received of $10 billion. That mystery client, reportedly OpenAI. Of course, OpenAI is not just it's not the only big spender at the table. Meta says it could put a whopping $600 billion plus into AI infrastructure by 2028. Mark Zuckerberg actually clarifying on Threads about this, because this was actually caught in a hot mic event, or a hot mic moment rather, at the White House last week at that dinner where you had all those heads of tech there at the table, and Zuckerberg had, I guess, spoken to Trump about this previously, President Trump, and he said on Threads, quote, "If AI progress keeps accelerating, it's quite possible we'll invest even more than that. I had briefed the president that we're planning to invest $600 billion
/ES back at the
in US
orb.
through 28, and a significantly higher number through the end of the decade."
Okay, pay attention. /ES just pulled back to the orb on the 1 minute time frame. And we hit on the 5 minute too. MGIH has to hold 242 to stay bullish. Do you understand me? Who is that guy behind the mic? He sounds like a tough guy. I am. I'm very tough. Come on. Should I buy 500 shares here? I will be right back. Stuck in this. Which one? Stuck in this shit trade with you, Jim? It don't look like it wants. It's not looking too good.
and they're cutting back. Now, on the sentiment side, however, that part can change much more quickly. That's where the daily frequency of our data is so important for this index. We release it on a monthly basis on our website, but we actually collect the data on a daily basis. I internally look at it, usually on a weekly basis. And that sentiment part is where things can be a little more fickle. And as that changes, that can maybe have more of an impact on discretionary spending, but it really can be more of a rapid measure of consumers changing spending habits. So there's both parts in it, and I think that's really reflective of the economy overall. There is this sort of more turning a cruise ship takes time aspect of the economy. You know, household finances don't typically change dramatically overnight, but sentiment can. And so there are certain things you can cut back or increase spending on more quickly.
Okay, and if you're able to say, how has this month trended so far? I mean, you're seeing things continue to see, pretty solid footing, or are you seeing any evolution of these trends, at least so far this month?
So through August, the Consumer Health Index level has been pretty strong. It's been kind of stagnant, but at a strong level. So that's reflective that spending so far over the past month was pretty robust and in line with maybe what we saw in July. Now through September, I've looked at the first week of September. The Consumer Health Index dropped just a tiny bit. It really looks close to the level where it was, but I mentioned that the unemployment component in it is kind of a lagged, it's incorporated on a lag. That means that component of it, we can actually look into the future and see part of what the Consumer Health Index will do in the coming weeks. And so through September, we do actually start to see some of that weakness in the labor market that's been filtering through to other series, other data out there. We're starting to see that labor aspect of it, that weakening labor aspect of it, filter through to spending a little bit in the coming weeks is what I'm expecting to see. Now that could be offset by what happens with sentiment, or it could be magnified by what happens with sentiment, depending on the direction of that as it plays out in real time.
Okay, that's so interesting. We so appreciate this because consumer health, I totally agree. I think is such a widely important and oftentimes maybe you picked apart part of right now the consumer, but I think really great information, and we so appreciate you bringing this to us today. Kayla Brune, Senior Economist of Morning Consult. Now, coming up next, last but not least, is time to discuss some of the telecom fallout we're seeing as a result of EchoStar selling spectrum licenses to SpaceX. And we'll discuss more of what this could mean for the broader telecom space with George Tillis coming up next.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
next gen investing, it's now time to discuss some of the fallout we're seeing today in telecoms as a result of this EchoStar as well as SpaceX deal. Joining us now to discuss more is George Tillis, Senior Markets Correspondent for the network. George, walk us through this story. I think this is really fascinating, and also the way it's going to impact some of these more legacy type players. I mean, tell us your thoughts here.
Well, yeah, this is ongoing when it comes to technology shifts, Jenny, from a 5G network and, of course, a retail wireless standpoint. We are starting to see Starlink, which is basically part of SpaceX, Elon Musk, founded company, start to move the retail spectrum, if you will, to direct to satellite. In other words, bypassing traditional 5G networks and going from your device right to the satellite. Now, the challenges have been, to deploy these low orbit satellites to do so, and it seems like SpaceX has really established a very nice network. But at the same time, the latency associated with satellite communication direct to device is going away, and it's becoming more competitive from a speed standpoint to 5 and 6G technologies. So what's happening here is that there's sort of a race for spectrum, a licensing spectrum from the FCC. And if you look at companies like EchoStar Corporation, which bought Dish Incorporated back in 2023, forgive me, they ended up buying a large component of FCC licensing spectrum that is very valuable. We actually saw AT&T, which is now trying to play catch up, which is a large retail wireless carrier that provides 5G technologies. They actually bought about $22 billion of licensed spectrum from EchoStar going back a few months ago. And now you actually see Starlink purchasing essentially another $17 billion of that spectrum. So that's almost $40 billion of spectrum that EchoStar has actually sold and monetized that was just sitting on their balance sheets. And this is essentially now a play that Starlink is making to essentially capture the licensing technologies and spectrum technologies to actually start to outcompete the 5G carriers like AT&T, Verizon, and T-Mobile. So this is actually happening. It's becoming, again, much more speedy to go direct to satellite. And I think Starlink is now making a play for this spectrum so that they actually have more horizontal spectrum to offer their services over time. And EchoStar basically is getting $8.5 billion in cash, but also participating in Starlink's venture because they'll eventually probably come public. They're actually getting about $8.5 billion in equity in Starlink as well. So overall, very good deal for EchoStar shareholders. If you look at the last month, the stock is up almost 200%. And this is a function of basically monetizing value on the balance sheet. There was $40 billion in intangibles on the balance sheet, and that was that licensing spectrum, and they found a buyer both through AT&T as well as today's announcement with Starlink.
George, how worried do you suspect these major carriers' boardrooms are today? Because it kind of seems like no business is safe now from big tech as they're now coming in for legacy networking, cellular providers potentially, or do you think this is maybe a street overreaction?
Well, maybe it's a street overreaction today, but these are companies, AT&T, Verizon, and T-Mobile, which effectively have a cartel. There are other providers out there like Boost Mobile, which is owned by EchoStar, but nonetheless, these three companies really have majority market share of the retail wireless business in our country. Breaking into that oligopoly is going to be expensive. That's what Starlink is attempting to do. And actually creating barriers to entry is also going to be expensive for AT&T, Verizon, T-Mobile to actually start to encroach on, using, of course, low orbit satellites through various companies to essentially now try to block the competitive aspects of companies like Starlink, which are really trying to bypass traditional towers and go direct to satellite. So I think this is an interesting play. I think, Starlink and of course, SpaceX are really disrupting this industry potentially going forward. So for what it's worth, again, I think this is probably going to be less accretive to the traditional carriers and more accretive to Starlink and SpaceX in the long run.
Yeah, and I think a really good point there. And also, as we're seeing today, EchoStar up now 7.6%. So appreciate that, George, for all of the insight. Now we'll leave it there. George Chill, Senior Markets Correspondent for the network. That will also do it for Alex and myself. Of course, today's Mondays from Next Gen Investing. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time, and we're coming to you live from the New York Stock Exchange. So glad you are with us. It's a record-setting day. I saw the NASDAQ hit a new high. We saw gold at new highs. We have a big show for you. Of course, we're going to be covering everything about the Fed and why the market may expect a fast pace for some rate cuts and what the Fed may plan to do. Also, we'll talk asset classes, small, mid, large cap trends, bonds, and more. What you might be considering for your portfolio, even high yield municipals, right? Those munis. In the meantime, we have a special panel all about crypto, and crypto's been holding on quite nicely. It's not at the highs, but still holding on. And what's the outlook? In the meantime, here's a quick look at the market. So we started off with a quick green, and some went red, like the Dow went red early, but the NASDAQ has hit a new high. This is the NASDAQ 100 at 23,745. That's up 92 points. The S&P 500 at 6486, up almost 5 points. By the way, the major indices did hit record highs on Friday morning after that weak jobs report, but did sell off by the end of the day. Small caps down 1/3 of 1%. Oil and gold are both higher. Gold hit a record today, and right now is up over $20 a troy ounce, sitting at a level of $36.73. And we are seeing oil at $62.20 the barrel. That's up 33 cents. 10-year bond yield has been under, wow, look at that, selling off there. That's a big deal. How we've seen the yield now. The 10-year bond yield has been poking, and it has now moved to the lowest level since April. And the dollar 97.58, and Bitcoin at 112,000 and change. Kevin Hakes, host of Fast Market, is with us on Schwab Network, and it's good to see you. What were our takeaways from the jobs report? I mean, what is the meaning of that jobs report? Because we know the numbers, right? 22,000 added only. But what were your thoughts?
Hi, Nicole. You know, my take on the jobs data was it was the culmination, it was the exclamation point of a week full of data on the labor market, and frankly it was not a subtle or an arguable event. What do I mean by that? We got JOLTS data that was less than expected. Challenger job cuts, that's corporate layoffs, higher than expected. Then ADP, which was weaker than expected. Jobless gains jumping back up to 237,000. Even the ISM employment would show great expansion in all the numbers. The only one that showed contraction, the employment part of ISM services. Then we got payrolls. So we got 5 to 6 data points last week on the labor market, all showing weakness. And what did that do, Nicole? It drove the 10-year yield just from Tuesday to today from 4.26% high to 4.05%. The economy is not the stock market, but the stock market loves the fact that more rate cuts are coming in. Now there's a chance, a small chance, but still a chance of a 50 basis point cut. This is a market that showed some slowing in the labor market. Meanwhile, Nicole, year over year wages went from 3.9% to 3.7%. So some of the inflation fears also went away. Now we'll get more data this week on inflation, but it couldn't have been a better picture for interest rates. A slowing overall labor market with lower inflation on wages, Nicole. And so there's where we find the 10-year yield now sitting 4.06%, Nicole.
I know, you have to rub your eyes. I mean, these are the lowest levels since the spring, and really is indicating that folks are betting big time on a rate cut on the 17th, 18th meeting, and many are now pushing for 50 basis points. That's what Scott Besson said originally. So that's part of the big story there. You're also watching Alphabet. What's interesting about this stock to you today?
Well, this stock's had a great run once the ruling came out that they don't have to divest of Chrome, and they can continue to take in revenue from, say, Apple for search. So they had a great week in the last week, but that said, the stock having run, Phillips Securities downgraded Alphabet to accumulate from buy. That's the less than great news, but they did raise the price target from $235 to $265. The firm views the U.S. District Judge ruling positively, like I just mentioned, and believes restrictions on exclusivity will have limited impacts on Google's product strength and partner incentives. So good news from Google, good run in the stock up to these levels. Phillips Securities now just taking a more tempered approach, lowering it to accumulate, but raising the price target, Nicole.
Kevin, it's great to see you always. A lot of action for this week. We're ready. Appreciate it. Of course, well, you mentioned inflation. We're going to be watching for PPI and CPI, with sentiment at the end of the week.
As a matter of fact, let's continue to talk about the bigger picture. Jeremiah Miller is with us, Chief Investment Officer at 213 Strategic Partners. Great to see you. Your thoughts on what the Fed may be thinking? The Federal Open Market Committee has a decision to make next week. What do you think they'll do and why?
Yeah, I think like the market's pricing here that you're going to get a 25 basis point cut. I think the market's probably getting a little too excited about rate cuts and the pace of rate cuts coming from the Fed. Yes, we just talked about that, the jobs print that was softer than expected, but the labor market's been trending softer anyway. So I don't think that's a huge surprise. And remember, the Fed's not going to move quickly. Now they're pivoting from inflation concerns. I think it's interesting, the Treasury yield move that we've seen this week related to that, to a focus on the labor market. But again, I don't think that's an overnight, like all of a sudden we're doing 50 basis points in one of these meetings over the next few months.
When you see the market at highs, for example, the NASDAQ hitting a high today, all the major averages hit highs on Friday. Are you feeling that valuations, are we fully valued? Is there still opportunity in equities, or are we a little too stretched here?
Yeah, the valuations are high. We're back to the high-end valuations that we seen earlier in the year, April, and tariff conversations. You're also back to valuations levels that we saw in 2021. I think you have to be a little nervous about it, and rightfully so, but at the same time, we can maintain those high valuations. We've seen very strong earnings, still double-digit earnings growth year over year, and those have been supportive to, while markets go higher, we're not stretching those valuations any further. I think under the hood, you got to pay attention. Valuations, especially high in the large cap growth space. It's one of the reasons we've leaned a little bit into this mid cap space. But be mindful, but I wouldn't say abandon those markets at these high valuations.
Yeah, I saw you have sort of a heed the warning of don't chase, right? Are there different opportunities?
Yeah, I think it's important to not, like, we heard a lot about the international trade at the beginning of this year. I think investors were very interested in that, potentially chasing that. That to us was more of a currency trade. That played out in the first half of the year, and there hasn't been many legs to that. I think you got to be careful. We like the mid-cap space right now because short rates are coming down, and that tends to be beneficial for the small and mid-cap space. But you got to be careful if rates come down aggressively because the labor market, there's more cracks there, and we fall into a deeper recession. The first place the market is going to price that is in the small and mid caps, so you're taking on some risk there. But again, the valuations are a little more attractive, so you got to balance the valuation story with the risk that maybe things get worse, and you might need to move out of that trade relatively quickly.
And when it comes to some of your top picks, and you like munis, right? High yield munis. Tell me about that.
Yeah, I'd love to come on and talk about how exciting it is to be in equities, but again, at these valuations and highs, it's hard to go there. What's interesting to us right now is the high yield muni space. We saw in April with risk assets selling off, including high yield corporates. High yield corporates have come back, spreads have tightened there, but high yield munis have not gotten back to where they were. The spread between high yield corporates and high yield munis right now over that period of time is about 8% return differential. And the high yield muni space, you're getting 5% tax-free yield, which we think is very attractive. Default rates in the high yield muni space tend to be even less than you see in high yield corporates. So I think there's an opportunity to allocate there right now.
And in the meantime here, there are other opportunities when it comes to bonds, not just high yield munis. What else do you like?
Yeah, we talked about positioning on the Treasury curve. We're still short there, right? The direction is lower for the Fed. We can debate pace, but it's going to be lower. I think the Treasury now closer to 4%. I don't know how much lower that moves. That's the market, I think, pricing in lower inflation expectations, which I think is interesting. But does it get below 4? Maybe a little bit, but I don't think there's much juice to get out of the squeeze there. Again, back to high yields, I'd lean into munis and not so much corporates. In the corporate space, stay in investment grade again because spreads are so tight right there. Wait and see if we get some more cracks in the economy, and maybe spreads widen, and then there's an opportunity to pivot back into high yield corporates.
Understood. I mean, you're concerned about the labor market. I know that the last report again showed
Understood.
22,000 jobs added and
I'm back.
unemployment rate ticked to 4.3%. At the same time, they said that they're going to look into how the survey is done. I don't know. All I'm saying is that, are you concerned that we are headed to a recession? Because a few times you've talked about yields coming down.
No.
But there's that chance of yields coming down too quickly. Are you concerned about a recession?
Not overly concerned at this point. The economic metrics are always challenging because while the process has been consistent, it tends to get outdated over time. So if you're measuring things for the same way over the last 30, 40, 50 years, great, it's a consistent number. You can compare today's number to a number 50 years ago, but you may not be capturing the whole picture at this point in time. So things like efficiency rate related to technology, we've had a big boost in AI and those conversations and how they're helping businesses. Well, if you're incorporating more AI, you don't need as much labor. So those sort of nuances in trying to figure out what is the right unemployment number, I'd say at 4.5% historically, that's a pretty healthy unemployment rate. So I'm not overly concerned. But you're right. The nuances of the metrics and how that's calculated is a tricky thing.
Understood. Jeremiah Reed Miller, great to see you, Chief Investment Officer at 213 Strategic Partners. Thank you.
This OCTO, we need to hold right here. We're at the 200. Randy? SPX at 648404. That lowers support. Man, I really passed out there for about a half hour. Seemed like. I don't know how long it was. I dreamt about this Turkish girl.
expected to be announced here, a thinner version of the iPhone that rumor has it will replace the Plus model, which had the bigger screen without the advanced features of the Pro models here. But kind of the consensus that I keep seeing is that it's marginal changes for this flagship piece of technology. Apple has lagged against the competitors that it faces in the AI race. It's kind of an innovator that's not really innovating that much anymore, seems to be the take on the street. Nevertheless, Jeffrey's price target hiked to 205.82, a very specific number here. So that was a more positive analyst activity that we saw heading into this event. Now, the trade in question, though, is really quite large in terms of the dollar amount. Plus 7,000 October 17th, 215 strike calls, and minus 7,000 October 17th, 215 strike puts at a 25.30 net debit here. That equates to about a $17 million debit paid for this shorter term trade, only about 39 days to expiration at this point here. So what you get here, though, you combine a long call and a short put at the same strike and the same expiration. That gives you a synthetic long. It would be a risk profile that would be very similar to what you would have if you were simply owning the stock here. So the difference is, if you do have this type of options trade, you would get the exposure at a fraction of the cost. I mean, this trade cost $17 million to put on. It would be, if you were trying to get the 700,000 shares of stock, it would be like $166 million here. So it's a fraction of the cost for a similar exposure here. The disadvantages are theta, of course. There's a chance that the option could expire without making money. You could be out the entire debit paid there. For this one here, if you had the stock, it wouldn't play out quite the same way there. So when we look at this one, it's got a break even of about 240.30 here. So when we are fairly close to it, we've fallen off a bit here since this morning. A small move only needed to break even on this one here. So seems to be trying to look for just a short term.
See a pullback, MGHI.
After this event.
MGIH.
One thing I couldn't help but notice too, this trade lost about $1 million since it was put on this morning, last time I checked here. So a bit of a difficult situation so far for this particular trade.
More than Drake lost on the U.S. Open. Look, I mean, that's a lot, and it's a lot.
That's a lot.
And people are excited about the new iPhones, and we'll see how much interest they have in the new products that will be out, how much they expect from the artificial intelligence.
402, baby.
Which has been a little slower in the game here, but high expectations. Let's turn our attention over to Salesforce. You found a bullish trade here as well.
Yeah, so another very large dollar amount trade for Salesforce here. This one was about a $15 million debit paid. And Salesforce earnings last week, 4.9% one-day drop, but we've recovered at this point and filled the gap that was formed here. Data cloud revenue, AI offerings were the bright spot, but guidance came in softer for the third quarter here. That seems like a similar theme I've been seeing lately with these tech companies, that the earnings themselves were okay. The guidance was not doing super great here. You can also see Citi raised its price target by $1, so not exactly earth-shaking news there. We did see price target cut from Macquarie last week to $290. But HSBC raised to $366 from $337. So kind of a mixed bag.
The first step to success is dare to try.
But I did see as well, Salesforce beat out Palantir for a U.S. Army contract last week. That's big money here. It's $1 billion.
This is all English here.
Total for the government sector for this company here. So those can really be quite important here. When we do look at the trade, though, to get back to the trade more specifically, this one is simply just buying long calls. And you can see that break even there, that green line for this trade. That would be where this trade would be looking to cross above here. So a bit of a stretch. It's still within the expected move, though. Plus 14,000. December 19th, 270 strike.
They get halted again?
11.11 debit here.
Nope.
So $15 million debit paid here. Break even 281.11 versus the expected move of about 15%, 14.8% or so. So the expected move does encompass that break even. The break even's a little less than 12% away here, but we're getting pretty close. It's near the upper end of that expected move here. So a lower probability trade despite this quite large amount of money being paid for it here. Oftentimes you would use these types of trades here. You would do a longer dated trade. You would do like a leap option to try to get that similar exposure to the stock, as I was saying before, without the upfront capital required. This is a fairly shorter term trade though here. As I said too, these are all opening trades. These all do seem to be new positions that are being put on here today. So this would be a bullish play, just taken on itself at face value.
I mean, look, it's been under pressure, so someone's really betting the other way that there's opportunity. Let's talk about Oracle. You know, we talked about the earnings. The last earnings were some good news. What do you think here when you look at this chart and see this bullish trade?
Right, a chart near its all-time highs here as we head into earnings in tomorrow's post-market. I wonder what everyone will be looking for. Maybe, I don't know, AI stuff. That would be my guess. But also, these are data centers is another thing that I keep seeing over and over with these tech companies. It's kind of like the picks and shovels aspect of this whole AI boom is the data centers and kind of the infrastructure that needs to go along with it. So an interesting thing to keep in mind here for this one. JP Morgan raised their price target to 210 from 185, but they kept a neutral rating here. Analysts are looking for a revenue of about 15 billion and EPS of about 148 here, up from 139 in a year ago here. So when we look at the trade, though, this is the smallest trade of the three today. It's only about a $1.1 million debit paid here. Still quite large relative to what you would see typically here. We just had exceptionally large trades for our first two examples that we looked at here. But when we look at this one here, same expiration date, December 19th. In this case, plus 1,260, 310 call vertical at an 11.12 debit here. So this one is paying about $1.1 million here, looking to hopefully get that max profit of about $3.88 million here. So roughly that 1 to 3 risk reward ratio that's commonly looked for in trading. We can also see that our break even 271.12. That's about 21% away. 12.3% away versus our expected move, which would be plus or minus 21% here. So the max profit area would be encompassed there. So this would be a trade where you trade the profit cap here. You would have unlimited profits with our last example, which was just a plain long call. This one, the cost is defrayed by including the short option, but it limits the profit potential here. Now, though, you can see that that shaded area, that's kind of the expected move there. The short strike lines up with that expected move here. So that can be a common strategy people use. If there is a place that the stock would be, you'd be looking for it to stop, you could try to base it off that here to project the range that you might be looking for in your trading here. So this one, well, as I said, small compared to our other trades though, but on a normal day, still a pretty darn large trade here as we would encompass it for this earnings event that's coming up.
Penny stocks are back.
Thank you for all of those who looked at Apple and Salesforce and Oracle here in Options Corner today. Rick Ducat, thank you. Coming up, we'll discuss Gorilla Technologies' big AI government contract in Asia, what it means for cybersecurity at home, abroad. Looking forward to chatting with the CEO next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including
Well, it hit 957 one time.
Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade greenly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. And we welcome back to the show Jay Shamjan. Thank you so much for being with us, Chairman, CEO, Gorilla Technology. It's so nice to see you again. You know, we were talking about your expansion plans in Asia Pacific, and you're going to tell us more about that. But for the folks, Jay, who don't necessarily know exactly what Gorilla Technology does and what it is, could you give them a glimpse into the company?
Absolutely. Nicole, first of all, it's wonderful to be with you once again. Thank you for having me on the show. Now, for people who don't know Gorilla Technology, we are a platform as a service business. We have three pillars. We have our big data intelligence platform, which coupled with our video intelligence was our bread and butter until about 2-3 years ago. Think about, smart city, safe city, industry 4.0, secure buildings, predictive modeling, secure locations, demand prediction, access control, and so on. The second part of our business is our infrastructure and our Internet of Things. Under infrastructure, we cover air-gapped networks. We help build data centers right from design to conception to build out, manage, and hand over. And then we do lawful interception, which is the project we're going to be talking about, and Edge AI. On Internet of Things, we're predominantly focused on public safety, security surveillance, energy management, transportation, and finally, our cybersecurity, which we call our convergence, as we call them, covers the entire framework, right from physical security, OT security, network, data, application, and very domain-specific security. That's Gorilla in a nutshell today.
Yeah, I love that summation. I mean, just simply when you talk about these safe cities that are run by your AI technologies, and you think
We're at a yin-yang.
recognition and facial recognition, you talked about energy management and things like that. But cybersecurity,
On MGIH,
big important topic at this time. Tell me about
6510s are still at 40 cents.
Yes, Nicole, we've
We got to break the 200.
Contract in 2 weeks with another major company.
Get back to the top of the orb.
Pacific. This is a 1-year deployment schedule contract with a multi-phase.
We'll find out here shortly.
Customer. The next phase will begin next year, and that's a separate contract which we are obviously bidding for. This is with a National Investigative Bureau, one of the most advanced in the region. What we are doing is we're building and deploying an AI-first smart policing GPU as a service and national platform that enables the digital forensics and the cyber crime investigation to come together at scale that was simply not possible in this region before. Now, this is our second major win in 2 weeks, which actually goes to show that Gorilla is now the go-to partner for sovereign AI infrastructure in Asia.
And you're working closely with the government to do this, right?
Oh, yes.
That is correct. I mean, in simple terms, it's a national
That is
scale AI
correct.
compute delivered.
Oh, who is
as
this
a service.
fruitcake?
Now, this is a purpose-built for law enforcement. We provide the entire GPUs and infrastructure. We provide the AI stack and the forensic tools which are needed to reconstruct the historical network traffic. What we then do is we analyze the cybercrime and generate actionable intelligence. Now this, instead of getting point solutions, the governments get a full AI engine that scales to your needs. Now, you talked about cybersecurity. Cybercrime and digital intelligence are now what we call national security issues. So agencies are now moving from a reactive investigation to a proactive investigation. So our platform enables them to detect, analyze high-risk factors and
God,
actors.
here's one that's took a hell of a drop.
Complex data trails, and then secure sovereign control over their digital infrastructure. That capability did not exist before.
Understood.
Understood.
And this is your second contract. It's a newly awarded one. Your contract valued in the tens of millions of dollars. And do you expect more of these going forward?
We're always expecting, because our presence in APAC is only growing rapidly, Nicole. We have multiple national wins across smart policing, lawful interception, GPU as a service, and now data centers as well. The strategy is quite clear for us. Governments are moving away from point solutions. We're seeing them looking at long-term AI partners. This is no longer a 1 year, 2 year relationship. We're looking at about 10, 15-year relationships. So they're looking at people, companies who can provide both speed and sovereign control. And that's the space Gorilla is exactly leading in today.
It wasn't long ago that you reported earnings, and you did have better than expected first half financial results. Going forward here, we're talking a lot about Asia Pacific. What about other regions, including the United States of America, and where else are you focused?
Well, we're actively focused on large multi-year contracts, and we believe that they will help strengthen our top line.
There's a lot of funny stuff going on today.
So if you look at our focus today, apart from Asia, and which is Singapore, Malaysia, Thailand, Indonesia, Philippines, and Taipei, we're actively investing into Egypt, as you already know. We're investing very heavily into Dubai, Saudi, Qatar. We're very actively engaged in quite a number of conversations in the United States. Hopefully we'll be able to put that to rest and get those news out over the next few months. And we're very
Was that OKTO?
I don't know if you've seen recently, we're actually at the Climate Week along with
OCTO.
the likes of AECOM, NVIDIA, Goldman Sachs, IDB, our One Amazon team, the White House Environmental Advisory, the governments of Panama, Ecuador, Mato Grosso, and the Zapara community. This is where we're actually showing how AI, blockchain, and infrastructure can help preserve the Amazonian rainforest while creating real accountability and investing value.
Yeah, I saw revenue was up 90%. Is some of that because you said that now NVIDIA is Gorilla is now an NVIDIA solutions provider? How will that help your bottom line? Quickly.
Quickly.
Because growth stories for me are very exciting, but what really matters for me is sustained, predictable growth. And we talked about this the second time whilst I was in the studio. Our first half revenues, went over 90% to about $39.3 million. That was a 90% jump. But if you compare it to the 222% we did last year, what we are doing is we're strengthening our fundamentals. We're cutting down debt. Our debt's down from 21. We reported 18. Now it's at about 60. Our aim is to make it debt-free by the end of this year. But that said, we've also supercharged ourselves. We raised about 105 million equity. We totally have about nearly 125 plus million in cash today. That gives us enough firepower to execute, not just in Asia and the Middle East, but also in the United States and in Latin America.
Well, congratulations to you and the team. Jay Shandan, it's great to see you again, Jay. Always love having you on the show and hearing the very latest. Chairman and CEO of Gorilla Technology. Stock for 1 year is up 468%. Year to date, just pretty much flat, down slightly. Thank you, Jay. Good to see you. Still ahead, Thomas Martin will join us and take a look at the interest rate environment and the market outlook, what it means for your portfolio, too.
$20.
We'll be right back.
$18.61. Do-do. SPX is at 35. It's got to break the 200. And get my IT going.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m.
So Dan Ives is on the board of OCTO. That's why it's being pumped. Slash ES still trying to break the VWAP. If we do that, we'll go higher. Gorilla Technologies. GRRR. See what kind of website they have. Partners with NVIDIA. Where did I put that? KR's flagging. It looks like I'm 8 for 9 today.
We're definitely looking for a downdraft, but we haven't gotten one that's been significant in quite some time. I think if we got a significant pullback here, we'd have our list of names that we'd really like to see be 10 or 15, maybe even 20% lower.
Understood. How
Jeez.
do you like Live Nation Entertainment? That's a name you like. Why?
Well, we like Live Nation because this is one of those flywheel type companies. They're a full stack company just in entertainment, and with their ticketing and with their venues and with their sponsorships, they all feed on each other. They have over 320 venues that they manage, and that allows them to cover their fixed costs as well as their variable costs in that area. They're able to segment their audience in terms of ticket prices and in terms of what they offer on venue. So they cover you from discovery all the way through the monetization of the product and then right there on site. They're just huge, and they really have a lot of ways that they can increase their revenues and increase their margins.
And then there's Samsara, the snazzy ticker symbol IoT for Internet of Things. I mean, basically doing the digitization of companies, and the CEO noting strong growth in Europe in particular. How much room to the upside does this kind of name have?
Well, this is a name that had performed very well in the past and that has struggled a bit this year. There was a question as to what the effect of tariffs was going to be on their customers and whether their customers would be able to keep up the spending that was necessary.
SPX from 15 to 35.
And I think that really unfairly penalized the stock. The company still reported a good
Trying to break the
first
200.
in earnings, but it was not rewarded just because of those fears. And when the second quarter was reported, and you had
same as the
ARR of
ES
30% and revenue growth of 30% year over year, and this push into international, and showing that they can really start to increase their share in video safety and whatnot. A number of new products, growing some of those products.
How dare you?
At a rapid clip. The market's still recognizing it, but it still hasn't really, I think, reached its potential for the remainder of this year.
Thomas Martin, great to see you, Senior Portfolio Manager at Globalt Investments. Thank you. And some picks there, right? We saw IoT and Live Nation. Okay, coming up, let's talk Bitcoin and crypto and the decade ahead. What you need to know. Our panel is ready.
No politics. Watch these people. I'll turn these on. They'll be talking politics. Silence. Good.
Actually, I'm seeing something from Schwab.
We're having technical difficulties.
They can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
We're experiencing technical difficulties.
It's getting started. Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our
We broke the 200.
Series breaks down different
Can we go higher now?
Like trend analysis, price patterns, moving averages,
And being in the now.
and much more. Best of all, you can ask questions directly to an education coach.
Where?
It's interactive learning at its finest.
Where?
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Oh. Yeah.
Hey, Dad. I have a question for you.
How come Grandpa doesn't sleep with me anymore?
Investing.
Granddad had an account with Schwab before there were branches in the area. He really started
One
with
freaky
nothing.
family right
Worked
here.
hard, and after he passed away, the torch has been.
One freaky family. I'm surprised Schwab lets him. Ugh. Dad, I gotta ask you a question. How come Grandpa doesn't sleep with me anymore?
With the best full-service wealth management skills in the biz.
We just watched this commercial. Dad, how come Grandpa doesn't sleep with me anymore? We pulled back and hit the 63 at 320 on MGIH.
It's still the wave of the future. We're seeing companies, the government, and even banks now participating.
Yeah, I think that with the Genius Act and everything related to stablecoins, that is just one very tangible use case. The general regulatory environment, as witnessed by the Genius Act and others, will cause a number of folks to continue to come into this industry. It will really reduce the barriers and a lot of the fears that a lot of folks have had around this industry, give the clarity that's needed, et cetera. And so, yeah, so I think you will see more and more folks coming into the industry, whether that's investors, whether that's institutional money, as you mentioned, governments. yeah, I mean, even Hong Kong, they have some new stablecoin legislation. So, yeah, it's all indications are green. It's go time. So everyone's ready.
And Juan, you're not surprised to see the interest in Bitcoin and how it continues to be an outperformer. In fact, are you surprised when you hear people say price targets that maybe to some seem outlandish of over $1 million, for example?
Not surprising to us at all. Actually, we just published the first ever long-term capital markets assumption on Bitcoin. This was a result of, Bitwise has been around for over 7 years, and prior to last year, no institutional investor was asking about long-term capital market assumptions for Bitcoin. And in the past year, we've received more than 10 inquiries from large institutions. So we wrote the first paper on this. Our projection is that Bitcoin will cement its role as a global store of value over the next decade, and that will lead it to be the best performing asset from now until 2035. And this is really driven by this structural imbalance between demand and supply. The ETFs did a fantastic job of beginning to institutionalize Bitcoin, but we're in the very early innings of that, and there's a long way still of institutional accumulation. And we think over the coming decade, Bitcoin will become a mainstay in professional investor portfolios. We think the trend that we're starting to see emerge with digital asset treasury companies accumulating Bitcoin and other digital assets is going to continue to grow, and digital assets will become a prevalent part of balance sheet in corporate portfolios as well.
Dang.
And you mentioned the
ACRV.
Reserve here in the U.S., but other governments are pursuing that initiative as well. So we think governments will also be allocating to
BLND.
Talk about the price rising to 1.3 million by 2035. It's a
This used to be a penny scan that I used to take on breakouts.
Annual growth of over 28%. I mean, that is some major moves. Maybe not
Yeah, it
for
is.
crypto, or maybe not for some things.
Blink.
But for other things, 28% is a lot for annual growth over a 10-year period of time. That being said, that certainly sounds like a nice price point. It's optimistic, 1.3 million. James, tell me how you think, and this could be used going forward, common stock tokens, Bitcoin treasuries could create new dividend opportunities for operating companies. Tell me more about that. What does that mean?
Yeah, absolutely. So, Exodus has been we were the very first publicly traded company to have a common stock token. We had ours way back in 2021. Galaxy Digital just announced last week that they are also going to have tokenized stock. And the NASDAQ actually came out this morning with, some news around some of their thoughts and plans around trading common stock tokens. With that in mind, Exodus, having been such a leader in the space and having had our common stock token for so long, we also, we operate with Bitcoin. We get most of our revenue in Bitcoin, and we pay all of our salaries. If you want to work at Exodus, you have to take Bitcoin as a salary. And so, we're much more than a digital asset treasury, even though we have a very large treasury. We are operating company. And we, have just this morning announced that, we are exploring.
Well, that's interesting what he just said.
Taking some of that Bitcoin.
To work for him, you have to accept Bitcoin as a salary.
And it's pretty amazing. You too will be paid in Bitcoin. I mean, James, at this point now, we always hear a lot of money managers come on and say 1 to 2% of your portfolio should be in crypto or Bitcoin or whatever. What percent of your portfolio, James, is in crypto?
That's kind of interesting to hear.
Not enough. I go back and I look at my pay stubs from 2019 when Bitcoin was at 3,500, and I really hate the fact that I had a mortgage back then, and I wish I would have done a better job of hodling.
Sending your money in digital assets?
Yeah, of course I do. Of course I do. Yeah. But also the company wants so.
Right. Now, look, I understand. One, when we think about what the
She understands.
are doing, we've seen more and more
Understood.
institutional interest, and it's an asset now at this point, and it's more widely accepted. How can that really drive demand when you say the supply is limited?
Yeah, the Bitcoin network is only producing 164,000 Bitcoin a year. And this year, we've already seen the entire year's supply being exceeded from the demand coming from the ETF flows, which are ramping up and continue to ramp this year. by institutional investors, continuing to allocate to their portfolios, as you were saying. Investors early on, before the ETFs, they were talking about a 1 to 2% allocations. Now, most of the financial advisors and professional investors we talk to are considering 3%, 3 to 5% allocation. So the exposure to Bitcoin and other digital assets is growing. And then the demand from corporations has been superb as well. We've seen corporations become a driver of assets, of the price performance of Bitcoin this year with the demand from digital asset allocations to corporations. We have a fund for that has gotten lots of traction from investors, and we've now seen that being replicated in Ethereum. That's been driving the price of Ethereum over the past 2 months. And now, more excitingly, it's moving beyond Ethereum to Solana and other assets. Tomorrow, the first digital asset treasury of Solana is going public on the NASDAQ Sol Strategies. So we're very excited to see this broadening trend of investors recognizing the potential of digital assets in their portfolios, whether it's at a financial advisor and money manager point of view or a corporation point of view.
Okay, well, we'll watch for that as well tomorrow. Thank you both so much, James Gurnetsky and Juan Leon. Thank you very much. Good to see you both. I'm Nicole Petalides. So glad you're with us here on Schwab Network. Record day for the NASDAQ and gold. Keep watching. The Dow has turned into the green, so keep it right here. Market on Close next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Do 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 do.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly.
Back down to 15. I don't think we're going to have a chance of this one.
Morning Movers brings traders the
It's now Power Hour, post 1 minute.
From volatile overnight swings to the earliest analyst call.
Post 1 minute.
Morning Movers only on Schwab Network.
afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley
Oh,
Caden.
God.
With an hour left in the trading day, let's take a look at where the markets
Marley.
stand right now as we take a look over at the S&P right now. Trading at about 64.90, 67, up just over a tenth on the day, but we are in the green across the board. See if we can hold it into the close. The NASDAQ 100 up more than 4/10 at 23,752.41. The Dow up more
You're
than
no
10
Caroline.
5,456.36, and the Russell 2000 up 2/10 at 23.95.65. As we take a look at some of our futures products, see how they're performing. The dollar down 0.3 on the day, about 1/3% at 97.40. Gold up on the day, hitting another all-time high at right now at 36.78. Crude oil trading up about 0.75%, 62.33 a barrel. And Bitcoin poising a bit of a recovery here off of some lows we've seen recently, up close to 1% on the day, trading just under the 113,000 mark. Now, I do want to bring in our first guest to talk about some of the stocks on the move today, some of our bigger stories that we've been covering today. So I'll bring Jenny Horn into the conversation, the co-host of Next Gen Investing. Jenny, lots to get through today, but first, let's start with AppLovin. You know, shares, as I'm looking right now, up 11.5% as they're joining the S&P 500.
I know, and it seems like it's about time because as we talked about with the previous rebalancing, that this name was expected, or at least had been speculated to join the S&P 500, but now joining a list of two other names that will be joining the index September 22nd in conjunction with the index's quarterly rebalancing, according to S&P and Dow Jones Indices, which oversees the benchmark index. So these three stocks will be replacing MarketAxess Holdings as well as Caesars and Enphase Energy. And frankly, what I do think is so amazing about the story about these companies leaving, obviously being replaced, is each have a market cap between around $5 to $7 billion. Take AppLovin, for example. Its market cap right now has surged to $170 billion, making it actually the largest U.S. company that wasn't already in the S&P 500. So before this news, on Friday, there was actually speculation Strategy, which is, of course, the biggest really Bitcoin corporate proxy, could be in the S&P 500 in conjunction with its rebalancing. Didn't make the cut though. So right now it's about, I think, more than just market cap, because some of these companies have gotten lofty. I mean, that Strategy right now has a market value of roughly $93 billion. So that would say that given the minimum of roughly $22.7 billion for new entrants into the S&P 500, companies at the very bottom of the barrel have gotten smaller. Some of these newcomers have gotten much larger.
And it's interesting, too, when you see some of the companies that are getting removed, it's not necessarily that they always have a smaller market cap than the ones that are being added in their place. You know, AppLovin has just been such a growth story for them, you know, up, as I look the last 6 months, more than 100%. Q2, they gave a really strong performance. Revenues up 77%, adjusted EBITDA up 99%, net income 156%. So, I mean, really impressive growth there with their net income up 156% year over year. You know, that just shows how they're able to translate their growth into significant profitability when we haven't necessarily seen the same story out of similar companies, and analysts really bullish on them. I was looking before we talked, 98% earnings growth expected this year, 51% more growth in 2026. But I know we talked about this a little bit earlier, but so interesting to watch what they're calling the index inclusion effect. That once you get
inclusion,
it usually is a good thing. Although then there's been some names in recent memory where it was
God, why'd they put her on here?
And then once you were once in the S&P 500, you lost a little bit of that steam just because, hey, you're now in the pond has gotten bigger. There's some big fish in that pond right now.
And then there are big fish in the pond that they're joining. Yes, but let's move on to another one. I know one of your favorite companies to talk about, and it's not an energy drink company.
It's not.
It's Canada Goose. They got an upgrade today.
They did, and they also had some really, I would say, decent earnings. I know that right now retail has been a
Canada Goose,
picture, but had an absolute nosedive coming off levels of 15.41 to 43 a share, but still up now 53% on the year, and also making a really nice recovery from that pressure we saw, I mean, just now a few months ago, so like early July basically. But analysts also giving this a nod, I think also encouraging its recent recovery right now. So we did see TD Cowen upgrade shares to buy from hold, raised price target of 18 up from 16. Also would be well above levels we've seen this year. but they like their modernization of their products, and they believe the company is offering a new and more culturally relevant creative vision. Their evolution, they also do believe, to drive this upside to sales and margins, while a potential buyout offer does offer some downside protection. And that's a very interesting way to frame this, because as we know from looking at a lot of these companies that like once peaked out during the pandemic and during like the true, like I would say, really market favorability across the board, downside protection is not always seen from buyouts. That's my own thought, as I've just had been really saying the same thing for a name like Peloton forever. But I do like the fact that they at least see this like creative vision coming to life, as now they have alternatives and have been more animal friendly with some of their products, which I know has resonated well.
Yeah, it's interesting, to watch the companies in this retail space and how they're responding to any sort of criticism or potential upset from customers, and which ones are pivoting to try to have mass appeal, and the others who are standing firm in their stance and saying this is what we've decided to do, and we're going to stay the course. American Eagle, for example, with their Sydney Sweeney ads, stayed the course after criticism, whereas you see others pivot to success or otherwise, depending. So clearly whatever they're doing seems to be working. TD Cowen likes it at least, and earnings were positive for them. Shares on the day right now up about almost more than 12.5%. So now I want to move on to Elon Musk, writing the biggest check ever from SpaceX to expand his foothold in the mobile phone business. Tell us what's going on with EchoStar.
Okay, so SpaceX announcing earlier today that it would pay that $17 billion price tag for EchoStar's really valuable spectrum of cell phone services. So the deal with EchoStar does include roughly about $8.5 billion in cash and up to around another $8.5 billion of SpaceX stock for two chunks of that very lucrative U.S. wireless licenses business and related domestic and international rights to beam signals from space, which to me sounds so cool. But also it does really signal that SpaceX did agree to pay about $2 billion in cash towards the interest payments on EchoStar's debt that is expected to ride through around November of 27. So SpaceX has already seen this really growing home broadband service interest as far as Starlink is concerned, and it's dipped down to mobile really through its U.S. partnership with T-Mobile, but now these new spectrum rights would significantly improve their ability to connect cell phones in remote areas and beyond the reach of cell phone towers. And I have to say that anyone that has ever struggled with cell phone service, it's usually in more desolate areas, yes, and really Starlink has provided a huge service for that need. If you're ever like more off the grid per se, this is just expanding those capabilities. So I think it's amazing. 5G, frankly, from an infrastructure standpoint, has always been so disappointing. So going now up, of course, into space and really using more of a satellite focus, I think is just wonderful, especially when you still have service issues as far as just like the traditional, wireless and phones are concerned.
Absolutely, and it's interesting too, because when Starlink was first announced, Elon Musk first brought this idea of Starlink up, it was to bring internet access to areas of the world that did not have it. And the goal was that everywhere in the world have internet access. So it is interesting to see now really dipping further and further into this, as Starlink's already established. But Starlink is on cruise liners now to have internet access. Also really interesting here, they're already in talks, despite it just being announced, for companies like T-Mobile to then release some of the spectrum rights that SpaceX is acquiring. So already built-in customers here in this purchase. But I wasn't aware that the FCC had threatened to strip some of Spectrum's rights, and that AT&T had originally been a potential buyer for this Spectrum buyout to get rid of some of those potential FCC issues if they were to move forward. But clearly they've chosen SpaceX as the partner for this one.
Clearly they have, and I will say that shares in these traditional legacy carriers like T-Mobile, AT&T, and Verizon have also seen a decline start this week, which I think speaks to perhaps the hope that AT&T had seen more of that enthusiasm and gotten more of these contracts. Because again, I have to say, 5G rollout has been really disappointing. It's been like years in the making, and still you see major areas of dead zones where that is not necessarily entirely these carriers to blame, but they're not really offering much of a solution that right now it seems like Elon Musk and EchoStar frankly are.
Yeah, it's interesting to see. It will be interesting to see what sort of customer base they come up with, how many customers they even plan to take on. Because as we've seen with SpaceX and Tesla and any of Elon Musk's companies or ideas, he doesn't always need a huge customer. Sometimes they're just his ideas for for his dissemination. So we'll see.
Very true.
We'll see there. Moving on to our last one, another IPO. It's the season of IPOs is here and seemingly never ending, but this is a name everybody knows.
This is another
Never heard of it.
news of Klarna's IPO last week. This was another one that's been on every watch list, every radar
You're a liar.
for years now. That's StubHub, which is now aiming to raise as much as $851 million in its initial public offering. That gives it a valuation of
There's the knife.
$9.2 billion, and that
Get
was
ready.
revealed in a filing this morning. But they plan to sell more than 34
The
million shares,
$64.95s.
$22 and $25 a share. But this long-awaited IPO just come after StubHub did hit pause on the process back in April as the market was reeling from some, just light volatility that we can all very much recall. But the company has been eyeing an IPO since last
Marley.
year. Again, has postponed it in efforts to avoid some of the
You know,
slowdown overall we were seeing in the IPO market. But they
I want
plan to
Caroline
trade on
back.
the New York Stock Exchange under the ticker so Stub.
Thank God.
Has really bounced back in recent months. I mentioned Klarna because that was one I've just been really waiting for. But I mean, Figma, and StubHub filed that prospectus last month, which showed its revenue has actually been at a healthy clip, rising 10% year over year. Operating income was also, pretty healthy. Net loss did widen, which may be an area of concern.
$64.95s at 85 cents.
Long-time industry player that we've been waiting for this really whispered and sort of speculated upon IPO.
Interestingly enough, we'll be interested to see if they follow other similar ticket companies follow, because they're not alone in this space, but certainly a recognizable name. Also surprised Stub was still available.
75.
Great. I like when it's easy,
Perfect for them. We will never forget which one it is. Just type it in there. It is.
There it is, right there.
With like block and the XYZ, so I'm like, I love a good easy ticker.
I'm in.
Thank
75
you, Jenny,
cents.
for being with us to break down some of our big movers today. That's Jenny Horn, the co-host
Jenny
of
Horny.
Next Gen Investing. Now we'll broaden out our conversation, focus on some themes that you should be watching for your portfolio with our next guest. Joining us is Christy Aquilian, the head of iShares Investment Strategy for the Americas at BlackRock. Christy, thank you so much for joining us this afternoon. Could we first start with just your big picture take on the market right now?
Yeah, absolutely. Thanks for having me. It's great to be here. I think I'd characterize our view as still relatively risk on. We still feel comfortable taking risk. We still see support in the equity markets. But certainly I think that this is an environment, especially with the types of macroeconomic data we got out on Friday around the jobs market, it's just an environment that can be prone to more volatility. So we really think that now is a time to stay
Who paid you to
nimble
think?
and to stay flexible, as some of that data is expected to soften a bit in kind of the months ahead of us. So again, we like taking risks. We still are pro risk in the equity market. Something like DYNF, which is our dynamic factor rotation ETF, is a really great way to capture that ability to stay nimble in the face of potentially changing market conditions.
So with all that said about staying nimble and potentially changing market conditions, what is your overall outlook for equities?
What do you mean by nimble, baby?
Yeah, we think that they can still continue
Appreciate
to
it
higher.
if you would
We
talk
have
dirty
very
on
strong preference
Schwab.
here, for preferring large cap over small cap. We like that the quality uplift that you get, and really if you look at kind of the breakdown and the profile of earnings over the course of this year, and certainly what we saw in Q2, is that earnings are really being powered by the top of the index. So a lot of investors have been concerned about index concentration. Indexes are concentrated because earnings is concentrated. So we like leaning into the larger cap. We prefer growth over value. Again, it's just really the source of where we're seeing the strongest earnings, and we like following those fundamental drivers and really being able to stay invested through the rest of this year. So again, a positive outlook, but strong preference for large over small, and a preference for growth over value as well.
And in terms of investing, growth over value, large cap over small cap, how are you seeing modern portfolios change right now? Are we seeing any shifts or any trend changes at all?
Yeah.
Yeah, absolutely. So,
Yeah.
If you look at kind of the traditional 60-40 portfolio over the last 5 years compared to the 5 years before that, it's gotten significantly riskier. By some metrics, about 70% riskier. And that's driven by two things. One is just that bonds have been much more volatile. And the second is that stocks and bonds have been much more correlated.
They're at 90 cents.
So really, as we think about building portfolios and sort of this post-pandemic era where both of those things are true, we're looking at alternative asset classes, alternative strategies as ways to build in more deliberate diversification. And what do I mean by that?
What do you mean by that, hon?
We've certainly seen flows reflect demand for things like digital assets, IBIT was the fastest growing ETF of all time. That's our Bitcoin ETF. But also more traditional ways to get diversified in things like gold. So IAU has certainly participated in that as well. But I think that it's definitely time to move beyond just stocks and bonds. You can either improve the risk profile of your portfolio or the returns, or optimally kind of both.
And so you mentioned digital assets. We spent a lot of time talking about Bitcoin and Ethereum and all of these assets. It used to be recommended to between 1% and 2% of a portfolio should have some sort of digital asset base. But even just in our last show with Nicole, a guest said that really should shift to 3 to 5%. What is your thought there on how much should be digital asset or crypto based in a modern portfolio?
Yeah, it's certainly going to depend on an individual investor's risk tolerance. There's no way around it. Cryptocurrencies should be considered kind of a risky asset just in terms of the volatility that they provide. But because they have different drivers of risk and return, so they're going to move,
We're at 110 now.
A different beat than you're going to see the stocks and bonds in your portfolio. So it's really some of those diversifying properties that we like right now. We've
115.
A couple percent, around that 2% mark can really go a long way. But at the end of the day, it's going to be driven
120.
by the investor risk tolerance and just the goals that they're trying to achieve.
And what about
take profit anytime you want?
We've seen this big move into international stocks. Should they also be a part of a modern portfolio, and how much?
Yeah, absolutely. It's really interesting to note. We look at investor portfolio data. So at BlackRock, we have access to many portfolios that we are running through our systems. And what we have found is that investors are just perpetually, overweight U.S. equity markets, underweight international ones. That's been true for 15 years. What I think is different now is that we think that the dollar can continue to weaken. So after kind of a 16-year run of the dollar being a headwind against international equities, we think that now it can actually switch to be a tailwind. So similar to the idea around Bitcoin, we do think that international equities are a better way for investors to diversify around some of the concentration and some of the valuation risks that you might get in U.S. equities. So, for example, we like staying up in quality, up in large cap in the U.S. Instead of, if you're worried about that concentration, instead of moving to small caps, we like moving abroad. So look at international equities. Something like IXUS can just get you exposure to the broad international benchmarks without needing to be necessarily specific in terms of where you allocate.
And knowing that international equities have led the way in terms of gains over, U.S. stocks this year, and knowing most people are overweight U.S. stocks, what do you think the reason behind that is? Is that home country bias? Is that lack of education about international equities?
No, I think that there is a lot of home country bias. We see that in every market that we work in, which is pretty much all of them. I think the dollar was the big change this year that investors didn't see coming. So if you're just purely comparing kind of corporate profitability margins between international markets and the U.S., we still think the U.S. is going to continue to win that. That's where we're seeing the most growth come from. It's the dollar story that has changed that can, again, provide a bit of a tailwind. So between the dollar as a tailwind, the diversification benefits that you get from getting from international, we still think there's an opportunity for most U.S. investors to add there.
Oh, you do?
Appreciate you talking investing themes with us and highlighting some of the things you're focused on over at BlackRock. That's Christy Akulian from BlackRock. And coming up, we'll be joined by the president and CEO of Agilent Technologies, the lab tech company that is up 30% from its April lows. We'll learn more about this one next on Market on Close.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad. I have a question for you.
Oh, God.
When did Granddad first start investing?
Granddad had an account with Schwab.
Granddad was a pervert.
He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The $2,000.
And that's Jennifer? How dare you? Let your daughter sleep with Grandpa. You're disgusting. I get sick every time I hear this commercial. I remember when I first started listening to him, my dad used to sell windows. And I got so tired of that commercial. Other people would charge an outrageous price, but Dad would do it for $100. We're flagging out here. Sound them windows. Yes, NASDAQ rises on hopes for faster rate cuts. Really? Here's Marley again.
Can you just tell us more about Agilent and what it is you do?
You're no Caroline.
And analytical instruments, software services, and consumables for life sciences, diagnostics, and applied chemical markets. And you see our technologies help scientists unlock insights faster with precision and confidence. And of course,
Agilent.
We're known for innovation.
Is that one
and getting
that had the big run?
Key lab workflows up and running.
OCTO.
And breakthroughs in cancer research, drug development, and other key areas. So we have a very broad range of application areas.
And you recently reported your third quarter earnings received a positive reaction from the street. Can you walk us through some of the highlights?
Yeah, so we had a strong third quarter. So we grew 6.1% core growth.
No,
that
ain't him.
1.74 billion for the quarter with an EPS of $1.37. And both revenue and EPS really exceeded expectations, marking the fifth consecutive quarter of growth acceleration, which is really great to see. And really what drove that was, I would say, excellence in our execution by the team. Innovations, our new products are really resonating with customers. The services team really having the best in the business with a greater than 90% satisfaction scores and driving share gains while steady market improvements are happening. And just some of the highlights are pharma, our largest market, grew 9% overall. We grew 10% in chemical and advanced materials sub-markets, and we grew 7% in our food markets.
And I know your PFAS division is one of your fastest growing, which tests for forever chemicals, you know, and even just that term I think is scary for viewers to listen to. How important is this type of testing? And also, can you just explain what PFAS is?
Yeah, PFAS are forever chemicals, so they're chemicals that stay in water supply or food supply over many, many years, or materials. And our instruments are really have the sensitivity and the workflows to test at a very, very high specificity. To give you a sense of that, it's like looking for a drop of water in an Olympic-sized swimming pool. So that's what our systems really look at. And you see that the PFAS market is growing extremely well. Broad-based double-digit growth, and I think what you're seeing is really pace of regulation that's happening.
Double bottom here,
right, of what is happening in the food and particularly in areas and chemical and advanced materials. Semiconductors test for PFAS in terms of raw materials that come in, and we expect this is a long-term driver for the company, but a very, very important area, of course, for the globe.
And speaking of the globe, you have a long-standing relationship in China and a very heavy presence there. How have tariffs impacted the business?
Yeah, well, we are for many decades we've been in China. You know, in key markets, we had a very solid quarter in China. Our team's really staying close to our customers in China. And tariffs, of course, we've invested over a number of years in manufacturing in China for China. So we've been able to mitigate most of that, and of course we've been able to mitigate most of it outside from China to the rest of the world with looking at supply chains and moving it around. And that was driven by our Ignite transformation, where we looked at being more effective around our supply chain and our manufacturing footprint. So we're in a very good position around tariffs. And
And I saw a lot of mention, on your earnings call and in your earnings statements about this Ignite transformation. Can you tell us a bit about it?
Yeah, no, it's a company-wide initiative that's going to last over 3 years. We're in our first year. It's helping to accelerate our pace, and we're going to continue to drive gains around it. Ignite is embedded in how we operate internally for long-term value creation.
MGIH
like
241.
Decisions, and how do we get asymmetric investment into the right areas to make sure we increase our pace of innovation. And it's going to continue to be a long-term driver, both in incremental benefits, both on growth and margin. And we expect, for example, this year, Ignite was critical in mitigating tariffs, which we're going to have fully mitigated during 26 and beyond, and should provide a tailwind into 26.
And with this tariff discussion continuing, we have seen certain companies get some offset because they've become part of the onshoring efforts here in the U.S. Is Agilent involved in any of the onshoring efforts here?
SPX again.
Yeah, so from our, of course,
6490s.
A number of our sites here that we can have dual manufacturing. Some of our product lines from Europe are now being manufactured in the U.S. We have a big manufacturing footprint in the U.S. where we've had capacity, so we're expanding that to really mitigate tariffs as we go forward. And of course, our customers, particularly our pharma customers, we've heard a lot about reshoring. We're likely to see a benefit from that over the years, as our instruments are critical in manufacturing QA/QC for a lot of laboratories that will be set up on these facilities.
Double bottom.
And Greg, I've seen you speak extensively and be quoted extensively about how important it is for Agilent to be customer first, and that being your strategy. Why is that so important?
Yeah, I mean, we've always been a really customer-focused organization. We've had an extremely good connection with our customers, both commercial, but on our service side. And in this environment, it's really important that we create really great customer satisfactions. And it's not only the instrument. For example, that PFAS LCMS instrument that's detecting really low levels of PFAS. It's one thing having that instrument, but getting it up and running and productive around the science is really important. And that's what we mean by customer first. We've invested in a lot of application engineers, a lot of technical capabilities in the field, and we'll continue to do that as the markets improve.
Corey, we appreciate you taking the time to speak with us on this Monday afternoon.
It's a waste of time, girl.
The President and Chief Executive Officer at Agilent Technologies. And coming up, we'll trade and tariffs. And what happens if
tariffs? I don't want to hear about it. Get her out of here. How dare you? Come on now, we need to bounce. They went to 145. I want Caroline back. She made Power Hour so much funner. This girl's depressing. Let's go. They're at 145. $160. Old MacDonald had a farm. Me-I-me-I-O. We're at 160, yay. 165. 175. Let's go. Let's go to $3 or $4. Let's get back to the orb. Can you take this to $5, please? 185. 195. Dad, how come Grandpa doesn't sleep with me anymore? There we go. Get on. Get it on. We got a resistance right here. Oh my. Oh yeah. Ooh. $2.50. There's a resistance, so if you're in this trade, you know what to do. Randy. We're at the 63. I don't want to hear about your tariffs and clothes. God, get this girl off of here. You've had all day to talk about that, Marley. KR is back down to 844, close to it. OCTO could hit 40 again. MGIH is about to hit my 242 again. There it is, 248, 247. We're at the 200. $2.10. Let's go. Either get out now or if we break the 200, I mean the 63, we'll hit the 200 and that'll be about $3 or $4. $2.45, and the crowd's going wild at the sports arena. We just broke the 63. Boom! Come on. Can I get 100%er? Doom, do, do, do. Do, 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 do. Do, 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 do. Check it down, 245. Come on. Jimmy called the orb. Can we hit it? 649043. That right there. You can do it. I don't ask for much. That's called a triple bottom. 1 bis, 2 bis, 3B. And there's the orb. $2.55. Boom! We hit it. Profit $3.30. Oh, yes. I love myself. Out at 320. Oh, do, 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 do. Me, I, oh. Do 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 do. Do 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 do. I got an A+ from Johnny Ringo. $3.20. Me-I-oh. That's an A+. That deserves a triple A+. If you know what I mean, because that was perfect. Right to the penny. 64.90.32. That was exhausting. Marley.
I feel every other day we're having another discussion about a new all-time high or the possibility of touching one.
It sure seems like that, and as we discussed, numerous times here, gold has been a buy the dip. It's been a buy the dip for 6, 9, 12 months. Any sort of pullback, it's been absolutely the case. This time, Marley, I actually, and this is full disclosure here, took a short position today. I think this is the first time that I have seen where maybe this has gotten a little bit of ahead of itself. And I say that because if you look at the spot gold price, which did hit an all-time high, and if you look out to the December futures, the December futures are actually pretty much unchanged. So I think that we have got
there's my $4
far ahead. Definitely could be wrong, but this is about the first time in a year or so that I've said gold could be a temporary short. I am still very, very bullish longer term, but I think we just got too far ahead of itself.
So I want to get your thoughts on something I read out of Zaner Metals earlier, and knowing now that you're short today, but this is just a near-term projection, so
yes,
could still be in play. Zaner said that they thought gold could extend its momentum towards 3,700 to 3,730 in the near term, and I thought of you because they said any brief pullbacks would likely be seen as a buying opportunity. So I'd love to get your thoughts on their projection there.
I don't disagree with them. I mean, I don't know if they're talking about, excuse me, weeks, a month, but this, to me, this rally looked like it was almost, expecting too much out of the Fed. So that's why I took this opportunity here, and I did it using GLD put options. So I didn't short gold futures. I used GLD put options. So I have a very, very small amount of risk, very limited risk if GLD doesn't go down, to what I paid here. But I do think there's an opportunity to see GLD probably pull back to about 325 or so. 320
it's not
is
gold.
Actually my entry point.
It's an ETF,
so again,
you idiot.
On that buy the dip notion, that's the area that I'm looking for, that if we did pull back there, I would take a long position, no doubt.
All right, so now let's move into Bitcoin. Bitcoin has been pretty tightly range bound of
Very
late.
much.
And reflecting what I'm guessing is a more subdued market ahead of the interest rate decision, but very interesting here,
Oh, God. I don't want to hear about this shit. You ruined my power hour, Marley. Talk about stocks and earnings. Hood, man, look at Hood go. Jeez. What's going on with that? Getting everything back within 2 trading periods that it lost in almost 3 weeks. That's what you ought to be talking about, Marley. Avalon to hit milestone with S&P debut. A lot of news here on Hood. There's your knife. Been nice to take that to 5. If we respect the old resistance. But I'm done trading. We got 9 minutes left. $320, $360. Yep, /ES at the VWAP. Woo! 640. We broke the VWAP. Oh yeah. Beautiful setup. Look at that, man. I'm telling you. If you can count to 3, you can trade with me. That's all you got to learn. If you can count to 3, you can trade with Bobo. Ain't that right, Michelle? Say yes. Say yes. She's not going to say yes. We have less than 2 minutes left. And I'll be cooking me a cheese chip after I get out of here. Wonder what a cheese chip would taste like on top of my slider, or in my slider. I think I'll try it. Dingling. Okay, Jimmy is getting ready to go. I've had a pretty good day today. I was 9 out of 10. Seemed like everything was just kind of following along real well until I got in that one. It's always that time of day where I should just avoid. But I'm going to watch my YouTube videos, and I took a small nap today, and that really helped me out. Gotta get up and do more walking. I walk plenty at night, but I need to do more in between, like have a dedicated half-hour walk. Last winter I did the treadmill. I'll probably do it again this winter. But not a bad day and all. And we'll catch y'all later.